1.
And we're back. Friday. What is it? May 2nd. It's May.
Yeah. You obviously had a busy morning doing superhero things.
What
in your
happened?
all black outfit there. I mean, you
wearing-
thwarted criminals around the city
I'm wearing
and were
khaki
able to get
pants.
in and do the show at 6:30.
I knew I was going to get this.
You are an amazing individual.
Friday's casual. I'm wearing a hoodie, a black hoodie, and my black Tasty FX hat. Do you want me to take the hat off? You don't?
No, the hat looks spectacular. I love the hat.
Okay.
The hat was a crowd pleaser.
I love
We have to figure out what the next iteration of
what?
stuff we're ordering.
What do we order? Stuff from where?
Swag stuff.
I'm not allowed. Oh, yes. On the company. Okay, great. Perfect. I'm not allowed to
And
order
again,
anything
not
else.
Amy Leon Dore stuff
Yes,
for you on
trust
the company.
me. My addiction is in check. I'm not allowed to buy anything, and I actually have. This is one of the only things I bought. Do you have? You turned me on to Arc'teryx. You're enabling my shopping addiction in many ways.
Oh, of course.
Do you have this Arc'teryx hoodie?
I've got a similar one to it. Yeah.
You have to find this exact. They only do this one in black, and I've been trying to find it in other colors.
Yeah.
It's unbelievable. It's like my favorite thing in the world.
Because I don't know what it is.
I don't understand it.
It's
don't
part of it
get
is they're expensive, but they use really nice material, so it's just comfortable.
I don't understand it, but like we were in Japan and we were about to go on the hiking thing, and I was like, oh man, it's kind of colder than I thought, and I don't want to be, the last thing I want to do is like be out for like 6 hours and be cold in the mountains here. So I go grab this hoodie, and yeah, it's a little expensive, although tax-free in Japan, and the dollar yen.
I love how you just
Dollar yen at that point is 150. So
I've got an Arc'teryx. They call it an AR coat. It's that lightweight
very nice.
climbing coat. That's rainproof. I've had it for 15 years, and one zipper broke. Mailed it in. They fixed it for free, and it looks 90% as good as the day I bought it.
It's unbelievable. At this point,
I have had 11 coats from Arc'teryx, so
Sure.
different kinds. I've got 3 left. My
what,
2
you're saying
boys have
that's a
stolen the other 8.
Oh, they've been stolen. They haven't broken.
Well, technically, they don't claim them as stolen. Once they wear them home because they don't have the right coat, and they spend a
Squatters'
day in
rights.
their apartment,
Yeah.
they are theirs.
Yeah.
So
They don't break. And growing up, I'm sure when you had, your kids were younger, North Face was the thing. Everybody had
right.
to have like a North Face jacket, which are also nice. But after like 2 or 3 winters, it gets kind of wilted and like.
and North Face isn't what North Face used to be.
Yeah,
North Face has been bought 3-4 times.
I agree with you.
Arc'teryx actually was sold. I think it's a Canadian company, I want to say.
I think you're wrong. I think it's European or something. But they did. I think they went public this year. But I think it's a group that has your other favorite brand, Solomon, as well, with the shoes.
Yes, I'm anti-lace.
I can't go back to tying shoes.
I will not wear lace shoes. That's why
it's
the
the
OnCloud.
worst.
I mean, the OnClouds are gold.
Yeah, but anyways, yeah. This is my comfortable casual
You look
Friday
fantastic.
sweater.
I mean, you foiled crime early. You're in here doing the show. This is exciting. What do you got on for the weekend?
The weekend, I've got, you and I were just talking, the weather is supposed to be awful here, and I have another weekend of nothing between Japan and
Oh my gosh,
summer.
what is this?
Nothing.
You're going
Dude,
back to restart the Mission Impossible movies?
Maybe.
I tried again this
Maybe.
morning. I tried again this morning to get through that stupid.
You know what I did? You know what I did
phase
last
2
night?
one.
You know what I did last
I
night?
couldn't do it. It's just
Girlfriend out of town.
okay. Let's stop right there.
Defrost a little T-bone steak.
Oh, yeah?
That I got from Micah, her stepdad's
Oh, look
cows
at
down
you.
in Oklahoma. Defrost a little T-bone steak, some potatoes, some
Now,
little
when you
Dutch
defrosted it,
potatoes.
just naturally defrosted, or did you use a
I
microwave?
threw it in the fridge yesterday, and
Right.
then
Okay, right.
then when I got home, I put it out,
There's no quick
out
way
on the
to defrost a
counter. I
steak
put some
without
salt
burning it,
on
right.
it, let it sit there for like an hour or so. Cooked the steak up,
Look at you.
sitting there, just me, the dog, steak, Dune 2. Put Dune 2 on the screen.
There you go. You've gone full George Costanza.
It was great.
It's a spring of Frank. You're just
And now
lying
she
around
comes
in your
back.
boxers, eating a steak.
Now she's
You're
back
probably-
today.
You're lucky she does this. She's not an early riser.
I'm sleeping in the middle of the bed. It's amazing. I have to curl up on like the side of the bed when she's around. It sucks.
Well, at some point, you two, as your relationship evolves, you're going to have to get out of that twin bed you're sleeping in. Maybe go to bunk beds as a transition.
There was one place that we stayed, the nicest place that we stayed in Japan. Big like king size bed, but you go into the bed and it's actually I don't know if it'd be 2 full beds. It's bigger than 2 twin beds next to each other with their own set of sheets and everything.
So you got a firewall, which is ideal.
It was amazing.
Yeah, I know.
Really
it's
nice.
a firewall.
Yeah. Oh man, because I don't know. I don't want to get into it. This is a PG show, but she's always trying to come on my side.
Make it all hot.
It's
not good.
It's not good.
It's not good.
She is like a little heater. You know, in the old days, they used to put like that hot pan or whatever with coals in the base of the bed to heat the bed up.
Or the hot water bottle thing.
I don't know. Maybe I'm meant to be alone. What are you doing this weekend?
What am I doing? Not much. Same thing, kind of. I had all kinds of plans I wanted to do, but everything I wanted to do is kind of weather dependent. And it just is. I just looked this morning. It's 57, rain in the morning, rain in the afternoon. Sunday, 57, rain in the morning, rain in the afternoon. So I'll come up with something fun to do.
Maybe I'll go to because gardening in the city, in my box in the sky, like you like to say, is indoors. And so maybe I'll go get some dirt. I repotted some plants, but I need to do some more dirt
looking pretty
and everything.
So.
Everything's looking real green in Chicago. I was walking in today, and everything is a bloomin'. You don't have to go to Tokyo for the cherry blossoms. You get plenty of bloomin' here. It's pretty good. Anyways, let's get into some markets because we have a rapidly approaching non-farm payrolls. I want to focus on that to start, and then I want to get into a little bit of the Bank of Japan thing at the end. So maybe we'll hold yen until after that, although the price action obviously interesting to get above 145 and now backing off 100 points. But the moral of the story here, Pete, is U.S. dollar giveth on a Thursday and then taketh away here Friday morning ahead of non-farm payrolls. What are you looking at? I got a couple of interesting insights, I think, at least. What's the big headline for you?
You know, I think, again, euro and sterling were kind of sat on yesterday. They just kind of ground them lower. And in a matter of an hour this morning, they put everything back in, back up to the highs. I actually flipped a few short right here and just scalped them really small.
Okay.
But I think this is all a little bit of squaring. I mean, we've pulled back well, briefly below 113. I think this is, as much as I think non-farm payrolls is a useless number, I think the market is going to hang and have a reflexive move off of it. So I think we're seeing some settling around the event. So
kind of mid-range on the last 2 weeks going into the event.
Everybody taking a little off to not get too stuck if this number gets. I honestly think if you get a print of 110 or 200, if you get 200, the dollar will get bid and may stick there. Mm-hmm. If you get 110, it'll be sold and there'll be buyers out there.
So a couple of things. Obviously, this market is more prone to news right now than it is to economic events. Anything having to do with trade is really taking over the market versus, I mean, we had PCE this week, we had GDP this week, and all of those numbers kind of got tossed aside. There was some turbulence. You know what was a sneaky number, though, was that ADP employment was a huge miss. Right. And that really was what moved the market from what I saw on an economic event side of things more than anything this week. To your point, though, it did it for all of like 30 to 60 minutes, and then the overall trend of dollar buying kind of continued. Yeah. So I couldn't agree with you more. They're expecting 130. Previous was 228. We've had a few misses here this year. If you're looking back to Jan and Feb, some low numbers. And also if you're going back to October, some low numbers for non-farm payrolls. But we've also had this pendulum swing all the way up into the mid-200s.
And that's why this doesn't matter. Yeah. What matters is the tape action you get. That first 30, 90 seconds, and it will get to a point and either fade or will continue. Again, if it's 110, the economy's doing worse, so I should look at short deltas and equities and probably buying bonds here.
I don't
The fact
think you
is,
can do it.
equities are up with Amazon and Apple being down for earnings. Equities are up. Bonds are back at the lower end, lower quartile of their
Sure.
range, just not quite below 112. So there's a little bit of dislocation there. I think this is again, there's nothing to be taken away from this number short of if you want to look at getting in, if you have an idea of trading any of these pairs, I mean, Kiwi's been incredibly Teflon.
Yeah.
In terms of they've tried it down. Now, they haven't been able to really get through 60 cents, but they haven't been able to get it under 59 either. So they've tried a couple of times really hard. It'll be interesting to see if this actually gives us the juice to go one way or another on this.
I couldn't agree with you more that this should set up to be a nice trade for maybe an hour or two. You and I love to say, even especially maybe on non-farm Fridays, that by the time 11 o'clock noon rolls around Central Time and Europe has exited, if you're thinking that you're going to flip some stuff back and forth between then and 4 p.m. Central Time, it's going to be a tough trade. But I think this will be a really interesting trade around non-farm.
The caveat to that is if we get to a new structural high, in other words, we print and stay at 60.20,
Sure.
and then that becomes an interesting afternoon. But if we get up there, we fade back and we're at 59.70 or 59.60, don't expect much out of the rest of the day.
Yeah.
And you play a little defense. That
One thing that I also think you nailed is if you're trying to make a big story about this employment number in terms of, now I need to do this with my equities and this with my bond portfolio and this with my cryptos, and I got to, make some big story about the U.S. economy. Look back to Wednesday when GDP printed negative. They tried to, the media, the sensational media, financial media came out and did the whole this is recession and we're doing the whole recession thing and it's a negative print and everything else. A lot of short-term turbulence that we've seen the last couple of months, whether what you think about the tariffs one way or another, has been shrugged off one way or another.
Right.
We've seen huge bids sold into, we've seen huge sell-offs bought. And so the last thing I would want to do is here on Friday afternoon overthink this non-farm and make a bunch of changes for the next foreseeable future. We've got an FOMC next week. A lot of stuff still to come out. How these tariffs actually land, I think, still to come out. So I think a great point by you. I think great short-term trade off of this number. Not necessarily something. If you're looking for it printed double digits and now I've got to turn everything around. The U.S. economy is this, that, or the other. We already had a negative GDP print this week.
Right.
And the stock market is able to shrug off Amazon and Apple earnings and all these different things. I don't know where it's going. I'm not saying, everything's going up. I just wouldn't necessarily make a mountain out of a molehill of one data point.
This number. And I thought about doing a show on this because they will revise last month's number of non-farm payrolls.
Sure.
And they will revise it for 4 months. And when you look at the 4 month ago number, how dramatically it's changed from revisions and the way the market reacted to it, it's like this truly is a useless exercise. For us as traders, it'll give you movement. That's all we want.
Yeah. A couple other things that I thought were interesting. You brought up sterling earlier. Isn't it funny how the worm turns on these markets? It's one thing you got to really love about Forex markets in here in particular. We love to take a look at a long-term chart and say oh man, look at the mean reversion quality. Similar to if you bring up a VIX chart for the last 30 years and you're like, wow, man, VIX goes up to 60 or 70 or 80 and it goes down to single digits. But man, if it doesn't come back to 15 to 20. Right. Similar in here, of course, any of these markets, including VIX, can go in whatever direction any given day, and they can stay there for as long as they want. But you bring up a long-term chart and you say, wow, this euro-dollar market's been up to $1.50. It's been down to under parity for certain stretches. But man, does it love to come back to 120, 125, 115, whatever you want to say. And I look at this pound market, And I know this is more short term, but I'll be damned if this wasn't the outperformer for the last couple of weeks here after the big move to start April. And now it's the underperformer.
Yep.
Now it's the one that
doesn't hold on to the rallies as well, and is the first one to roll over when the dollar stops getting sold.
Exactly right. It's been very weak this week on the dollar bids, and now on the dollar sell-off. Out of these major U.S. dollar pairs here, it's the smallest net change out of everything, and so it's just always interesting.
And when we
to
take
me.
a look at euro sterling,
Sure.
we talked about this yesterday. That actually, that has had a tremendous run to the upside. But that actually, in terms of pullbacks,
huge pullback.
Has euro given you a pullback? Sure, a little bit. We're still in the upper quartile of the 6-month range. This gave you a really large pullback. So when you're looking for, what is really giving me the biggest pullback? It wasn't any of the dollar pairs. It was this relationship. So sometimes these first level non-dollar crosses are really interesting pieces to trade if you're looking for, what has relinquished a lot of the energy and maybe will reestablish itself. So this was, and this basically just translates what you talked about. All of a sudden, the pound is underperforming the euro on up moves and accelerating it on down moves. That's what this chart reflects.
Very, very cool to see these dynamics shift so quickly. But I want to flip really quickly to this dollar yen. I want to talk about the Bank of Japan news that came out here, because we've seen this, I don't know how many times in the last, call it year, maybe like 12 to 16 months. Bank of Japan is hiking. Bank of Japan is hiking. Bank of Japan is hiking. And the Fed, they're going down. They're going down. And the dollar yen trade is it's going to unwind. And man, did we not get down to 140 going into this event. And we've hit 140 in recent weeks. Obviously, big dollar sell-off if I pull back to the daily chart here. Get down to 140 amid that dollar sell-off. And going into the event, we're trading 142, and it's like, okay, we're splitting the difference. We could be going down to some new lows here if Bank of Japan comes out and confirms this trend that everybody is waiting for them to confirm. Going back to last summer into fall, when we got down to 140, everybody looking for this new leg lower in dollar yen. And they say that the window for hikes is actually closing a little bit. And again, we have this move back to 145. Obviously, we're off of those highs. We got all the way up to, I'll go back to the 15-minute chart again, just to show you the action. Got all the way up above 145.50 and even close to 146 the day following this Bank of Japan news. Obviously, here is the news coming out on Wednesday night, continuation of that dollar bid. And then, like I say, getting all the way up to 146 again. I mean, what say you on this? Because every time we've gotten down to even 145 or 140 here in April 2025, I've been in this mode of like, Bank of Japan's has got to show us at some point, or this trade has to really unwind and get down to 135 or get down to 130 to really prove you wrong, and it hasn't.
Right, and you know what? If you were leaning short 142.5 on the you had said, I think they're going to be a little bit more aggressive. The market had built, you and some other people had built in, that's why we were down at that level, leaning on the probability.
Sure.
When it isn't delivered, your trade idea now has fundamentally changed. You need to manage that, take that off, and then reevaluate.
For sure.
It's not like you really, if that was your thought at 142.5, 143, you shouldn't be in that trade. And granted, if you're not, it's better because you're not losing money. But the dynamic has changed, and you need to be in a very non-emotional way. Okay, this didn't unfold the way I wanted. I'm going to take whatever loss I've got, and I'm going to move on and then reevaluate at that point, because that has changed. I mean, I thought one of the most interesting statements that came out of that was they said they would never consider selling U.S. treasuries to punish the U.S. in a trade war. I'm thinking, Who says that if that's not on the top of their mind? That is the most passive-aggressive thing I could ever think in my mind.
Sure.
Really? You're going to highlight the fact that you're not going to do that?
Yeah.
Okay. So that's a subtle jab at again, a huge vulnerability the U.S. has with all this debt floating out there. This gets to be a little tougher trade right through here. So we've talked about this. U.S. is flat to lower trajectory of rates. Bank of Japan was flat to higher trajectory. One of those dynamics has changed now. It's flat against flat down.
Yeah.
So some of that zeal of trading, and this is one where, unfortunately, you really got to wait for. You can try to get ahead of. I think they're going through 140, so I'm going to sell some 145, and I'm really going to be involved when they blow through that. That's a tough trade.
Yeah.
I think you're really going to have to wait for the confirmation, let the market do the damage a little bit. And yes, you're not going to get a jump start into that move, but right now you're looking at a little bit more sloppy range to trade.
Agreed. It's just interesting to me that, on one side of things, of course, it is very hard to stand in front of this freight train. And this is out of the major US dollar pairs, this is the biggest mover on the year from start of the year to this low down at 140. I think we were down more than 10% in this market on that move. And to stand in front of that with all of the news going, Bank of Japan is hiking and, Trump's trying to get the Fed down. The Fed is already looking at 2, 3, 4 cuts this year. The carry trade's unwinding. All that news is got to be hard to stand in front of that at 140. But it is just funny to me that it's like, man, how many times do we have to do this? We did the same thing, remember, to close out 2023. And the carry trade throughout this whole span of time has been paying you at least 3 to 4 full points of interest rate differential on an annual basis. And it's just not been able to break through this 140. Of course, to your point, if we get back down there here in May or sometime like that, and it breaks down to like 139, 138, then maybe you have your story here. But man, look at this price action here off of this the last couple of times, the last couple of years. It has been almost to a T, printing 140 or close to it, or breaking 144 a day, bouncing back to 145, maybe some sloppy range in there. But if the next move is 147 or 148,
absolutely,
it might be more upside.
That's why I love non-farm payrolls. Not because they mean anything, but if you get 100, if you're stuck short right now and you anticipated the break, you were bullish Japanese rates, you're sitting on a less than attractive position. If you get some news that gets you a print of 143.5, that's a gift to cover your short. It's not confirmation that your idea is right. It's a gift to cover your shorts.
Sure.
Or you want to get long. If you get a print up to 145.5 from here, you get the 100 pips, one standard deviation daily range on this, and you think the market will roll over, take that. Right here, right now, there's not a good choice. So this is where that number serves a great purpose for you to get a little bit of elasticity to either manage positions or reestablish a bias.
And last thing here is those 100-point moves are very normalized in this market at this point. And so it's thankfully, if you're stuck one way or the other, or you're looking to get in a position one way or the other, and you're looking for 100 points or 125 points in this market, you could very well get it in a day. I mean, this is a market that yesterday was up more than 100 points, and that now today, already before non-farm, down close to 100 points. So interesting stuff from Bank of Japan. We'll see where it goes.
Always interesting stuff in FX, which is great to see. You can always find something that's moving, that's interesting, that really fits whether you're a contrarian, momentum trader, lots out there.
Very cool. So with that, we'll hand it off to our good friends Tom, Tony, and Vanetta. Stay tuned for that. We'll see you next week.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello, we made it to Friday.
Whoop, whoop. As Sidelove would say, raise the roof, raise the roof. Come on, girl, do it. There you go. There's my guy. Beautiful, beautiful.
How are you, Sussy?
Chew your nuts. Breakfast of champions. Nuts in your mouth in the morning. Chew them.
No nuts. Got them. Already ate them. Had my snack.
Beautiful.
I think I'm gonna grow. I think in another life I'm gonna come back as a pistachio nut. What is a pistachio? Is it a tree? Is it a bush? What is it? I don't even know what it is.
I was not expecting this morning. I don't know.
I would say I'm going to go with a bush, but I'm going to
go with the tree. I'm going to go with the tree then.
Okay.
I don't know what it is.
I don't know. I don't know either.
All right.
We're a bunch of people.
Pistachios grow on trees. Vanetta, ding, ding, ding. Circle gets the square and the win for Vanetta.
There you go.
There you go. They're small to medium size, though, trees. Could be mistaken. It says Tony could mistake them for a bush.
That's what I want now. By the way, I know what I want for Christmas.
You do up the schedule. What you want for Father's Day?
Father's Day. I want a pistachio nut tree. Where do you get those?
Hey, that's a good looking tree. It looks like an apple tree. I don't know.
Yeah. I want one.
Yeah, no. That won't bring the rodents to the yard.
That's what I want. I need a pistachio nut tree. I want my own.
I don't know if we live in
I think you could just say pistachio
climate.
tree. You don't have to say pistachio nut tree.
I don't know if we live in the right climate, though, Tom. Like, it gets real cold here in the winter. I don't know if you knew that. Because you only stay indoors like a gerbil in one of those balls. It's out of stock.
It is possible to grow them in zones 7 through 11, but they will thrive where it is hot and dry.
That's what I figured.
Yeah.
You know what, Tom? Maybe if you ask real nice, Scott Sheridan will plant one for you at the Sheridan West location in Arizona.
Yeah, you can have one. You can have your own pistachio tree with like your name underneath it, like preemptive for the future. When we plant multiple pistachio trees in your honor.
All right, I'll take it. Anyway, that's
all right.
So.
All right. Beautiful.
For the guy that has everything, I need a pistachio nut tree.
Pistachio tree. That's all you got to do. You don't have to put the nuts in there. But
I said pistachio nut tree on Amazon.
To be fair, Bat, he also does call it tuna fish, so it's fine.
That's true. That's right. Like it would be a tuna bird. I'm gonna bird sandwich.
Why? What should it be called?
Tuna.
Tuna.
But it's tuna fish.
You're right.
Then why do we call it chicken of the sea?
Yeah, it's a famous pistachio.
Here, there's no nut. There's no nut there.
It's a pistachio tree.
Pistachio tree. No nut.
How much is that tree, John?
It's out of stock. I don't know.
Oh.
How much is that tree in the window?
The question is, if it was in stock, would they deliver it same day?
Probably not.
Let me give them a call.
Thank you.
I don't know.
Let me look into that, Saz. That's an extra. Yeah.
Because I haven't planted any of my. I haven't planted my yard yet.
What?
What are you talking about?
Every
you don't
year,
plant anything, sweetie.
Every year, I plant everything. Every year,
What have you ever planted?
Stuff that grows back, like the grass.
This is new. This is news to me.
No, I don't like the ones that grow back every year. I like the ones that grow every year.
Oh, you are a bougie mother.
Well, they're different.
So I'm sorry. What are you planting?
You a fancy hoe.
Like mums or like peanut? Like
no, he likes. You don't like perennial grasses. You like annual grasses.
I like annuals. Yeah. I'm sorry. I didn't know. I didn't know I had to approve.
Show ever.
I didn't know I had to approve what I like through you guys, but that's what I like. Annuals.
No, but I've worked here for 15 years. I've never heard you plant anything, let alone seasonally.
Oh, he doesn't plant it. Trust me.
Right. Yeah. Okay. That's why I just call.
I'm in management. Okay. I'm overseeing the planting.
Oh, you're in management. Okay.
Yes.
Got it.
Got it.
Okay.
So what did you get up to managing last night? How about that? Let's pivot away from this. Let's try to keep the very few viewers we still have. God bless them.
I don't know. I was running around a little bit. Nothing much. Nothing to tell stories about. I don't have a good story.
I've seen you. Running is figure of speech, right? You're not really actually running anywhere, right?
I was moving around.
Well, it's going to be cold and blustery this weekend, so probably no golf for you.
No golf this weekend. We already called it off. It looks like it's like 50 and rainy. It's going to be nasty all weekend.
Did you watch any hockey?
I watched a little hockey last night. I did watch a little.
Why are we saying hockey with a British accent?
That's our Canadian accent.
Oh no, that's bad.
I watched.
Haven't the Canadians been through enough?
I watched a little Canadian hockey last night. That's exactly what I did. Ottawa against Toronto. Yeah.
Maple Leafs clinch.
Yeah. I thought Toronto had a chance,
good.
but
yeah.
It was actually a pretty good game. It was fun.
A lot of scoring left.
Who do you think is going to win it all now?
I think the best team in hockey is Florida Panthers.
They do look tough. I think they went 4-1 against the Lightning, so they do look tough.
They're good.
I mean, the Capitals went 4-1, and you got Ovechkin. I mean, that's a storybook ending there. If they win it all, that'd be pretty cool.
Who do you think is going to win it all?
I mean, I think my hometown Florida Panthers are the chalk of the group. I'd like to see the Capitals win for the reasons I just mentioned.
Every team that's
Can
left.
we send you to Florida?
Please.
That's not nice.
You just said it was your hometown. I just want to send you home. I'm being empathetic. I just want to send you home back to your people.
Hey, by the way, those are your people, but where are the Florida Panthers? Like where is their home stadium?
I think like by Miami, I think, right? I'll find out for you.
I don't think it's Miami. I'm not sure.
I think so.
Oh, is it? All right.
I don't know. Let me. Yeah.
Miami Arena.
Florida. Yeah. Home games. Yeah. Sunrise, Florida, town just west of Fort Lauderdale. Sorry.
Got it. Okay.
And just north of Miami.
Beautiful.
Benvenuto.
I think
Miami.
I think they're actually going to play the Winter Classic there this year.
How?
I know it's a dome. So I think.
How do you play the winter? How do you play the Winter Classic in a dome indoors? Why would that be a Winter Classic?
Well, they're going to open it up. Like they're going to keep it closed and then open it for the game. I don't quote me. I didn't look.
I know they're not allowed to talk about how the environment works in Florida, but somebody should double check that.
I'm telling you. December 24th. Let's see. I'm trying to say 25 winter.
No, you're right, Bat. I did report it. You're right, and I had questions then.
Okay, there we go.
No, just about how it's going to work because it's
in Miami. The game is scheduled to play January 2nd with the Florida Panthers hosting the New York Rangers at Lone Depot Park in Miami. It's a miracle.
They use that ice.
It keeps hot stuff hot and cold stuff cold. But how do it know?
They use that plastic, that polymer, like when they have ice capades on Good Morning America and they're skating inside. They use that mat is.
Well, get a whole lot of those. Put them all together. Good. I know we broke your brain, Sosnoff, but
it just makes no sense to have a Winter Classic in Miami. Sorry.
Have you guys put your bets in on your Derby horse Grande?
No, I'm waiting for Nick. I'm waiting for Tom to do it for me.
Oh yeah, I got to do that. Yeah, I guess I got it. What was the other horse I wanted? Grande and something else.
I don't know. You were so sassy yesterday. I blacked everything out.
I don't blame you.
There were two horses.
I'll send you the list.
Sandman.
Enter the Sandman.
Sandman, that's it.
Oh, thank you, John. Wow, good job, John.
Enter Sandman. Yep. So Sandman and Grande. I gotta. Oh man, is OTB still open?
You used DraftKings, you boomer.
Yeah, Nick can do it for you.
Is OTB still open?
Are they? I'm just curious. I don't know. Are they still open?
Yes, they are. Let's see. In Chicago, not where you remember.
Oh, all right.
Yeah, in the casino, you can do it. You can do it in Prospect Heights, Cicero, Oakbrook Terrace.
Yeah, where the
Halstead Street. You got it, Saz. Over under Sports Bar, Halstead Street.
Oh, I know
2700 Halstead Street. Go get it done.
They do. You can bet an over-under bar on Halstead Street. That's crazy.
That's what it said.
And then you could go a few blocks north, and you're in Boys Town, honey. You could ride a different horse.
Yeah, one with chaps on it.
That's right across the street from my grocery store. I'm going to go there this weekend. I'm going to go on Saturday.
You are not.
I'm going to go.
You're going to go to the OTB.
Well, it's a bar.
It says Chicago's casino-style sportsbook bar. I don't know if you can. I don't know if you can bet there though. I don't know.
We'll so like Tom's gonna walk in. He's like, I want a White Claw spritzer and 55 on Grande in the third. Thank you.
There you go.
Like, what do you order at a bar? You don't know.
What do I order?
No, you can't place any bets there, Sadnov. Sorry.
Oh, I just order. I order like a whiskey on the rocks, bourbon on the rocks. That's it.
Yeah.
Oh my goodness, Bat! You shouldn't have told him that it was closed. You should have just let him go.
Believe me, he's on Halsted Street all the time in that area. You can see Sam roaming in the
that area. The by the way, just because you guys are geographically challenged, that area is not what you think it is. That's a different area.
No, I know. I said that's why you got to go north. No, you got to go to like 3200 north. I know exactly where that is. Oh,
That's my stomping.
I am not the
That's my stomping ground. You don't know what you're talking about. That's my stomping ground.
Right? I am not the 1 or the 2 today. So you better behave yourself. You check yourself for you wreck yourself today. Hey, I'm gonna just keep this show on the road. Bat, what did you do last night?
I met up with a doctor friend of mine, and learned a lot of things. Smart man.
Was this therapy? Please let this be therapy.
No, not that kind of doctor. We met. He's an anesthesiologist. We met when he did my colonoscopy, and we became friends. True story.
Okay.
Hey, I mean, you can buy this tree. This tree is only $17.
Sadlov's looking at his pistachio tree.
Oh, how much is it?
It's a baby, but it's only $17.
Oh, that's good.
Yeah, I'm gonna plant my whole backyard with pistachio trees.
Again, they're gonna die.
It'll be it'll be good because you can replant them every year like you do your grasses.
Yeah, and then people are going to go, what are those? I'm going to go, those are pistachio trees. That's kind of cool.
Eventually.
It's literally 46 degrees outside in May here.
I know, but this is a good-looking pistachio tree. I'm going to get one of these. And
you're going to get me one of these?
I can get a kumquat tree, too.
Why don't you get a fig tree, too? That's one of my favorites. I could never grow one here. I've tried.
Yeah, you did try.
Yeah. Yeah.
Why don't you just go to the farmers market and support local farmers?
Yeah, I get that too.
I do. I'm a good farmers market person.
All right.
Mm-hmm.
So back to your friend who has seen your colon. Where'd you guys go?
We went to Valley Lodge out here, a Greek style restaurant. It was quite nice. I had a little chili. Chili gas is real. I can report.
I don't.
Well, with the old colonoscopy guy, I'm just letting you know the whole tying it all together there, putting a big bow on it. No?
And that bow is your small intestine. Hey, we got a great show for you today. I don't want to be here. I'm going to pivot out of it so hard. I'm going to sprain something. We got a great show for you today. It's a fantastic Friday. Do with that information what you will. So that means a lot of great content headed your way at the top of the 8 o'clock hour. Always love it when this guy comes in, and that's Jamal recapping the weekend stocks. We had a ton of earnings. Had some economic numbers and reports. We'll have another economic report coming out today, but today's segment, Jamal has titled it "The Lack of Guidance is Disturbing." I have every single earnings from last night, and every single company was like, "Thank you all for coming. We have zero guidance."
Mm-hmm. And you know what? That's the way it should be anyway, because they don't freaking know. It's all BS anyway.
Yeah, well,
anyway, Jamal's going to tell you that. Saz, you've had a publicly traded company. When you would talk about your future guidance, was there really good substance there? Please be honest.
Well, we would flip a coin, and then we just make up a number.
He's joking, but it's basically no better than that.
Yeah. Well, Jamal, you could take it up with Jamal. And we got Fast Market today at 8:40. So reviewers write in with their trade ideas. That'll be interesting for today. That's going to happen around 8:40. Tom and Bat are going to try to do as many trades as possible. Then at 9 o'clock, we have a market measures. More. The Kelly's Criterion common questions answered. We keep getting lots of really good feedback when we talk about this. So we're gonna keep it going. And then live from the trade desk, big boy Scott Sheridan counting down the top trending tickers over at Tasty Trade. So that's going to be razzmatastic. We got a great show for you today. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
And it's
Story. Breaking news.
Across
the wire.
This just in.
Top story. Just in. In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's May 2nd. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. I am your very tired hostess this morning. Are you ready for the news?
Hostess with the mostess.
I am trying. Are you ready for the news?
Ready.
Sure.
Hey, jobs report's going to come out in, 12 minutes. Economists expect non-farm payrolls to post an increase of 133,000, although we did have kind of a slight surprise in the unemployment report yesterday, but I don't know if the market is anticipating a move from the jobs number. I'm just letting you know the jobs number is coming out at 7:30. That's it. That's the tweet.
It's the most important number since the most important number last time was the most important number.
Boom.
I want bonds to trade in the 114 handle, and then we'll be happy.
The 116.01. You just want them so you can scoopy.
Yeah, I'm going to put a bunch of bids in about 2 minutes before the number comes out, around 114.31, around there.
Beautiful.
Perfect. And much like my thoughts, my feelings, and my dreams, which I'm not allowed to talk about, I'm not allowed to talk about Japan. That got banned yesterday. So let's just go right into earnings. Yeah.
The yen's bouncing back. Maybe you're allowed to talk.
Nope, not allowed to talk about it.
Okay.
Our positions are always the same. We don't ever really change. It's always the same static delta. I don't ever want to talk about currencies again.
And
thank God. Thank everybody listening is saying thank God.
Except for our Tasty FX team.
Have you met those guys?
Oh, no, they're nice. Anyway, let's get into the earnings from last night. First up, Amazon reported better than expected earnings and revenue for the first quarter, but they issued light guidance for the current period. They did see a decline in their cloud services. Then they brought in revenue of $155 billion. I'm only responsible for a small percentage of that. Amazon Web Services came in $29.3 billion, which was under expectations, and advertising they brought in $13.92 billion. What'd you do in Amazon?
$11 expected move. It's down 2, Sosnoff. Well inside the expected move. No matter what you did, it's going to work out good.
It's actually unchanged.
Okay,
that's amazing.
It's literally unchanged to the penny.
That's why you got to do straddles. That's why you got to do straddles, man.
Yeah. That's why you got to do straddles. The reason you don't do straddles is because the day before Microsoft, the straddle would wipe you out. We sold a bunch of strangles. We sold more puts than calls. But we sold a bunch.
It's not going to matter what you did.
It doesn't matter. At this point, it doesn't matter. Whatever you did, it's going to work.
Right.
Okay. Let's get to Apple in an interesting statement that's pretty much gone viral. Tim Cook on the earnings call last night says that a $900 million tariff headwind is going to hit the company, and that's if things stay exactly as they are right now in this instant. Apple announced their second quarter earnings. They brought in revenue of $95.4 billion. The company also authorized an additional $100 billion in stock buybacks. Apple generated $16 billion in revenue in the Greater China region. The manufacturer of iPhones is looking to move that production now to India. What are you doing in Apple?
Apple, we did good. We sold some strangles and a lot of naked calls. And so
how much money do you have?
He's gonna have a little bit more this morning. $8 expected move. It's right there, down about $7 or $8.
Bonkers. Okay. Keeping it moving, tons of earnings. Reddit reported strong sales, and they issued optimistic guidance. Yay! The company said second quarter sales should come in the range $410 to $430 million. The social media site brought in revenue of $392 million. The stock soared as much as 19% in after-hours trading, but receded to around 5% when executives discussed the shaky economy and Google-related search challenges. What did you do in Reddit, or your existing Reddit position?
I did not like it when it went up to 140 after hours, but it's back down to 124 now, which is really good for us. We're short,
which is inside the expected move of $15. It's up about 7 to 9 right now. It's oscillating back and forth.
Right now it's up 6 actually, and it's
like you said, it's been all over the place.
Yeah, it's been all over the place. We're
We're
short strangles. It's going to be good.
Great. Airbnb issued disappointing revenue guidance for the second quarter. They did post inline first quarter earnings, but the revenue forecast for the second quarter was weaker than analysts expected. The hotel home share booking site brought in revenue of $2.27 billion. Revenue did increase around 6% from a year ago. Tom's wife still banned.
Airbnb had a $10 expected move. It's down about 6. Everything's inside the expected move is what I'm saying here. So far, just about everything to the downside except Reddit that you've mentioned.
Tom, did you have an Airbnb?
We
position?
did.
No?
We put a small position on there. We sold some strangles. Like Tony said, we're inside the expected move. We have the 100, 145. I think it's going to be good.
So far, these earnings have been a dream come true for you today.
Yeah, every earning today was...
Yesterday was rough for you in Microsoft. Microsoft had your number.
Only Microsoft was rough. Everything else was good yesterday, but Microsoft wiped everything else out. Today,
yeah.
I think everything's good. I don't know if MSTR came out. Let me see.
Hold on. I got it. I got it.
Okay.
Can I live? Can I do my job?
Sure.
I got you, boo. Block or Square or XYZ or whatever this company is going by this week, their shares plunged 18% as the company takes a cautious stance, and they also issued weak guidance for the year. They cut its full year gross profit guidance, citing macro uncertainty. The payment company brought in revenue of $5.7 billion, but revenue decreased around 3% from a year ago. Gross profit did rise 9%. Don't know if you traded XYZ.
I could have told you it's going to happen because nobody knows what XYZ is. They fake stock.
Yeah.
I could have told you this.
We did
Square,
not.
Block, XYZ.
We didn't trade it.
Okay.
New low at $45 here for Square, Block.
Maybe a post-earnings trade.
Maybe. We'll see. On Tuesday, option trades today.
Hey, Strategy, which used to be MicroStrategy, but now it's just Strategery, the biggest corporate holder of Bitcoin, reported a 5th consecutive quarterly loss on Thursday due to an unrealized loss on its crypto holdings. But they're going to have another $21 billion equity offering. I don't even understand what this company is. Like 5 straight quarters of just losses. They reported a quarterly loss of $5.91 billion because their quarter end Bitcoin price was $82,445.
I still don't understand.
$7.
I still don't understand how this is a business.
I don't either. And this is, like I said, 5 straight quarters.
I know. I just don't understand how it's a business. I mean, so a good quarter is when Bitcoin goes up, and a bad quarter is when Bitcoin goes down. I mean, why is that? How is that a business?
Yeah, how do you lose $5 billion?
Well, it doesn't matter. I mean, like, why would anybody invest in a premium play? Like, you pay a ridiculous premium, whatever it is, 1.5 3 times the price of Bitcoin, depending on how much premiums in the stock to buy.
They hold 553,000 bitcoins for $37 billion as of April 28th, 2025.
I understand that, but I'm just asking, how is it a business? That's all I don't.
I don't know. I'm on your side. I don't know how it's a business.
Why pay retail when you could pay wholesale and just buy Bitcoin yourself?
Well, I mean, I know why they do it, because they wouldn't have enough money to buy a business 530,000 Bitcoin, whatever it is, but from an investor standpoint, if you think Bitcoin's going higher, then just buy Bitcoin. I don't understand it. Just buy Bitcoin. Why are you paying somebody else?
Don't buy strategy.
Well, why are you paying somebody else a 50% or 200% premium? I just don't get it.
I don't either. Hey, here's a blast from the past. Roku like a hurricane. They trimmed their annual revenue expectations and forecast second quarter revenue below Wall Street estimates due to economic uncertainty. There's a theme. Shares are down around 5% in after hours trading. Roku still faces tough competition from Amazon and Apple for their Fire TV stick and Apple TV. You probably didn't trade Roku, but I literally never get to mention it anymore. So
Roku, they're in every TV, down $5 on an $8 expected move. Inside the expected move.
I did trade Roku.
And you did?
I did, and the stock is, the stock's down about $6, and I think that's going to be the only loser. Actually, I don't know. I think it's going to be a loser.
Okay, it's just getting a little
inside the expected move. What did you do? More puts than calls or something?
No, I just think that the puts were trading cheap because all the skew was to the call side. That's all. I just think I don't know if it's going to be a winner. I don't know.
Okay.
Getting back to just regular tech news, shares of CoreWeave, which rents out access to NVIDIA graphics processing units, surged yesterday on news that Microsoft is reaffirming its spending plans. Almost 2/3 of CoreWeave's 2024 revenue came from Microsoft, which during their earnings call reiterated its capital expenditures, so their CapEx guidance. CoreWeave CRWV. The latest IPO. We don't check in on it, so I don't know how it's doing.
Don't. CRW.
I don't really trade it.
$44 and change. It looks like it's been trading between 55 and 35 on the highs and lows. It's sitting at just 45 right now. Earnings are May 14th. Looking at the June options, they're 20 cents wide. They're okay, not great. Maybe something to look at in the future. I don't know. You may have
if you keep being like, we want more IPOs, and then you never trade the companies, like, I don't know what you guys want.
You're right.
It's a weird IPO because it's like you said, most of their business is with, and by the way, the number just came out, bonds down 5, SPOO's up 40. Most of their business with Microsoft, so it's like, they have real single point of failure risk. That's why people are reluctant to trade there.
Oh, interesting. Okay.
I mean, if somebody else comes along, Microsoft's not going to be, I'm sure not very loyal to them. So, I mean, when 2/3 of your business comes from one vendor, it's tough.
Sure. That's good insight. That's fair.
Not far off yesterday's highs of 56.82. We're 56.65 right now.
Yeah, bonds are only down 11, and that is not enough for us to. I don't know. What do you think here, Pat? Are they scoopable here or not?
On the bonds, probably. I mean, they've had a nice move down from 117 and change. I mean, a $1,500 move, $1,500 move.
Yeah. All right, I just nibbled at 15.15. I don't really. It's too high for me. I want to buy them. I want to get them lower.
Understood.
Let's see. IB rank's still high. June's 49 days. Maybe it's time to sell a little bond premium. Markets are a little bit wide on this number.
I think I'd rather sell the puts than buy the bonds. I agree with you.
I know, but the market's a little. Look at the put. The puts are wide.
I'm looking. I see it. Yep.
They're wide. They're very wide.
Yep.
I'm going to be the best offer on a bunch of puts, but I need a downtick here.
Mm-hmm.
All right, we're trying.
Do it.
Do it.
When the bond options are 1 or 2 ticks wide, they're very tradable. When they go 4 or 5 ticks wide, they're really hard.
Yeah.
Got it.
Right now, they're 4 ticks wide, 5 ticks wide. It's too wide.
Well, we'll see what shakes out. Hey, interesting news surfaced from a Wall Street Journal report that said the board of Tesla was looking to replace Elon Musk. Tesla has denied the Wall Street Journal's report. Shares of Tesla fell as much as 3% in overnight trading. Tesla chair wrote on social media that the report was absolutely false. So not sure who is wrong here, but let's just talk shares of Tesla.
Tesla up 2.5 to 3, trading 283 and change. Been going sideways the last 4 or 5 days. Ivy rank is okay at 37 with no earnings looming.
Tom?
I did a straddle in there for option trades today on Thursday. It's working out. Tuesday, sorry, it's working out.
I don't know.
And TP wrote about it in the Cherry Bomb last night. So
yeah, I don't know anything about this. I mean, I would think.
What are you doing in Tesla?
In Tesla. I'll tell you right now. Hold on. I don't think.
You don't know anything about the inner workings of Tesla's board of directors?
Yeah.
Yeah, I was not asking that.
Tesla. We have the 230, 350 strength. We're dead smack.
Take your time. We have a 4-hour show, Tom.
We're dead smack delta neutral.
Okay. Thank you very much. Hey, Ryanair is threatening to cancel a huge Boeing order if tariffs raise prices. The threat by Europe's largest low-cost carrier and one of Boeing's biggest customers was the latest sign of a potential reordering of the global aerospace industry if President Trump does not exempt the sector from his tariff plans. Not sure, 1, if you've ever flown on Ryanair, or 2, what Boeing is doing.
First of all, I've flown on Ryanair a bunch. I've taken them probably 5 or 6 times. And contrary to the whole, they're
the spirit of Europe.
No.
Spirit Airlines.
No, because if you want to go, if you're in Europe and you want to go from point A to point B, it's really hard to get on those national airlines. And they simply don't have that many flights. And Ryanair flies everywhere to everywhere, basically. And
like
so
Spirit Airlines, but they're going to charge you if you want to use a seatbelt.
Well, I've flown a bunch of times on Ryan, and it's fine.
What are you doing in Boeing?
Boeing's back to highs. So I don't know if I mean not all-time highs, but back to the high end of its range, 180. Well, just under 185. Looks like it's up about $2 this morning. All the planes flying falling out of the sky. Don't make any difference anymore.
Yeah, we don't have a. If I remember, Ryanair is almost 100%. It's like Southwest Airlines. All they fly is Boeing 737s. But Boeing, we have no position. After earnings, we flattened out.
Okay.
Ivy rank of 14 is why, so not 14.
Bat, I'm not sure the room in your home studio, but you might want to close the door so Vinny doesn't overhear. But Microsoft says they're going to be charging more for the Xbox Series S and Xbox Series X consoles, as well as compatible controllers, citing market conditions. The prices for new games will also be higher during the holiday season due to increasing development costs. Nintendo recently announced a more expensive next generation Switch 2, but Microsoft says the cost of the Xbox and its components could go up $80 to $100.
I'm calling bullshit on this whole thing, and I'll tell you why.
Okay.
Every game right now is no longer a disc that you buy.
It's in the cloud.
It's in the cloud. So
but this is the hardware.
No, I get the hardware, but you said hardware and games because of development. They said it's development. You pay to develop.
Sure, well, you have to pay people to code the games and
I get it.
Yeah.
Cost of doing business has to have come down. Is my point. It can't be the components. This is just. But these are
microchips and stuff that you and rare earth minerals. I don't know what's in an Xbox.
It's a land grab for my money, being the land.
What is Microsoft doing post earnings?
$4.28, up around $3.
Oh, okay.
Tom, any 24 IB rank.
Any residual Microsoft for you, Tom?
Yeah, it's a very Microsoft. We have the leftover remnants of a strangle from yesterday. I think we need the stock just to stay between 425 and 435 for the next year.
Okay.
Oh, that's all.
That's all.
Okay. Good luck with that, homie.
Just 1 year in a 10-point range will work.
Uber said yesterday it will partner with self-driving technology startup May Mobility to deploy thousands of self-driving vehicles on its ride-hailing platform across U.S. cities starting in Arlington, Texas by late 2025. This adds to Uber's growing list of partners for self-driving taxi deployment as it competes with Lyft, Tesla, and Google's Waymo in the robo-taxi market. What are you doing in Uber?
No position in Uber at the moment.
Uber IB rank of 46 is pretty good. It has earnings May 7th, looming in about days.
Okay, good job, Uber. Hey, this is weird. Movie Pass, the best known for the unsustainable plan to let people see unlimited movies for a monthly fee. Well, they have a new scam. Venture. They're launching a fantasy sports-like platform for film buffs that's somehow tied to the Web3 crypto space. It's called Mogul, and it will allow movie buffs to participate in fantasy tournaments, head-to-head matchups, and solo challenges based on the metrics of film fandom, including audience attendance, critic scores, award victories, and other markers of success. What?
I honestly, I thought you could already do that on event-based. I thought you could already bet on amount of sales and ticket sales and things.
Oh, like first weekend box office revenue.
Yeah, I thought that was already who's going to win an Oscar. I don't know.
I don't know.
I'm going to go with maybe you don't know.
Hey, since it's going to be so dreary and rainy this weekend, Tom, you should go see Sinners. I hear it's great.
Sinners?
The yes, with Michael B. Jordan and his fine ass.
It's funny you say that because we were trying to find a movie the other night, something to see.
It's in the theater. Go see it in the theater. Yeah.
Yeah, that's what we wanted to do. Sinners, it's called.
Sinners. Yeah.
I never.
It's a horror. It's violent. Vinny will like it. It's about vampires. It's set.
I don't really like vampire movies.
Yeah, me either.
It's not just go see it. It's fine.
It's got a good Rotten Tomato, 98.
That's what I'm saying.
98.
Yeah, and my producer of the stars, James, says got to go see it. Looks good.
98.
Oh, so a penis and the internet tell you, but me.
This is correct, but you brought me to the penis and the internet, so I give you credit. You get an honorable mention.
Hey, in other news, Chipotle is launching a game on Roblox to give away $1 million in free food for Cinco de Mayo. Cinco de Mayo is on May 5th, and Chipotle is partnering with Roblox for the Burrito Builder Ingredient Quest. Roblox actually had earnings this week. We kind of missed it. I think the stock popped on earnings. But what are you doing in Chipotle or Roblox?
We have no position.
We caught it. We talked about it, but we didn't do anything there.
We don't have any position on either of those.
Oh, okay. You get in CMG. I love CMG, and they're also post earnings. So,
yes.
No. Yes. No.
I'm kind of boycotting. Vinny likes Chipotle, but
I love Chipotle.
Yeah.
This is one stock that ever since they split, it has not done well. when they split, the stock was about 60. Well, now it's 50. Yeah, it got down to 45-ish, 46, but
yes, in September, in April, when everything was kind of imploding.
Yeah, it's been stuck around 50, but whatever. Yeah.
Or Chipotle.
39 IV rank is pretty good. Lower price stock, I'll give you that. In everybody's, everybody's wheelhouse. Limited amount of capital needed, even for naked options. And markets are good, not great. So yeah, it's a good candidate. Maybe something for my option trades today, every Tuesday and Thursday. We'll see.
No, all the best. Hey, this is funny. In a couple stories here, like Nike, are you guys okay? So did you see this? Nike is releasing pre-dirtied Air Force Ones, and social media is perplexed. The Air Force Ones will come out of the box dirty, but the more you wear it, the cleaner and crisper it becomes. I am very tired, and I am old. I don't understand any of this.
And Tom's having a hard time how they're going to keep ice cold in Miami. I mean, what's wrong with you, Saz?
Would you buy these, Tom?
No.
But it would be nice if at least one...
When was the last time you wore sneakers?
I don't know.
It's been a long time. I mean, you have those Eurotrash black ones that you wear, kind of like mountain boot, gym shoe, sneaker combo with threads on it and stuff like that. But
look, Tom should at least own one thing that gets cleaner as he owns it.
She has a point.
Where's the lie? Hey, in other Nike news, Nike released their new City Connect uniforms to mixed responses for the MLB. I have the White Sox one. The City Connect jerseys will sort of be a Bulls-White Sox mashup. What do you think?
I like it.
I don't know. I kind of like this whole City Connect thing.
These are just the dudes at Barstool just being grumpy, but I like this. I like this jersey.
I kind of like it. They're doing it.
Yeah, I think it's fire. I think it's fire.
Kind of like it.
I like it.
I don't know.
I like it.
What are you guys doing in Nike?
I'm short puts in Nike. I'm waiting to get my buck out of there. I've been short some puts for a while now. Nike is trading 57 and change, up around 50 cents. I'm 18 cents away from closing them.
Like everybody else.
Finally today, because it's Friday, you know it.
She doesn't care what you have, Sal. Enough. I already told her what I have.
I'm just saying, like everybody else, I think the world's long Nike.
Well, we'll see what happens there. Every Friday, you know it, you love it. It's a little segment I like to call Will Tom Eat It, where I scour the internet for food for fat traders. And because this weekend is Derby weekend, once you have all the girls and their hats come over to your place, and why don't you make some hot brown sliders? Ooh, these look good from one hot brown to another. Mm-hmm.
I'm gonna stay quiet.
Yeah, that is.
Someone pour me up a double shot of whiskey. They know me and Jack Daniels got a history. There's a party downtown near Fifth Street. Everybody at the bar getting tipsy.
Bacon.
Everybody at the bar getting tipsy. Everybody at the bar getting tipsy. I've been boozy since I left. I ain't changing for a chick. Tell my mind
here. I think it's like Worcestershire.
Woke up drunk at 10 a.m. We gon' do this shit again. Tell your girl to bring a friend. Oh Lord, one. Here comes the 2 to the 3 to the 4. Tell them bring another round. We need 30 more. 2 stepping on the table. She don't need a dance floor. Oh my, good Lord. Someone pour me up a double shot of whiskey. They know me and Jack Daniels.
Would you make that?
All I can tell you is I was so excited before I tried my first hot brown. Now, mind you, I did not go to any place to try hot browns. I went to Brown's, the hotel.
Yes.
I stayed at Brown's.
The innovator of it.
The innovator who was named after. So I went to the source, and I had the first thing I did when I got there was order a hot brown at Brown's. I was not happy with my meal. I think I just don't like. Maybe it's all the cheese they put on it. Like it's not. I'm not a big like soupy cheese person, and I don't know. It didn't do it for me.
Well, maybe if you make it yourself and you can
I love like an open faced turkey sandwich. I love that. But the hot brown, it just didn't do it for me.
Oh man. Well, I hope you all have a good Derby weekend. Good luck to the horse Grande. Bat, what's coming up next?
We're gonna take a quick 90-second break and come back. We got more Tasty Live. Confirm and send. We'll be back in 90 seconds.
Grande, grande, grande.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with Confirm and Send. But before we do, we've been talking a little bit about the market, but let's take a look at the market. Even the S&P is sounding off up 55.75, flirting with the highs from yesterday, as you can see here, just a skosh off of those highs from yesterday's sell-off late in the day.
Yeah.
NASDAQ up 200, Russell up 26. They're all up around the same. Russell is actually the strongest of the group, sounding off up 27. Dow up 372. Volatility. First time it's really in by a decent sized number, almost 3%, 67 cents to 23.10 on an up move like this early in the morning. Bonds down 20, 115.08. Bitcoin hanging out at just under $98,000, higher end of its range, 97,800. Oil down 21 cents, back under 60, 59 and change. It traded down to 58 and change. Caught a little bit of a rally yesterday. We'll see what happens today. Gold is back, baby. Up $41, trading 32.63. Silver is going in the same direction, up 27.5 cents. Really, it was an earnings day. Apple, they all seem to be lower, though, sounding off. Apple down a couple of dollars inside the expected move. Amazon, you said, was basically unchanged. It is now up $3 on $11 expected move, and quite a few others. Airbnb was down small on a $10 expected move. Roku was down $5 on like an $8 expected move. Reddit and Monster were the only two that were higher and inside the expected move.
They surprisingly, I'm kind of surprised, but bonds are where are they right now?
They're imploding.
Yeah, 08.
What did you just? What did you just buy?
You know what? No, I did. I bought bonds, but I made a mistake because I wanted to buy.
Yeah, you bought the wrong month.
Yeah, because I was trying to sell the options that I wasn't getting filled.
Mm-hmm. You did sell the 13 puts at 129.
Yeah, I want to sell them higher.
You want to sell them higher means bonds have to go lower. Bonds 115.08.
Got it. I got it. I understand. All right. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending the morning with us.
Did you forget where you were for a second?
No, I'm just trying to look at all the different bond orders I have working in here, and I was like, okay.
I should probably help you. You need me to trade these bonds for you?
No.
Seems like you're having a little difficulty.
No, I just wanted to make. I bought a SEP by accident. And I want to sell a.
Yeah, it's called user error, Sosnoff. That's all. We know exactly what it is.
Got it. Now I'll move down my price on the bond options. Okay. Anyway, sorry, just trying to get long a few bonds here. We sold some bond. We bought some bonds and we sold some bond puts, but I want to sell more puts.
Yeah.
Because this is we're not quite. I'd like them to be about 8 ticks lower, but we're close. Anyway, these are emails that came into us overnight from viewers all over the world. It is Friday, May 2nd. Let's see what we got going on here. In beautiful, rainy, 45-degree Chicago. Why can't I submit a covered call on a futures product in a single order?
Why can't I
submit a covered call?
I'll have you do it, Sosnoff. I'm gonna say it's they just don't talk to each other in that capacity.
Because
you go.
In the futures world, a long time ago in the futures world, they said, you know what? We want our futures market makers to be able to make money, and we want our futures options market makers to be able to make money. So we're not going to combine the two so that the customers actually get a better price. We're going to make you do it as 2 separate trades. And for some reason unknown to me, when we built the first small exchange, one of the things I wanted to do was allow customers just submit a single order to be able to do futures and an option. And that was one of the pieces of functionality that we actually built. So it's very easy to build. But the current futures exchanges, the CME and the ICE, don't allow you to route a combined order. You can't fill a future and an option in a single order. It's just they don't allow that through their fixed messaging. So we would route it in a heartbeat if we could. Makes no sense not to, but they don't allow it. So it has nothing to do, for example, nothing to do with Tasty. It's just that's the rule. Let's go next slide.
Got it.
With the big volumes of strangle trading that you do, how do you track profitability on a position through rolls and adjustments relative to your targets? Or do you simply manage a 21 DTE, close positions below 10 IVR, and focus on keeping your portfolio Greeks like theta and delta in line with your overall objectives?
I mean, I think we do I think we do all of this. I mean, if I have a strangle on it and I have a profit that I'm happy with, whether it be 50%, 25%, or whatever, and it's before 21 days, I'm looking to take it off. If I have too much delta in that one direction or the other, I'm looking to reduce my delta by rolling down the untested side. 21 days come, I'm looking to roll from 1 month to the next, and I'm pretty strict about that.
There is zero question that this person, whoever wrote this, I kind of feel like you read my mind, or you understand exactly what I do. That defines exactly how I trade. Put a lot of positions on. I don't try to track the profitability, even though you can on the platform. You can track through order chains. You can track virtually everything and as many trades you make and all that kind of stuff. I don't really try to track the profitability because it gets a little confusing with all the different stuff, with all the different adjustments and all the different additional trades we have on. But the way that Tony and I do this to keep it really simple, we manage a 21 DT and we close positions when the IVR drops, sometimes below 15, sometimes below 10. That's it. Yep. And then we keep track of our portfolio Greeks, like theta and delta in our overall objectives. That's exactly what we do. Let's go to the next slide.
Beautiful.
This person writes, I've had some earnings trades that were winners in the after hours market, but by the time the market opened the next morning, the trade was a loser. I'm worried about that today when you have a jobs report. So they wrote this yesterday for this morning, which could move the entire market. Is there a way to protect a winner overnight, an earnings winner?
I mean, delta is stock equivalent, so your position's going to have a delta to it. So you could theoretically buy or sell the opposite amount of delta that you have. If you had 68 short deltas, you could buy 68 shares of stock and theoretically lock in some profits. Now, if the stock earnings trade continued moving in the other direction, you would probably have you'd have too much stock or too little stock. But I mean, I'm going a little bit deep in the weeds here. My answer would be no. There's nothing you can do typically on an earnings trade.
To be fair, I mean, listen, you can get creative. If you're worried about a jobs report and you're short and the market going higher, you could buy futures, micros, minis, whatever. You could technically buy stock and all that kind of stuff. But I'm going to tell you right now, as easy as that sounds, conceptually or on paper, it's really hard to do. And if you do a trade like, let's just say, I'll give you an example, like Roku is down like, let's say $5 or $6, right? And let's say you were short Roku. There's no way, there's other than after hours deciding that you want to buy Roku, there's nothing else you can do.
Yeah.
So if you do have a position on, like, for example, like Roku, or you could have done it in Apple as an example. If you got short Apple and the stock was down, $8 after hours and you wanted to buy a little bit of Apple, under hedge based on your deltas, sure, you could buy Apple up till I think 7:30 at night on Tasty. We're about to go 24 hours. So you could do that. But be careful trying to like hedge an overall position. It's kind of next to impossible.
Yep.
Let's go next.
It sure is.
Do you have any plans to introduce AI into the Tasty platform? I know there are programs out there that do scans, but it seems to me they would be a lot easier to ask AI to find the setups that I might be looking for.
Sadnov, I'll let you answer this.
So we have built a pretty complex internal AI platform. We use multiple AI engines, and we have built it for with the capacity to do lots of different things. We're trying to figure out what we're allowed to do from a compliance standpoint and what the regulators will ultimately approve. Right now, we're about to release it just for support questions, because obviously that's the easiest thing to do. You feed it all the information about your platform and then it answers support questions, and it just makes things a lot easier.
But and make it easier to find what you need to support your question that you have, right? I mean, that's not really a trading setup. Right.
But I understand what this person wants. You want a trading setup. Why can't I ask AI, hey, how do I set up this trade? Or, this and that. We are already capable of doing that. We are waiting to see how the regulators spin that. I mean, our feeling is that it's going to be, in some parts of it are going to be okay, but there is nobody's doing it yet because there's no ruling on it. And we're highly regulated. Okay. That's why.
Got it. Thank you for clearing that up.
Let's go to the next slide. And let me just move some screens over here.
Give me S&P's up 70, Sosnoff. Bonds 115.09.
Yeah, the bonds are kind of stuck right there. Have you
That's
ever
a new high in E-mini S&Ps over the last 2 days.
Have you ever studied how much IVR increases in an individual stock because of earnings? Is it consistent, or how consistent is it each quarter?
I don't remember us ever comparing earnings quarter versus quarter, stock by stock. I don't think we've ever done that, Tom. Have we?
A long time ago, and I want to say this was like 6 or 7 years ago, we looked at the amount of implied volatility increases going into earnings. And we found that implied volatility can increase as much as 20-25%. It can also, but that can happen at any point. It can happen 2 weeks before and then decrease into earnings. It can happen 2 days or 1 day before and then expand right into earnings. So there's no rhyme or reason to it. The results came back and essentially said that the time decay offsets the increase. So the results are pretty random. As far as IVR goes, I would assume the numbers are the same. It could increase 20 to 25%, but we've never done a study specifically on that. Not that I can remember.
Okay.
And the last question. If you had to choose between 0 DTE trades in the SPX or the ES, which one would be your default and why?
It's a great question. I would probably go to the biggest of. They're both big. I mean, the biggest piece of the two. Probably stick to SPX myself. Cash settled, much cleaner. Just because at the end of the day, there's no future. If you go /ES, there might be a future that you are going to be long or short at the end of the day. I think SPX is the cleanest for 0 day. You're pretty much, it's a scalp. You're in with a position that day, and the following day you have no position. The opening of the market doesn't matter to you.
Yeah. So first of all, the SPX and the ES are the same, basically the same product. The ES is 1/2 the size of the SPX. That's
right. You'd have to do 2 ES to make 1 SPX.
But it's a little bit smaller. The other thing, the other thing about the from a tax consequence side, they're treated exactly the same way. They both get a little bit beneficial tax treatment. So they're the same product, different sizes, same product. Tax treatment is exact same. All the order capabilities are exactly the same. So then the real difference, just like Tony said, the SPX settles to cash. The ES settles to futures. That's advantage SPX.
That's a big advantage.
Yeah, that's SPX. A big advantage. The SPX has a lot more volume, but the markets in ES are just as tight. But you can get a little bit more creative SPX just because there's more volume in there. So
you can get smaller in ES would be the advantage to ES.
The advantage SPX, a little bit more volume. The advantage ES, you can get a little bit smaller. But the real advantage to ES, now again, if you're trading 0 days, this doesn't even apply. But the real advantage to ES for some people is that it trades 24 hours and it's 24/5, which is an advantage over the SPX. And the last thing that most people are going to say, and this is the biggest advantage of the ES, is that it has significantly lower capital requirements. If you are trading in a portfolio margin account, they're the same span and portfolio margin. So there's no advantage. If you have portfolio margin, there's no advantage of ES over SPX. If you're trading in a regular account and you have a smaller account, the advantage of ES is they're much smaller. It's a much smaller product. The last advantage of ES is that, and here's a big one for smaller accounts, is it is not subject to pattern day trading rules.
That is true. That is true. But on these 0 days, you're right. Yeah, that would be a big one.
So
you're right.
So the advantage of ES, better capital treatment, not subject to pattern day trading. The advantage of SPX is that it's cash settled. The reason that most people trade SPX is because more people are approved for regular trading than they are for futures trading. But as far as Tony and I are concerned, we probably default to SPX, but we are truly indifferent.
We'll take a quick 90-second break. We're going to come back. We got Jamal in the house with This Week in Stocks. We'll be back in 90 seconds. Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I'm serious though. No, this is all seriousness. Go on you have Amazon, right?
Oh my God. Stop. Well, it's a legitimate question from Tom. Because Tom doesn't have Amazon. Tom doesn't have Amazon. It's a legitimate question.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the house, Jamal, This Week in Stocks. What's up, my friend?
Hey, what's happening? How's the week been, guys? What's going on?
It's been great. I've been with Tom. It's been amazing.
Oh, nice.
Yeah.
Watching any playoffs? Watching any hockey playoffs? Basketball playoffs? What's going on?
Watching them all. I told Tony this morning, I said, hockey's been great, but as much as I kind of wanted Detroit to go to Game 7, all I want to say is
You wanted Toronto to go to Game 7.
No, I wanted Detroit to go to Game 7.
Detroit, basketball.
Yeah.
Got it.
Jalen Brunson's an absolute stud. He is a stud. I would love to have that kid on my team. Love.
Are you looking for an argument from somebody?
No, I just want. He's a Chicago kid. I want him on the Bulls.
Well, now you're asking for a whole lot.
Yeah, right. Yeah.
I know.
What's I really haven't watched many of the hockey playoffs. I've been seeing them on, but What's the best one so far?
Oh, they've all been good.
There's been a few good ones. I mean, a lot of teams have clinched. You only got really basically the Stars and the Avalanche left that haven't clinched. But the Panthers have been real strong, and they've just been great games. I mean, the Capitals are playing great. They've been great games. They've just been a lot of scoring last night.
One was in overtime 2 nights ago. I forgot which one it was.
Every game, almost every game.
Yeah.
Oh, that was Carolina against the Devils. They went to 2 overtimes.
Yeah.
What's up with these new abbreviations they got for the teams? Like LA Kings is LAK. I don't remember that being a thing.
Well, that's because
it throws me off.
That's because
in New Jersey's NJD. It just used to be NJ. Like what's going on?
It's all about the jerseys.
Yeah.
Weird.
He's right.
Let's pull up the slides and talk about the week. It was quite the busy week, and your lack of guidance is disturbing. It's do you know where this kind of this kind of quote comes from? What movie potentially this quote comes from?
Your lack of guidance is disturbing. Can I get a hint?
Star Wars.
Oh no, I don't.
I'll give you the big hint because I don't think you're going to get it.
No, I'm not going to get it either.
I'm not going to get it.
This is a thing that Darth Vader said. Your lack of faith is disturbing, and he's like holding this guy as he's killing him. You guys don't know. You guys weren't Star Wars guys at all.
No.
Can't believe it.
I mean, I like Star Wars. I'm not like I haven't seen them 50 times.
It's fair.
Yeah,
it's fair.
I'm with Tom too. Not me. No,
it's fair. I knew this was gonna happen. Don't worry, the chat's going crazy right now. You have no idea. They're like, "Oh yeah, I love it." But it comes from the fact that there's a lot of companies that basically didn't give guidance, right? Let's move to the first slide. And because of the uncertainty more recently in the market,
I mean, you were an engineering geek. You had to like Star Wars.
It's fair. It's true. Yeah, it's true. We had jobs report this morning came in really good and shows no real material impact from the Fed. So but it's likely still gonna make the Fed say we're not changing rates anytime soon. GDP we also had this week. I can't believe I'm talking about GDP, but look, it moved the market. Market was down big the morning GDP came out because it shrank for the first time since 2022. And then we also had inflation data that showed inflation accelerated. So now people are talking about stagflation again. We also had a lot of earnings. Of course, the big ones this week were we had Meta and Microsoft, and they both reported better than expected and didn't really have any issues with tariffs. A little bit different on the other side. Today, last night, we had Amazon and Apple. Amazon gave a weak forecast. The stock was offered after the close and saying that they might have some pullback in spending. And Apple, similar deal, had good earnings. But look, we all know that the big thing with them is that they have all these plants in all these places that are getting hit with tariffs, and there's no chance they're going to bring all their business to the U.S. So who knows how this is going to go with them? And I feel like the stock was offered there after earnings. Dollar for the second week in a row is positive, and gold is pulled back big time now, 8% off the highs, although I saw it was a little bit bid this morning. And then you got VIX futures. Out of all of this, market had a big rally this week. Gold pulled back. VIX futures is still in backwardation, at least as of now. And fifth straight week that's done that, and VVIX is still over 100. So there's a lot going on.
It's an interesting time to be alive. Interesting time to be a trader.
100%. Let's move to the next slide. So I always like looking at this. It's a funky thing, and I got to explain it. But this is the difference between VIX and historical vol. So immediately they'll let you know what's going on here. Historical vol obviously has been moving crazy because we've been moving crazy. This is the 5-year low of this metric, the volatility risk premium. The last time we saw it look like this was during COVID, when obviously vol was high, but things were moving around a lot. And so that's kind of the deal here. The swings have calmed down. We don't have 190, 200 point swings. They're more like 70 to 80, but you get the picture. Let's move to the next slide. So things are pulling back. Markets are coming up, and we got correlation, 1 month correlation, of course. I mean, things were obviously getting sold off all at once, except for gold, I guess. But things are calming down. We see VIX pulling back, so we see 1 month correlation pulling back. And I mean, you would have to assume today, if we're getting up to 5,700 at this point, which, I mean, dude, last Monday we were at 5,100. Today we're at 5,700. Big moves in markets, and things have calmed down. But like I said, we're still in backwardation as of last night. We'll see what today. I don't know if after this rally we get to 5,700, maybe backwardation goes away, but we'll see. But things are starting to calm down. Again, this was at a 6 month high, of course, from that sell off we had in August, and now it's calming down. Next slide, please. Treasury yields are, they've been all over the place. Liberation Day, after that, we saw them go sky high. We saw the 10-year at about 4.5%. And since that time period, they started steadily falling. At this point, I know they jumped a little bit yesterday, which was kind of strange. Yesterday was weird. I mean, we had a big move up. Bonds were down. Gold was down. It just didn't really. It was so strange yesterday. I don't know what today's going to be like. We'll see. But yields have pulled back quite a bit, and we'll see if they end up staying down. We'll see.
I'm trying to buy bonds. I really want them to get under 115. Amazingly, they're 115.02 right now. So they're right there.
Yeah, that's kind of where they were yesterday too, right?
Well, yeah, but remember they almost traded up to 117.
Yeah, true. Yeah, and then they got sold off. True.
Yeah.
Yeah, like I said, all over. Let's move to the last slide. So like I said, many of these companies have refrained from giving full year guidance because they just don't know how the tariffs are going to affect their business. Obviously, car companies, airline companies have been the main ones, and a few retail, etc. Novo Nordisk is offering Wegovy through telehealth providers. HIMSS took off this week. Roe and LifeMD, I don't think have stocks, not that I'm aware of anyway, or who their providers are. But again, there was a shortage of Wegovy for the longest time, and now they're sending it out to telehealth providers. Hopefully, that brings the prices down, etc. Temu is passing virtually all of its costs from Trump tariffs onto the customers. What else are they going to do? Amazon is probably going to do the same thing. And then next week, it just is beginning, folks. FOMC meeting is going to be next Wednesday. That's the big thing we got going on for the week. April 29th, OJ, how reliable is Theta was a pretty good research thing. Check it out.
See that, Sosnoff? Did you check it out on the 29th?
I did it.
Yes, you did, Boo. Yes, you did. Good job out of you, my friend. Even the S&Ps are doing a good job. They're still up 69. Bonds are trading 115.04, down 24 ticks. We're going to take a quick 90-second break. We're going to come back. We got the opening bell immediately following these quick messages. We'll be back in 90 seconds. TT Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically, instantaneously, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring. And then it was all of a sudden, I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, Mr. Sadnoff, with the opening bell. Going to slap you right in the face here in about 7 minutes, Sadnoff, maybe 6.5. So you've got some time here. Even the S&P is up 67 and change, Sadnoff. They're above yesterday's highs before that sell-off. Yesterday's highs around 82 or so, 56.82. We're 56.99 as the high. We're 91 right now. You had almost 100-point range on the E-mini S&Ps. And if you go back just a couple of days, Sadnoff, and by a couple of days, I mean going back a week or so, E-mini S&Ps were closer to, say call it 55, 50 or so. So we've had quite a move this week.
Yeah. I like to get, I started to get short yesterday a little bit, and I covered most of it. I left a couple of futures out after the Apple number came out last night. It was weird because
we were down for a second there on the S&Ps.
We were down about 10 or so, but it was really weird. They just didn't want to go down. And I was like, okay. No. So I covered mostly everything because they just didn't look like they wanted to go down. But I was hoping that bonds would be down this morning, stocks would be up, which is exactly what we got, which is going to be a really good opportunity, I think. But we have a lot to do with, we have so many earnings trades that I want to get those out of the way first.
Yeah, you've got Apple for earnings inside the expected move to the downside.
Oh, Apple's going to be really good. Apple and Amazon are going to be good.
Yeah, Amazon basically unchanged, up $2 to the upside on an $11 expected move.
Yeah.
I mean, Airbnb is going to be good for you.
Airbnb's down 4. Reddit's up 3.
Airbnb's down 4 on a $10 expected move. Go ahead. Reddit is what?
Reddit's only up $3
on a $15 expected move. That had some people going hairy last night. To the person who sent the email about, can you adjust an earnings trade overnight, you had read it up substantially. Now, if you had just naked long calls, I mean, you could have sold stock there. But if you had a premium selling strategy, you might have looked to buy some stock, and now you'd be getting twisted in the wind both ways. It's just, I don't know, it's just easier to wait till the opening, in my opinion. Go ahead.
And other than that, I mean, the only one that's kind of, I mean, Roku maybe on maybe a loser. I think that's the only one, but I think that's going to be small.
Is it down 5 still on an $8 expected move? ROKU. Let's take a look at what it's doing.
Yeah, I don't remember exactly, but yeah.
Roku is down, let's call it $6 or $7. It was on a $8 expected move, so you should be good there too, sad enough.
Yeah, I know. Well, we got a lot of money to make back because yesterday was not good with the Microsoft.
With Microsoft.
Yeah, I'm hoping Microsoft pays a little bit today, but it's up a lot. I didn't want it to be up this much. I could handle I could handle like $3. I got a little aggressive last night rolling down calls in Microsoft because remember we sold off about 50 handles on the close, right?
Right. Yep.
Yeah. So totally, we're back up. We're back up 60 today. We sold off about 50. We're back up 60. It's kind of like a little ping pong here.
Yeah, like nothing happened. We don't mention XSP in the last answer of that.
Oh, Exxon. One more, Exxon.
Oh, you traded Exxon?
I didn't yesterday, but I do have a position on in there.
Ah, gotcha. Exxon Mobil is trading. Looks like it's up around $1 or so.
Yeah, it's way inside the expected.
$2. Yeah, $1.50.
All right, go ahead. What were you saying?
We didn't mention XSP. We mentioned even the S&Ps and SPX for 0 day.
Yeah.
You could go to XSP too. That would be another one. It's a much smaller product, but that'd be something we could trade.
Yeah. I mean, we did trade XSP the last 2 weeks. And to be fair, it was totally, both trades worked out nicely.
Yeah, but I mean, it's cash settled the same way as SPX. I mean, I'm just trying to get smaller, and it was brought to my attention by one of my Taiwanese sources.
Cash settled. It's 1/10 the size of SPX. It is subject to pattern day trading.
It is subject to it. Yeah, just like SPX, right?
Yeah. The bad thing about the pattern day trading rules and the 0 DTs is if you get a situation where like this happens a lot of times to smaller accounts, like you do XSP and you want to take it off, but you don't want the additional day trade. So you're forced to decide, because if you hold it to the close and it expires, it doesn't count. And then it's such a dumbass rule. We have to get it changed. Scott's been working on it, but I mean, to be fair, he's taken him 15 years. He's made no progress. We should have somebody else do it. I mean, I'm not saying, we love Scott, but we need to send somebody else to Washington.
Well, you could tell Scott yourself today at about an hour from now, Sadnoff, at 9:30 when we come back. Yeah, we'll have Scott on the show.
I don't think you'll handle that too well.
I
don't think he'll handle being replaced as well as somebody else might be.
Well, you can tell him to his face 9:30 when we go to ask him questions, Sadnoff. You can ask him a question.
Yeah.
My friend Sean is excited that he was elevated to a Taiwanese source. So you're welcome, Sean.
Sean, it's not something that you want to tell your kids about or your parents, okay? All right, I don't hear any.
I didn't hear any dings, and you guys.
I don't hear any dings.
You got some orders in. Everything's up around 1%. Sadnoff, that would.
I don't hear any dings.
A 60 handle move on the E-mini S&Ps, about a 200 handle on move on the Nasdaq, about a 20 plus move on the Russell, and about a $400 move on the Dow. That makes them all up around 1%. Volatility 2305, just flirting with going under 23. You can see here for the last 4 or 5 days, it's been oscillating back and forth from around 23 or just a skosh above to around 24.5 or so. We'll see if it breaks out of that little range today. There's your first ding, Sadnoff. That's in Amazon.
Yeah, Amazon.
Well, you bought the calls and puts back for 45 cents. Not even somebody like you sells them for 45 cents on opening.
I can promise you, whatever I sold them at, I don't remember, but it wasn't 45 cents.
Mm-hmm.
Yeah, I think we're in the process of getting out of Amazon. It should be a good one. AMZN, very good. Stock's down 30 cents on a big expected move. We like it. Apple's down a little bit more than I thought.
Apple down a little bit more than I thought. Let's take a look at Apple. Well, you did sell more calls. Apple, yeah, down $10. That's you are right. I didn't see Apple down more than $7 or $8 earlier.
Yes.
Well, you bought your calls back. No hurry in doing that, but you hurried to do it. Okay, go ahead. Now what?
No hurry to do that is exactly right. Well, I was hoping Apple would, not be this pathetic. Let's take a look. Yeah, Roku's not too bad, all things considered. One of the good kids was Airbnb. And another one.
It behaved according to plan.
Another one of the good kids today. It looks like it's going to be Roku, but we'll see. What are the SPOOs up? 69?
Yes, sir.
Now let's take a look at Applebee Schmapple here.
Mm-hmm.
Now the stock's down $10. What do you think? We sold the Apple spreads at $3.50. $3.50. They're $2.50. They came in $1.
Mm-hmm. Mm-hmm.
I mean, I can't complain.
You sound like you're bitching. I'm not gonna lie.
Yeah, we're gonna take off some Apple Premium here, and all I'm doing this morning is kind of cleaning up.
Closing trades right now and booking winners is what you're doing.
Yeah, closed Reddit. Reddit was a really nice trade. Airbnb is
way to stick to the thought process, Sadna. Reddit down $5, worked out nice. Airbnb got filled at $1.79, worked out nice.
Yeah, so MSTR, do you think it actually had earnings?
Yeah.
Okay, well, the weird thing is that
it's up 13.5 bucks.
Okay, well, this spread didn't move.
MSTR's expected move was $12. It's up $13. So I would imagine that to be okay. I wouldn't expect it to come in by much. ID rank was very low in MSTR also, and it's low right now at 20. And it definitely had earnings. I'm looking at them.
Okay, then we just didn't make a lot of money.
Mm-hmm.
And we're gonna wrap up everything. What are SPOOs doing here?
Up 67. I haven't moved too much.
We just took off our
ExxonMobil.
And now we're going to wrap up the last of it, which is Roku. Done. Everything out. It's 8:34 in the morning, and we're done. Let's do a little post. Apple obviously was good. Airbnb was good. Amazon was really good. That's probably the best on a percentage basis.
Can I have some of that trade then?
No, sorry. Let's see what else. I don't remember what else we had. Let's see.
Apple, Amazon, Airbnb, CVX, Roku, Reddit, Amgen, Monster, MSTR.
Reddit was a nice winner too, and Roku was a tiny winner. Everything was a winner last night. Mm-hmm. But Reddit down 5 after trading all the way up to 140 and now down to 113. That's why you can't trade stock after hours.
Mm-hmm.
Because you would have gotten just crushed in Reddit.
Yeah.
So no problem, children. Shocking.
Yeah, pretty good.
Yeah. Anyway, all right, sir, what's next?
Well, we could take a quick 90-second break if you want to. We've got Fast Market where we're going to look at more trades from our viewers. You want to do that?
Sure.
Nike up $1.68 for all those people you said were long. That's got to be good. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
Well, I have to think everybody's long Nike.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our Cherry on Top weekly recap. Bat, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do?
We have a party.
You have a party?
A party.
Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Evian?
No. Hose water, Sosnoff, so I'm going to tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks like...
put him in a tracksuit? Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good. The tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah. Like a
disco ball, I can handle it. What I have a problem with is, how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. It looks like Tom. Like, that's Tom. I mean...
That's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's
great.
The cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah, he's got the snowboard, the Chinese takeout, the dumbbell.
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
It was not me.
Okay.
It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and what the? This is not. This is. Gus did the Batistas, I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals, that's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys
Did you just
fly.
call me a turkey?
What's that? Wild turkeys do not fly.
Yeah, Steph, I think you and
Did
me.
you call me
I think
a
this was
turkey?
more.
I didn't call you. I'm calling
No, I think
Scott.
Turkeys
it was
don't
me.
fly. They can get airborne for a second.
I called him a wild
fly.
turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
he
taking a
sees
hike in the
wild turkey.
woods, I've seen wild turkeys flying all over the place.
Mm-hmm.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with Fast Market. Even the S&P is up 66. Saznoff, my Taiwanese sources have confirmed if the S&P 500 closes green today, it would mark the longest winning streak since November 2004.
Do you think you could name one Taiwanese food?
Yeah, Thai food. I eat it all the time. You know what? Seriously, I just broke your brain. So you didn't realize that that there was more than 29 days till April. And you this week, look at what you've learned this week. It's a lot, Sosnoff. Unlike February, April has more than 29 days. You learned that. And then you now learned that Thai food is short for Taiwanese food. Taiwan. Yes, look at you, Sas. Very proud of you.
Hey, John.
It's okay. Listen,
John.
Try not to open your mouth and
stop for just 1 second. I want to ask our producer John something.
Yes.
John, can you help me here just for a quick second? Just because I don't want him to yell at me.
I have to come in?
No, you have to come in. But this is too good, okay? John, have you ever had Taiwanese food before?
I've had Thai food, yes.
That's not my question. Have you ever had Taiwanese food?
Sure, why not?
Okay, I'm going to give you just a little lesson in geography here.
Okay, good.
Taiwanese food is not Thai food.
Where's Thai food from?
Thailand.
Okay.
He's saying Taiwan.
Where's this is too good. Okay, here, let me start with an easier lesson. Mexico, New Mexico. Okay? Now, we're gonna go on. Because you just dug your own grave because this is too good. I didn't want to. I said to you, can you name one Taiwanese food? And you went off and started talking about Thai food. Thailand and Taiwan are not the same country. They're not even
Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What are you talking about?
I said to you, have you ever had Taiwanese food? Can you name one food from Taiwan? I said Taiwanese food, and you said, of course, I love Thai food. I've had pad Thai. I can name a lot of Thai foods. It's two different countries.
I believe you're making my case right now, but I'll agree to disagree with you.
Oh my God!
Taiwanese cuisine, I just looked it up, is commonly referred to as Taiwanese food or Taiwanese cuisine.
Exactly.
What?
Exactly.
I think you're making the mistake.
I don't think so. Okay, first of all, you know this.
I Google search Taiwanese food is called, and it says Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What is the problem?
That's exactly the problem. I said to you, I was letting you.
So what is food from Thailand called?
Thai food.
Okay, whatever. Okay.
No, I'm enjoying this.
Stand by, guys.
Hold on. Hold on. Oh, my God. Here he is. Jason, come here.
All right. I'll stand here.
Oh, this is too, yeah.
All right, hold on. First, Taiwan is not Thailand.
Jason, go sit in my seat. Go sit in my seat.
All right.
We got our own Taiwanese expert here.
I am the Taiwanese source here.
He is our Taiwanese source. When you say Taiwanese source, there's your Taiwanese source.
You're looking at him right here.
You're looking at him.
That's right.
I will take whatever Jason says. I will take it. If I'm wrong, I will apologize.
No, Beth just sent me a message saying they need you in here. I'm like, all right, well, I'm dropped everything I'm doing. And I heard about Thailand and Taiwan. So with a passionate tirade, I had to come in here.
Oh, okay, beautiful. So I asked Tony, because he's always quoting his Taiwanese source. He's quoting his Taiwanese source like 4 times this morning.
Yeah.
So I said to him, can you name one Taiwanese food?
Okay.
What's your favorite Taiwanese dish? And he started laughing at me, thinking that it was Thai food.
That's a common mistake because the Thai part of Taiwan, people mix it up with Thai as.
Don't defend him.
Look, I'm not. Look, it's.
How far is Thailand from Taiwan?
Oh, you're talking at least like a 3-hour flight. So
at least, right?
At least, yeah.
Oh, so I'm close.
Yeah, you're close.
You're in the right hemisphere.
It's like going to New York.
I mean, regardless, the weather's still hot in both places. So, but
officially 2 different countries.
They are 2 different countries officially, yes. But one thing that kind of catches people off guard in terms of what's Taiwanese food and what's Thai food. I'll just namely speak on Taiwanese food. Have you ever had bubble tea, boba?
Of course.
Yeah, sure.
That was invented in Taiwan. A lot of people think it's Japanese and Korean. No, that's actually Taiwan.
What is your favorite Taiwanese food?
Bubble tea.
No, that's
what is it?
It is a beef noodle soup.
Beef noodle soup.
Yeah.
Are there Taiwanese restaurants in Chicago?
There is a couple. There's Taipei Cafe, and I want to say that's Cermak and 26.
Never been there.
I'm sorry. Halstead and 26.
Never been there.
There's one in Lincoln Park too. There's another one called Hello Jasmine, but they all serve the same types of things. So the big hitters for Taiwanese food is this thing called gua bao, which is like a white steamed bao with like a piece of pork belly in it, cilantro.
Yeah, I've had that.
They sell those at Trader Joe's.
Yeah, that's the gringo style. But then and then because this is America, right? America loves fried food, so they have this basil fried chicken that you can get too but what makes it hit is they use dark meat, not white meat.
Oh, I like dark meat.
And they fry that too. And there's another place in Chinatown called St. Alps. They do yeah, it looks like a cafe, like a just a normal coffee shop, but then you would never know they would have.
I'm trying to make Tony more worldly, okay? Because he's about to go on a world tour. Is
that right?
And I'm trying to make him more worldly.
Is he allowed to have a passport?
Jason, just for the outtakes.
He just got his passport back.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify this.
No, you're not.
I owe you and your people an apology.
No, you're not. But here's what I want to do.
I'm a good person. I did a bad thing.
Here's what I want to do. I want to bring in, because I think this will be good for he's going to be more worldly after this.
Of course.
I want to bring in a Taiwanese dish.
You're going to have a black eye after this, too. But go ahead.
I want to bring in a Taiwanese dish and a dish from Thailand.
Okay, and see if he knows the difference.
No, he'll know the difference.
Oh, he'll know the difference.
Yeah.
Okay.
Oh, he knows Thai food.
Okay.
He's a Pad See Ew expert.
Okay. Well, I can't wait for that segment. Perfect.
Come on. I let you just.
Hey, ladies and gentlemen, that's Jason from the trade desk.
I didn't do a single thing. I just sat back and listened. I just sat back, relaxed, and enjoyed the ride.
That's right. I got to get back to work.
You did give me a lot of rope to hang myself, and I did an excellent job of doing it.
I was like, it's too good. It's just unfolding on its own.
Yeah, this is great. It's like a
Jason, thank you for that.
Yeah, of course.
Thank you for that.
Thanks, Beth. Later.
Yeah, hey,
thank you, Jason.
Back to work.
Thank you, Jason. Now back to work.
Back to work. The phones are ringing. Customers need help. All right, let's do it.
Okay, Sadnov. So you won that one. And you made a big hullabaloo about it. I'm so proud of you. Okay? That doesn't make up. It doesn't make up for 29 days in April, but whatever.
Here we go. Let's go.
We've got a fast market.
Hold on. 1, 2, 3.
Oh, I've got 1,000 emails now. I've got 1,000 emails.
I think I have a couple dozen emails. All these are too good. I mean, if we have time, I would like.
It's a common mistake. It's a common mistake.
Oh, some of these are too good. Some of these are too good. We're going to save these for the archives. Oh my God, this is I dream about opportunities like this. All right, John, did you send Jason here? Is that Beth?
That was Beth.
Beth.
All right, let's do it. Fast market. We only got 10 minutes. We got to fly. Fast market.
It's my fault now. You had to spend an extra 15 minutes to embarrass me, but it's my fault. Netflix. Take a look at this rally. Pick your poison: skewed strangle or naked calls.
Pick your poison: skewed strangle or naked calls. Well, let's take a quick look. This is the pilots from Panama,
which is also in Thailand.
Close enough. Let's just see here where we got. What is going on? Oh, Microsoft.
No, Microsoft.
I couldn't think of what the problem child was. It's Microsoft again. Take a look at this rally.
Again, up $9.64.
Take a look at this rally in Netflix. Yeah, Netflix has been unfreaking believable. Let's see, 2, 4, 6, 8, 10, 12. More consecutive up days, I think, than the stock market.
Yes, which would be the strongest since November of 2004.
I think you go skewed strangle. I'm cool with that. Skewed strangle. The markets are not wonderful here. How about expected move is $100? Let's go 150. Let's go 1,300 calls. And I think you go 1,300 calls and 950 puts. That's a skewed strangle. 17.99. I don't even know if that's good. I think it's close. Let's go next slide. XOP sell the 95-130 strangle for 2. Great premium for an ETF. 95-130. XOP. 95-130. Currently have a bunch of stuff in XOP. This is June, right? Yeah. Oh, these markets are what happened to XOP?
XOP's been like this for a while.
Yeah, these are not good markets at all. You think a 270 credit? I think it's going to be a tough fill. Yeah, I don't think it trades anywhere near here. Oh, you know what?
Right there, Sadnov. Right there, 263.
263. I'm surprised by that fill.
And Netflix, you got filled at 17.99.
Yeah, that was kind of my limit.
It's got about 12. Of course, that was your limit. That's where you got filled. It's got about 12 short deltas in Netflix, even though it's a strangle. It's skewed.
Yeah. All right, let's go to the next slide. Nike. This person, who's this? Milan, the guitarist. Yes, love Milan. He wants to sell a strangle with 50 days to expiration. We have a bunch of Nike positions on Milan, and they're actually working out quite nicely today. You want to sell the 50 puts. We're already short the 52 puts. And let's see, if we go to Nike, it's up $1 today in June. You want to sell the 50 puts and the 65 calls. I mean, that's a pretty neutral strangle. We're already pretty long in Nike, but we'll do it. We'll add a little bit to our position. 163. Yeah. Let's go next slide. I'm just trying to move quickly.
There you go.
Along the mini yen futures, the yen has dropped from the top a lot. Time to buy the dip. Trent from Memphis. Hey, you know what? We are already long the yen, but the yen is up 850. Nice call, Trent, because you wrote this in yesterday. The yen's up, it looks like 855 bips today.
Yeah, it was down yesterday, up today.
Yeah, and we're long it already, but that's a damn good call.
Yep.
I'm not going to buy it up 850 because we're already long it, like I said earlier. So we'll just leave it. We'll leave what we have. Let's go next slide. PLTR, Ron Burgundy. Heard that name before. Let's go. What does he want to? What does Ron Burgundy want to do here? He wants to do a double ratio. All right. PLTR. I got to go out to PLTR. We have the 100 in June. We have the 100, 145 strangle on. It's very much, actually, this stock's up a lot today. We're going to roll the puts up to 105. Okay. So read it off to me, Bat. What does he want to do?
Sure. Well, you just did. Is that just for your?
Yeah, that's just my own position. But hold on. He wants to do that. I don't see single point strikes.
He's looking at he doesn't see single point strikes. He must be in the weekly options with 42 days to go, Saz. Or because it has earnings on the 5 days, which is May 5th. Maybe he's looking at the May 9th options. They have single strikes. All the weeklies are going to have single strikes.
Okay, so you want to do
which
May
makes no
9th.
Freaking sense to me when they're not the most traded.
Okay, he wants to do May 9th. Fine. What does he want to do?
Yes.
The 142.
142, 143 on the call side for about 300 credit with a chance for 410 at either end break evens. It's a double ratio. I don't know why he's going. I don't understand the strikes though.
What's the put side?
93, 94. I mean, you get a $17 expected move. That's why you're able to go so far. But I don't know why he's doing a dollar wide 94, 93. Like that doesn't make any sense to me.
But what's his credit? $300 credit?
Yeah, but he's doing a $1 wide double ratio on both sides.
Yeah, but I only have it as a one. I must be doing something wrong.
No, the stock's up $5 today, so it's going to change it a little bit.
I have it as a debit right now. Buying the 140. Oh, I'm sorry, I did it wrong. I see now.
Yeah, of course. It can't be a debit.
I know. Okay. Oops, I did this wrong. Buying the 142.
Oh my God, you are Sosnoff is trading for around $2.99. He was looking at $3. He's right there. More importantly, why a dollar wide double ratio? You're going to want to go a little bit wider with that buy.
Well, you're going to want to buy. Sell. You're going to want to move the calls up $5 today, right?
Right, because the stock moves. So that $5. So that brings you to 147, 148, and you're gonna have to move the puts up $5 too if you're gonna be fair on this whole thing to the 99s, right? And if you go dollar wide on this thing, it looks like it's trading 284. That's not my point. My point is, why do you want to be a dollar wide on your ratio spread? You're gonna want to be a little bit wider than that.
So $2, $3,
$2 or $3, Osnoff. I mean, $3 gets you around $1.10. If you do the 47, $1.90, 47, 150, and if you do the 99.96, it's about $1.94. It's an 84% pop. 7 days to go. $17 expected move. Puts you right there.
Okay, I'm doing the 98, 94, 147, 152 and a half. How's that?
Okay, it's not equal. It's not anything else. It's a dollar strike away from what I said, but I'm wrong all day today. So I guess you're doing the right strikes.
122. Take a fill, Phil. All right, let's
122 it is. Boy, that was easy.
That was easy. Let's go next slide. I fell behind. Thanks, Ron Burgundy, for a tough trade. Justin from Louisville. I'm slightly bearish on Crowd. I haven't traded Crowd in a while. CRWD. It's up $7 today. I'm slightly bearish on Crowd as it gets close to previous highs. Sell a skewed iron condor. Okay. He wants to sell the 500, 520, right?
Mm-hmm.
And on the put side, 360, 370 by 360s, right?
Yes.
So he's $10 wide by $20 wide.
Yes.
It looks like that's going to trade for about 5-6. Well, I don't even know where the hell this thing's going to trade because the markets are wide.
Mm-hmm.
We'll do a little price discovery. I think 560-ish. I don't know. These are not. It's not that liquid. I mean, the stock's up a lot. It should get filled, right? Let's leave this in. Let's keep working this. We'll leave this in. I'm working it, Justin, at 560. I don't know.
I'm working it.
Yep. What's next? John, next slide.
Tesla.
Cena from Menlo Park. Buy the... Oh, Cena, come on, man. What's Tesla doing today? Tesla is up $2. I wouldn't buy the 320 calls in Tesla with your money, Cena. No chance. What's next? Especially after 9 straight up days or 12 straight up days. Still enough time to collect premium before month-end earnings. What about selling a strangle in PDD? We have no position on in there.
Well, there you go.
It's up a lot today. PDD. You know me. This stock has been exploding. What does he want to do? Sell the 9130. Oh, filled in CrowdStrike.
Nice. PDD made lows around 80-something back in the beginning of April. It's now 109.30 with 110.
91.30. We're just going to test the markets here. The markets are a little bit wide. Not the worst, but not the best.
Mm-hmm.
I can't tell. They look like they're all over the... Oh, partial fill. Let's just leave it in for a second, see if we get the balance. We got a partial in PDD at 335, which is pretty good because I'm offering at 333 and not getting any more. Let's go to the next slide. That's Jack from Philly. Thanks, Jack. Let's go to the next one is /CL from Singapore. CL's trading near its low with the trade war, blah, blah, blah. Maybe a 20 Delta strangle for June. You know what? We did this yesterday and we doubled up. We are, they just hit CL pretty good. We actually have this position on. Currently, we're short the 54 puts and the 62 calls. I'm gonna roll the 62 calls down to 60 and a half. So we'll stick with that. The 60 and a half calls and the 54 puts. We kind of got that on like at our limit in crude oil. Filled. Okay? So that's like a little bit of a skewed long strangle. And
in oil?
In crude oil, yes.
Got it. And PDD, you got a partial, Tom.
I know. I'm offering it lower and I'm not filled.
Maybe if you're nice with your co-host, you get filled next time.
What's next? GDX, AJ from LA. Neutral on GDX after pullback from the top. How about, what's gold doing right now? Down, up 30. How about the 40? I wonder, AJ, you ever made any money in GDX? Because I sure don't. That is such a damn hard stock. 42 puts, 55 calls. This is a cheapie at 107. I struggle with this sucker. That's all I'll tell you. Filled at mid price 107. PDD I just went down on and cannot fill that anywhere. Trying to fill it at 331. I think I'm going to have to just take the partial for now and leave the rest of the order working. What's next, John? Oh, okay. Netflix, we sold a strangle. XOP, we sold a strangle. Nike, we sold a strangle. 6J, I passed on because I'm already long. PLTR, we did a double ratio spread. CrowdStrike, we did a skewed iron condor. Tesla, we passed. PDD, we sold a strangle. We only got a partial fill. Crude oil, we already are short a bunch of stuff in there. And in GDX, we sold strangle. A lot of strangle sales today. But we covered a lot of earnings plays on the opening. Everything was going along swimmingly until Microsoft decided to take off today.
and the same yesterday, right?
Hate that stock. Hate everything about that stock. Yes.
Good job out of you, Sadnov. I have some breaking news for you, a Derby breaking news, Sadnov. It's being reported by Taiwanese sources and others from other countries. Grande, the horse, is a scratch with a foot bruise, Sadnov, and our own Sas Grande is also a scratch with a self-inflicted gout. That is correct. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with
I'm not watching. I'm not watching the Derby now.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes! So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
people are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live, my friend, with Market Measure.
I'm ready. It's the final piece.
Let's do it.
It's the final piece to the puzzle.
It's the final countdown.
It's the final piece to the Kelly Criterion puzzle that's been driving me crazy.
Now, isn't Kelly Criterion more of a stock formula here than option formula?
Yeah, but you can you can use it for more stuff than that. But yeah.
Let's take a look at what's moving this market right now. Starting off, Meta up 19, Costco up 18, Microsoft up 13. That's the thorn in your side. Netflix up around 9, Adobe up around 7. On the downside, Sadnov, just looking at the NASDAQ 100 here, TTWO down about $19, Team down $17, and Apple down $8.50, Amazon down $1.
I have this feeling that we're gonna wonder tomorrow why we didn't buy Apple today. But I took it off for earnings. I'm not, no regrets.
Mm-hmm. Mm-hmm.
Let's see what we got here, John. Kelly's Criterion, the common questions answered. We got so many questions that we asked the research team, you know what? Let's have a little fun with this. Let's just answer a bunch of questions. Go ahead, John. Next slide. So we received numerous emails with questions about the Kelly's analysis that we did to help traders who want to apply this methodology but aren't familiar with the concept. We've compiled the most common questions with our answers. All right, here's the formula. Mm-hmm. Let's go to the next slide. Here we get into the questions. So the first question is there a quick way to determine if a strategy can be profitable long-term based on Kelly's calculation? So, and of course, the research team did this to me just to torture Tony and myself. If we can set F to 0 as the threshold in this formula and evaluate whether our received odds exceed the theoretical requirement for a given pop or success rate. In our Iron Condor example, let me just go through this really quick.
Sounds I mentioned TTWO. It's down because Grand Theft Auto not coming out until 2026. Sosnoff, I guess those developers aren't developing.
I have never played Grand Theft Auto.
Oh, you should, because even a guy like you can go into like a strip club there.
So, looking at this formula here in the Iron Condor example.
Well, that's the simplified formula, Sosnoff, as you know.
I know, but I'm just trying to go through the winning rate and the losing rate. The odds must exceed point. This is interesting because essentially what they're saying is you can plug in the success to get to a long-term success rate. You can plug in the numbers and then you can play with the numbers until you get to a long-term until where you get to a positive number to tell you if you'll be profitable in the long run. And it looks like in this case, you got to get to that 85% number.
That's correct.
Let's go to the next slide. That's why in our previous example, when the odds are greater than 0.176, the strategy should be able to see a positive Kelly, and as a result, a positive long-term performance. That's essentially kind of how we just explained it. Let me think about this for a second because I want to. Kelly turn.
What are you looking to figure out here, Tom?
I'm looking how to figure out odds from pop. And I'm just trying because I'm trying to figure out how do I convert odds to pop?
Isn't well, probably if profit's only making a penny, right?
Yeah.
So if it had an 80% pop, for argument's sakes, and we're talking about a penny here, wouldn't the odds be 8 to 1 in your favor? I mean,
yeah, but then I don't understand how Kelly only comes out with 10 with the mean return. Let's go to the next one. I'll come back to this one. I need some help on this one. When managing positions at 50% profit, should I reference POP or P50 on the Tasty Trade platform? What about managing at 21 DTE? The P, which is the probability of profit in the Kelly calculation, should match the way we manage our positions. If the position is managed at 50% winners, P50 is better than POP. However, the realized success rate is even more accurate than the theoretical POP or the P50. Traders can find the success rate of managing in 21 days or any other mechanics by running the look-back program on the Tasty Trade platform or from our market measure. So the probability of profit, the P, which is probability of profit, that's the POP, in the calculation of Kelly should match the way we manage the positions. If the position is managed at 50% winners, the P50 is better than POP. Okay, that's interesting. I don't really do it that way, but that's interesting. Let's go to the next slide. Does the Kelly number change based on the fluctuation of the bankroll, which means the net lick in your account? And the Kelly represents a percentage of capital allocation of a certain portfolio. In our analysis, we keep this number constant, but the net lick can fluctuate after trading. Keeping the Kelly at the same level, we should expect to see more committed capital per trade if the net lick increases. I think that's the way we do approach this business all the time.
Sure.
We increase capital committed if our net lick increases. Let's go to the next slide. I need clarification on how the payout and odds are calculated. How are the net odds received calculated? Okay, this is what I didn't understand from the prior slide. So this morning, we looked at XSP Iron Condor. The POP was 50, the P50 was 72. The max profit, the max loss, assume I take profit at 50%. P&L is B.5. Let's go to the next slide. Check out how the odds are calculated. A, the odds are the expected win divided by the expected loss. Okay, that makes more sense. It's better to use the realized average win versus average loss in this calculation. If We get these values after analyzing the long-term data. Using the max profit or the max loss is not as reliable because the premium selling strategies, we often experience partial winners and losers. So for probability, we should either use the P50 or the realized success rate when managed at 50% winners. The odds are the expected win divided by the expected loss.
Does that clarify it for you? Does it make it any better or
because
worse?
Because the expected win, yeah, it does. So the expected win is 50% of max profit. So if you sell something, let's say for $1, the expected win is 50%, right? So you divide that 50% by whatever the expected loss is, which is just, let's say, in the case of an undefined risk trade, it's 2 times, right? So the expected loss, let's just say, would be $2, and the expected profit would be $1, would be 50 cents. Then your odds would be 25%, right? Is that right?
Half of the 50%, sure. Mm-hmm.
Okay. So if you collect $1 in premium and you expect to make 50%, then your odds would be 25%. Which is actually what makes sense. Let's go to the next slide. You used an iron condor as an example, but how do you adjust for jade lizards and strangles? As long as we have the pop, or the success rate, and the B, the average expected win-loss, we should be able to calculate the Kelly number. These inputs for most option strategies, including jade lizards and strangles, are already known. We don't necessarily do this, but I guess we're showing we're showing you from the retail side, essentially how you could use it. Because Tony said before, could you use this for options or is it just for stocks? And the argument our research team is making is, sure, you can use it for options strategies, as much. Sure. But it's not as simple, obviously, as you can see. Yep. Let's go to the next slide. You mentioned the ruin rate at 0. Does that mean the strategy is completely safe from losing all capital? Theoretically, if the Kelly number is positive, traders should be able to avoid depleting their capital. However, perfect sizing is difficult to achieve in real trading. Also, a streak of losing events is possible. These could cause the portfolio to achieve expected return in a longer period of time, but normally we show the median or mean return by running between 100 and 1,000 trials in a Monte Carlo simulation. Yeah, it always scares me when we say the risk of ruin is 0, because I never understand that myself, but I guess that's just a statistical thing, because it shows up 0 in between 100 and 1,000 trials. On the Tasty platform, we do use Monte Carlo simulation for our P50 numbers. So it's all, integrated. Let's go to the next slide.
Yep.
What's the importance of using a fraction of calculated Kelly in real trading? I don't know who's getting these questions because I'm not answering these. Maybe you are. I have not been answering these. The Kelly number, what we call full Kelly, is the scenario to optimize the return without considering the volatility. In the following example, the half Kelly, 50% of the full Kelly, can capture nearly 71% of the optimal returns, only 38% of the volatility. Yeah, I don't really understand that. Let's go to the next slide. That's too hard for me. So in the sample below, with no stop loss control, we tried various Kelly fractions from 25% up to 100 by running Monte Carlo simulations. So this is the final part to that last question. And we looked at the various multipliers, and the 50% number that we use tends to be what we highlighted in green here as optimal.
And I'm being told ruin means your count goes to 0.
Yeah, it does. That's what it said in there. Your count goes to 0. But I don't understand, like, it makes me nervous to say that there's no risk of ruin ever.
Sure.
I mean, again, I don't fully understand it, but the reason it says that is because in the Monte Carlo simulation, it comes up as 0. Let's go to the last slide.
You're getting pretty deep in the woods here, in the weeds here, Sadnoff.
Yeah, this is very difficult for me. I was wondering how to use Kelly's approach to explore an optimal portfolio of option strategies for maximal profit. That's what Tony asked before. Does Kelly consider only one strategy can be applied to multiple positions? And right now, we only use Kelly to analyze one strategy at a time in a portfolio of without other positions. Multiple positions can impact the results significantly, such as the ruin rate. Analyzing a basket of strategies is much more complex, and more complex than we are trying to solve in the near future. Or maybe we can. John, is that the last slide?
Yes, it is.
If they had a slaughter rule, they would have called it in. If there was a slaughter rule, we would have exercised it. Yeah, that piece was really hard for us. I mean, I'm speaking for myself, I should say. It was really hard for me, and I didn't do a great job explaining it because I didn't really have time to look at it prior. I'm not a mathematician.
My best Kelly stories come from you remember Michael Kelly from the Florida side, the Morgan Stanley broker, when he would come in and buy a crap load of puts, and then the market would go down shortly thereafter. That was some of my best Kelly stories.
Rest in peace.
Rest in peace is right. We'll take a quick 90-second break and come back. Boy, you're on your game today, Sadnoff. We got more Tasty Live immediately following these messages with oh, joy, your friend of mine, Mr. Scott Sharon, taking your phone calls, 855-238-2789 or 855-BE-TASTY. We'll open up the phone lines. We'll put the number below. Give us a buzz, because Scott will get very sad if you don't call in. We'll be back in 90 seconds. You can ask him a question.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac. in a peaceful transition.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend, and you know what that means. Enough out of you. Tasty Trade World Headquarters, your friend and mine. He's taking phone calls today, 855-238-2789 or 855-BE-TASTY. The phone line should be below in just a moment, and phone lines are open with 4 or 5 lines open. The one, the only, Mr. Scott Sheridan from the Scott Sheridan Studios.
See,
and people can call in from Taiwan and Thailand for free. 855-238-2789 or 855-BE-TASTY.
Hey, do you guys you want to know what we're having for lunch today?
I know you're having for lunch today. I don't like it. Velvet taco.
No, they switched it. We're having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
That's kind of funny. I did miss the whole thing, but that is kind of funny. All right, let's be friends. Come on. I know that there was an issue this morning, but we're going to move on from that. But I do have to go back and watch because it's going to be hysterical. So, but I'll do that on my own time.
Tom, I gotta give Tom credit. He slow played me. He gave me enough rope to hang myself. I hung myself high from the wall. He did a good job. It was very similar to earlier this week when he asked me if April 29th was the end of the month.
He's going to be stewing all week, all weekend. He's going to be planning the war room in his house, like his little office. Okay, the war room is going to have like, how do I get back at Tom? He's gonna have a whole.
You're in the crosshairs.
Yeah, he's gonna have a whole game plan laid out for next week. You know, going to come in the studio. There's going to be an explosive device or something. He's going to lay out.
There's going to be peanuts in your iced tea again. You're going to drink it and choke on it. And something. The whole thing's coming back.
Something.
I would go with a food taster if I were you.
Yeah, something. Something. I'm just saying.
Well, you know what? Since you're not gonna do it, and he's one of your helper monkeys, I'm gonna do it. Happy early birthday to that's right, Josh. We know him as Mr. Wheels on Sunday. Sad enough, it's his birthday. I know you're going over his house. I know you're bringing him a Tom Carvel ice cream whale cake, one of his favorites. Happy birthday, Josh.
Not only that.
Birthday. Wait a minute. So I have a question. When I say happy birthday to Elizabeth, I get what are you, The View?
Yeah. What are you, The View?
It's good to be queen.
I don't do happy birthdays. I don't do birthday shout outs.
You don't do happy.
Yeah, right. You don't do happy. That's exactly right.
Oh my God. I have a big smile on my face today.
Okay, tell me why.
He just mentioned it. We're having Thai food for lunch today. Didn't you hear him?
Okay, that wouldn't be the reason.
That's the reason.
That's funny. Okay, I didn't watch. Go ahead. I didn't watch the hockey games last night.
They were great.
Did you? That's what I heard.
You got it, Boo. You got to start doing this.
There's
the phone number. They just put it down there, 855-238-2789 or 855-BE-TASTY. Call in. I got 4 or 5 lines open. Don't make Scott sad.
So Game 7, Sunday, it doesn't matter what the sport is. Game 7 of anything is amazing. So I will do my best to watch that one. Oh, but thanks for watching one game of hockey in the playoffs.
Yeah, and calling yourself a fan. It's embarrassing.
I didn't say I was a fan. I didn't say I was a fan. I call it the way that it is. I enjoyed. Listen, shouts out to them. It's just I'd rather watch basketball. By the way, did you see Brunson, his game-winning shot?
I told Tony that first thing I got in this morning. I go, you know what? I was so rooting for Detroit, but I got to tell you, Jalen Brunson is a freaking stud.
Stud. He did that. He broke that guy's ankles. Okay,
he broke his ankles, but more so, he is the guy. He's the guy in the league that just you have to give him the ball at the end of the game. Like, it doesn't matter.
So you know he's local. He's a homegrown. You know that?
Are you kidding? He sat next to Anton in high school.
Come on.
Anton said he used to let him copy off him.
Oh, are you gonna
Anton let Vinny copy off him too.
I thought you were going to tell me that Anton could school him on the court. I don't think so.
No.
So I think he won. I think he was Mr.
No, he can't.
Basketball.
Although Anton did cost me $20 against Sosnoff in Papa Shot. I will give him that.
But
we didn't think he'd make 2 out of 10 or something like that. I think he made 3.
But he told me, he goes, Jalen Brunson used to sit next to me in high school, and I used to show him the answers, and we were all good.
I mean, he did it at high school. He did it in college, and he's doing it in the pros.
He said he was the nicest.
He went to Stevenson, I'm being told.
Right, Stevenson. That's exactly right.
He said he was the nicest kid.
Yeah, it's awesome.
And Anton,
you know who else went to Stevenson and plays a mean game of basketball?
Jules.
Josh, whose birthday it is on Sunday.
Josh went to Stevenson?
That's what he tells me.
Can you imagine how annoying Anton must have been in high school, too?
Yeah. Yeah, he must have been bad.
Yeah, he must have been bad. So he must have been bad, but you know what?
I don't know, though, because it's possible that he was in a shell and you cracked that shell and pulled him out because...
Not possible.
I think so. No, I think so. He might have been the quiet type that stuck to himself. You ruined him.
I don't remember how good Jalen Brunson was in high. I don't remember Jalen Brunson in high school. No, I don't remember him in high school.
But in Villanova, I don't either. But think about that team that they had. I think there's 4 guys in the NBA.
Yeah, but the Knicks made one of the great trades of all time. I mean, didn't they get Jalen Brunson for who?
Oh, I was going to say Towns. They traded with Minnesota. I think they drafted Brunson, didn't they?
No.
No, I think they did. They did trade for him. Dallas, maybe?
Yeah, Dallas. They got him from Dallas. I don't know if it was Porzingis or something. They made it. They stole him.
Yeah, I think that's right. God, it really hurts me to say you're right.
I know. It pains me too on a day like today.
Yeah, we're going to have to investigate that one. I'm going to say this. You could be right.
No, they traded with Dallas and got him. I'm 100% right.
But when he whatever he did, that crossover, the defender literally almost fell. It was hysterical. And then no question about it, just silky 3-pointer. And then to not get a shot off at the end for Detroit. Oof, you're a Detroit fan. I feel for you right now. Although I don't really feel that badly for all the suffering we went through with Detroit in the 90s, 80s, so we'll leave that alone. All right, let's get to some business. And then
855-238-2789 or 855-BE-TASTY. I still got 4 lines open. Give us a buzz. Go ahead.
All right, top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you, number 15. Hood at a 24. For everybody else, Apple at a 29, Amazon at a 27, Tesla at a 35, Nvidia at a 31, PLTR at a 63, Microsoft at an 18, Meta at a 21, MSTR at a 19, Reddit at a 37, Roku at a 29, GLD at a 48, Airbnb at a 28, Netflix at a 23, TQQQ at a 36, and number 15 for Tom. Hood at a 24, rounding out the next 10. Nike at a 37, TLT at a 36, AMD at a 37, AVGO at a 39, HIMS at a 64, and UNH at a 52. And I hate to do this. I'm just setting myself up here. Tom, Nice call on Apple.
Well, I mean,
on a day when the E-mini S&Ps are up 74, Apple is down 7.5.
I said 207. But whatever.
Let's not get carried away. Okay.
I was off by $1.
Now what is this? What do we got going on here? What is this? What is this?
I didn't put this up.
I'm sure you requested it, and you know, technically speaking here,
don't try to defend yourself and say that you might be slightly right.
Hold on.
This came from Jason for sure.
Hold on.
No.
I'm
going to caution you. Go ahead.
I didn't spell Thai food when I talked about it. So I could have been talking about food from Taiwan.
You'd be better off dropping your defense right now.
Me too. And just put yourself at the mercy of the court and say, okay.
I might not know how to spell which one from Thailand.
Throw yourself. He's right.
Or T.
Throw yourself at the mercy of the court.
Mercy. I'll be like William Wallace.
So, in fairness, it's funny. I've never asked Jason about this. To the best of my knowledge, I've never had Taiwanese food. What is it? Here comes Tom. I know Tom's going to.
Well, you should have watched. You should have watched the show earlier because we had this whole discussion on what it is.
So what is?
He likes
Wow Baos.
He likes a meat soup, like a meat soup.
Oh, meats like a hot pot?
No, not really. It's like a version.
Oh my God! Now Tom's an expert on what Jason said that he told him, which was something Tom's never had before. But Tom's going to explain to you what it is. Go, Tom. Tell us what it is.
Like, we've had food from that region, but not necessarily Taiwanese food.
You know what? 855-238. I can't.
I mean, you've had food from Macau. You've had food from Macau, so it's similar. Like, it's just.
But that's Chinese.
It's a version. It's not Chinese. It's a version of.
What have I had from Macau? I don't know.
Virgin.
How do you know I've had food from Macau?
Because there was that great restaurant in Chicago from Macau that it closed down, but you've been there before.
I don't remember. So now I got to ask Jay Chow, what is it? I got to ask, like, Taiwanese.
Hey, have you ever had a Wow Bao?
Yeah.
There, you've had Taiwanese food. You got it.
No, that's the wrong answer.
Yeah.
Everybody has a version of a dumpling. Everybody.
Jason came on and said that.
No, he said they had the version with the cilantro. They sell it at Trader Joe's.
Who are these virgins you keep talking about?
Listen, you better stick to ravioli. When it comes to something in a pocket, you better stick to ravioli.
Fair enough. How about a tortellini?
No.
It's not a pocket.
Pocket.
That's not a pocket. That's true. It's rolled pocket. Okay, good point.
God, Scotty, you're so silly. What's wrong with you? You don't even know your foods. Blah, blah, blah. New Mexico, Mexico. Taiwan, Taiwanese. I mean, seriously. Yeah, get on him, Scott. He doesn't know what Tom, he doesn't know what a pocket is. Go ahead, tell him.
Somebody's a little hard ass.
855-238-2789 or 855-BTASTY. That's the phone number to call. Give us a buzz. I got 3 or 4 lines open. Jersey, Chris in Jersey. What's up?
Is that me? Can you hear me?
Yes, sir. Yes, sir. Can hear you.
Oh my God, dude. Oh man. Well, anyway, I just wanted to tell you guys I love the program. I think you guys are hilarious. You know, all you guys, you know, and thanks, you have such a knowledge base. It's hard to keep it all in your head because you know, I'll be frank. I don't think you give Tim Knight enough time, but you know, but all you guys are hilarious, and I just wanted to ask. This is kind of a silly question, but I just wanted to ask that song that like. Put your coffee down your throat hole. It's hot. Is that Vanetta that sang that?
No.
Yes, it is. Yes, it is. Since I've been wrong all day today, I'll continue. It is Vanetta. She has the voice of an angel.
No, he knows.
I know that, John.
He knows. It's not Vanetta. We hired a woman. She's actually Taiwanese.
Who was Taiwanese, I believe.
No, she's Filipino. She was Filipino. But I couldn't resist.
Close enough.
She was Filipino. I
knew she was in the region.
She was she is a professional singer, and we hired her to kind of improv that song about 14 or 15 years ago, and we've kept it ever since.
No kidding. All right, great. Hey, if I ever passed my Series 7, you'd hire me?
Sure.
100%.
All right.
Wait, just so we're clear here, they don't run the brokerage business, but happy to look.
My buddy Danny.
Yeah, Danny.
He's cancer-free today.
Beautiful.
And,
congratulations.
And Victor Jones, Ilya Spivak, Chris Vecchio, Tim Knight, Batista, all you guys. I love you guys, man. And you really just thank you, man. All right.
Thanks.
I'm going off. Thank you.
Appreciate it. Scott, since you made fun of me, we dropped all the phone lines. And she was Korean, Sosnoff. She wasn't Filipino, but doesn't matter. Like, it's okay. I'm not going to correct you. You Filipino, Korean, it doesn't matter. You've only been told the story 100 times. You actually hired the lady. It doesn't matter. You're still right, Sosnoff. I am not. You are right. Filipino, Korean, same thing.
Mexico, New Mexico. Got it.
Mexico, New Mexico. Scott, people don't like you making fun of me, so they dropped the phone call. So we have phone lines open, 855-238-2789 or 855-BE-TASTY. That's the phone number to call. Give us a buzz. Get your question answered. Sosnoff?
Yes, sir.
What are you doing? Pay attention.
I'm just thanking people for probably the funniest 50 or 60 emails I've got in so long. It makes everything in life worthwhile today. Oh, and don't worry, I'm not sharing any of these with you. These are going to the grave with me. These are too good.
They email me too. It's fine.
They email you
like other people.
They email you the fun stuff. Like, don't worry, Tony. Everything's going to be okay. They got pills for that too. But I got the good stuff.
Okay. Well,
I need to see some of these emails. Right.
What?
I do need to see some of these emails. Have you been to, I think you have. Well, no, maybe you haven't, because do you still hate Restoration Hardware?
Oh my, what? I've been to the restaurant. Yes.
Yeah. Okay. It's a really pretty room. Food's very mediocre.
Yeah,
it's
agreed.
a really pretty room.
It is a beautiful room.
Right?
Yep.
It's a beautiful room, but the food's...
Yeah, it's a beautiful room. I've been there a couple of times. But do you know, if you buy a couch for $20,000, you don't have to wait online.
They give you free dinner?
No, they don't. But they move you to the front of the line.
Wait, do you have to buy it before you sit down, or can you buy it and then go like a couple weeks later?
You got to show your receipt.
No, you have to go the night you're there.
Are you still not on speaking terms with them?
No, I mean, I will go to the restaurant. I just won't buy any more of their furniture. It's such a
right. Didn't you have a problem? Right? Didn't you have a problem in Michigan or something?
I mean, yeah. The person I'm married to had a problem. They
Here it comes. It would never be your fault.
I wasn't even there.
Nice stuff. Right? Yeah. How can I be involved?
They delivered used furniture. It's usually a problem.
Oh, that's bad.
Yeah.
It was in fairness, it was
gently used.
It was gently used.
But sold as new?
Yes, we didn't buy used furniture. Yes, it was sold as new.
I don't know. Sometimes
how goes buying used furniture, not you. I'm going to go to Oregon. I got Justin in Oregon. Thank you so much for calling in and saving me. Justin, what's up? Just in time.
Good morning, guys. How's it going?
It's good.
Good. How you doing?
So I got a quick question for you guys. I know Tasty Mechanics is typically selling premium. I've got a couple of long calls and some long puts that I've been trading, and I'm just curious a lot of times I'll put these trades on and directionally, and they'll become profitable, and a lot of times will hold them too long and will lose a lot of my profits, and the trades will turn into losses. Is there a great window where these trades should be managed similar to the tasty mechanics?
Well, that's kind of the issue. Not kind of the issue. Here, it's almost like a hedge trade when you buy options. When do you get out? We don't have any mechanics for like 1 time, 2 times what you pay, 50% of what you pay for that option, 10% of what you pay for that option. I mean, Tom and I, it's not our style, but we would look to close it sooner rather than later because of the theta decay component to it, or look to, if you made a good trade where the stock went in your direction, look to sell something else against it. Let me give you an example. If you bought the stock's 100 and you bought the at the money 100 call and the stock goes up 50 cents, a buck or something like that, sell the 105 calls or the 104 calls or the 110 calls. Sell something to make it a call spread so your theta decay is cut by some degree, whether it be 25, 50%, something like that. Because the whole process of when you're long options is when do you get out? And you seem to stay, it appears that people stay in it a lot longer. They have initial profits, whether they be small, they don't get out in time, and then the theta decay happens or the stock goes in the wrong direction and it becomes a much bigger loser.
Yeah.
I don't have a good answer for you.
Okay. Yeah, that definitely is kind of what's happening here. And it seems like it's always nearing a couple days to a week to expiration, and then you get a 0.5% move or a 1% move in the underlying, and you go from a multi 10% to 100% profit to a loss in a couple hours.
Right. That's unfortunately
the problem with buying premium is if you're wrong, you have no chance. It's where if you sell premium, you can be wrong and still be okay. So that is an issue. And my only other add to that is if you have more than one contract, if you have multiple, you could also consider. I agree with Tony. You can put a vertical on, which would be great because you take in some premium. But you could also consider selling if you have 2 or 3 or 4 or 5. You could sell 1 or sell 2 to reduce the overall basis on the other ones.
Yeah, that makes sense. So one quick question for Tony in regards to what he was mentioning about selling one. So let's say I sell a call vertical on SPY at 565 or whatever. It hits 565. It's at 50% profit or whatever. What if I just turn that into basically a risk-free butterfly by selling the same strike, short call, and then
You certainly could. I mean, you're looking at it as taking the potential profit that you have and trying to hit a home run with a butterfly that needs to be closed right at that short strike. So you're taking a high probability trade that has a profit and turning it into something else which has a lower probability of success, much lower probability of success with a higher payout. I would prefer you do it if you had, let's say a 50% profit and you can do that spread for 25 cents. So you're still keeping some money in your pocket. Yeah, I have no problem with it. It's not something I do all the time, but I have no problem with what you're saying.
Okay, that makes sense.
Yeah.
Cool.
Yeah.
Well,
you got it, man. Thank you so much for your call. I do appreciate it.
Yeah, thank you.
We're going to go to, appreciate it. We're going to go to Amanda in Michigan, Iron Mountain, Michigan, to be exact. Hi, Amanda.
You guys have no idea where that is, do you?
I believe it's in Thailand.
Iron Mountain, Michigan.
Is it Iron Mountain where Iron Mountain, the storage shredding company, whatever, isn't that from Iron Mountain, Michigan?
Gosh, I don't think so. I don't know. It's about an hour and a half from Rhinelander. It's right across the border from Wisconsin. So
you were right,
Canada, basically.
How far from Detroit?
Oh gosh, 8 hours.
Okay.
She's right next to Canada. I mean, over past Rhinelander. Yeah.
That's far. That's cold. What does it warm up in like in August?
We're about to get a text from Frankie. He's going to say, what's wrong with you guys? I've been there 100 times.
Anyway, I actually called when you guys didn't have anybody because I felt like you were just drowning there. Nobody wanted to talk to you, probably because nobody wants to hear about Thailand. But I do have a question. So what do you do when you're directionally right, but liquidity is just kicking your butt? So I have a June 420, 440, 460 call butterfly on CrowdStrike. And I was a moron because, like, I usually only sell premium in CrowdStrike because the markets are terrible. So how long do you sit there before you're just going to take it off and not get nearly as much as you should have because you're right, but you can't get out?
Sosnov's actually a butterfly expert. Tom, why don't you answer
No,
this?
but that...
I have never seen him put on a butterfly.
Never. But
Amanda, don't call me out today. I'm fragile.
He's very fragile. But you know what? Sometimes when you have like I did a trade in CrowdStrike today, and I agree with you. It's not. It was the markets were funky. They were wide. You know, we just left it in until we got filled. I think you move it. You just follow. You track the center price. You track the mid price for a little bit. And then move it a couple of pennies off the mid price and just leave it in all day. That's the only way you can get out of that stuff. And hopefully the stock, moves around enough that it theoretically it fits somebody.
So if it was farther out of the money, would you ever consider like stripping the bottom call off and turning it into like a double vertical? Okay.
No, not really. If it's is it a true butterfly, like 1 by 2 by 1 equidistant away?
Correct.
Yeah, we wouldn't break. I mean, I can't speak for Tony, but I don't think that either of us have ever broken up the butterfly like that. That's kind of one of those trades where, we'd be very reluctant, especially if it's out of the money, we'd be very reluctant to touch it.
Agreed.
Just get out as quickly or with as much credit as you can. Just keep working it.
That's right. Yeah. If you have to move it 5 cents off mid price or 6 cents, it's no big deal. Just move it. But, you're not going to get filled at mid-price unless the stock... I mean, CrowdStrike jumps around. You might get lucky. Who knows?
Yeah.
Yeah, I figure I'll wait a little bit, but that CrowdStrike is, I think, really overextended, and I want out of this butterfly.
Sure. And butterflies like that, is it a June butterfly?
It's a monthly expiry, yeah.
Yeah, if it's June monthly, at best it's going to move a penny or two a day. That's it. At best.
Yeah. All right. I'll just keep massaging it till I can get a fill. Thanks, guys.
Okay, sure.
Thank you. Very good. Appreciate your call, Amanda. We'll go to Jersey. I got Rob in Jersey. It'll be our last call. What's up?
Thanks for taking a call, Tony. Gentlemen, good to speak with all of you. And Scott, I'm glad you're there as well. The question I have is on the new account and specifically promotions that have been run for the new account bonus that I know ended this year in March. I feel like it was on for a number of years. And then coincidentally, as of April, I had a friend who approached me about managing a 7-figure account for her. And in doing my due diligence, I wanted to see if there was a way to still get, or if you're going to run that promotion again for the cash bonus on new accounts.
Scott, I know you were breaking up, Rob, in the beginning, but I think Scott got it.
Yeah, Rob, it was really jumbled until the end. If you're asking about the bonus, the tier bonus offer that we have for new customers when they fund, is that correct?
Yes.
Correct.
Okay. It's coming back, I think, next week. So we temporarily paused it. It is returning. Don't hold me to this one. You can send me an email, scott@tastytrade.com. But I was talking to our marketing team the other day, and I believe it's next. The game plan is next week. If it's not next week, it's the week after.
Okay. And you can always send an email to Scott at tastytrade.com.
But go ahead, Rob. Go ahead. What was the question? Do you think you should? Yes.
Yeah, no. So I wanted to open the account now. Is it something that it would be retroed? If in fact you offered in 2 weeks.
Probably not. No, the answer is going to be no. We're not going to go back and make it retro, but I will do it for you. So no problem. You go ahead and open the account. It won't be automatic. I will take care of it. I will just need for you to send me an email once the account is actually funded, and I'll take care of it for you. But it won't be for everybody in this period where it's been closed. We're not going back and giving them the bonus. It will be starting again. It was just a few week pause, but it's coming back again. I'm happy to do it for you. So go ahead, open the account, and just send me an email once it's funded. And once we start the program again, you're in.
Wonderful. Okay, gentlemen, thank you so much. Have a great day.
Thank you very much. Appreciate your time and all your support. His phone call was breaking up a little bit because he was from Taiwan. We're going to take a quick.
I have to tell you one thing. I didn't know this, but I need to just mention this. So Chris, one of our viewers from LA, sent me an email and said, "Here's a great Taiwanese restaurant, and here's the crazy thing: it's my son's favorite restaurant, and he's taken me there, and I didn't even realize. So I have had like the best Taiwanese food." In LA.
Of course, yes. You know what? That's the only way the show
What
could
can't
end.
you do, Sadnov? What can't you do? What haven't you have? What haven't
Anyway,
you
a
done?
shout out to the restaurant.
Why don't you just
A shout out to
cars? You've done everything.
A shout out to Little Fatties. It's great in LA.
Okay, well, now with a view. All right, well, thank you very much for your time, Scott. Tom, I don't know what to thank you for. Thank you for everything, Tom. Thank you for the air that I breathe. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. How you doing, Jenny?
Great, Liz. Great. How are you? We were just laughing with John about the Thai food, Taiwanese food. I honestly didn't know the difference. I was with Tony.
I'm with Tony too. I had no idea.
No idea.
But I'm glad they solved it. Now, I do thoroughly enjoy Thai food. I love a good pad Thai.
Well, you know what I was happy to see? I was happy to see Jason on. I'm glad they brought him in. It was fun to see him on air.
Oh, he's the best, right? He's so fun. I love Jason. Yeah, he's good.
So it was nice that we had an expert in the office.
Yep. It's always good to have an expert in the field. Do you know, would you like to, Jenny? Oh, I have to. Apparently, they don't give birthday shout outs, but I'm going to give a birthday shout out. It's Josh's birthday on Sunday.
Okay, shout out to Josh on his birthday. Happy birthday, Josh. But huge shout out to you and your family. Annabelle is turning 17 tomorrow. I cannot believe she's 17 because in my mind, 17 just sounds like older than 16. You know what I mean? It just seems old.
I am 16 going on 17 is real. She's saying in the studios, it is. It's definitely older than I like her to be. I'd like her to be a little bit younger, but that's okay. We're excited. It's going to be fun for her birthday. She's super busy. I probably won't even see her. I mean, I don't even think I'm going to be able to post a picture because she's going to be gone most of the weekend for her plays and whatnot. But no, it's an exciting weekend. It'll be fun.
Yeah. When we started the show, they were so little. We would bring them to the studio. Poor Vanetta. We used to drop them off in Vanetta's office if they were sick.
Oh, Annabelle loved Vanetta.
I know. The kids love Vanetta. We'd be like, sick kid, they couldn't go to school. Vanetta, do you mind watching them for an hour?
This is pre-COVID, by the way. Pre-COVID. Yeah, that was before we had the studio at my house. Right. Because then when we had the studio at my house, we would just film from here and bring them and put them upstairs.
Yeah. So I can't believe that from this, as long as we've been doing the show, she was 3 and now she's 17.
I know, it's crazy. I know. Yeah. That's how long we've been doing it. It is.
I know. And we look the same age. We look like
we do. Yeah, we do, Jenny. That's spot on accurate. Do you want to jump into earnings? I feel like there was something else I wanted to talk to you about, and I can't remember. I'm just racking my brain.
Well, let's take a look and manage our earnings trades from yesterday. Luckily, this account didn't suffer the blow that I suffered because I had a pretty big position in XYZ. Why don't you pull it up? XYZ, gotta love it, down 1270.
21%. I mean, that's a big move. Now, the volatility was pricing in a pretty big move yesterday, though.
No, not 1270 though, because I have long stock in here and I did a downside ratio spread to protect my stock. My downside ratio spread was like 51.46. No. 59.54. That was it. It was
54, not 46. I was like, you're not in bad shape. So, sure it's 46.
So 54 was getting me to the expected move.
Okay,
so I think
59.54.
I don't know.
Look at your position because I would like to know. I know you have your phone right there. Just because I would like to know where the expected move was, and I know you put your shorts at the expected move.
Yes, I'm pulling it up right now. I did that ratio spread, and I'm pretty sure it was 59.54 positions and XYZ 59.54. That was my ratio spread.
Yeah, so that means the expected move was 54.
So I might have, and that would have gotten my break even to right around 49, right? Yeah.
49 or 50, yeah.
49 or 50. So, and I know that was beyond the expected move. My break even for sure was beyond the expected move. So it's definitely moved greater than the expected move.
Oh, wow.
Yeah, by a lot.
Well, we knew one of them was going to do that. Thank the Lord we didn't put it into this account.
We didn't do that.
But here's what we did do. Apple, I'm going to open all of them. The things that Apple, Amazon,
Reddit.
And Reddit. We did those. Okay, so those were our earnings trades from yesterday. We have quite a bit of cleanup today. We do have Kai's weekly recap, which I love, and it's a little bit above my pay grade, one of them. So a little bit above my pay grade, but
it's above mine too, but we'll do our best, and people could always go find those in the archives if they want to dive deeper into them.
Yeah, for sure. Okay,
let's take off our Amazon. Well, we're actually making money on it. It did not go up. We sold a put spread to buy a call spread, and we paid a 10-cent debit. So I thought this would be a 10-cent loss, but because that 192.5 has a little bit of value in it, we actually made a little bit of money on this, just a little bit. And I didn't expect to make anything on this because Amazon wasn't up, was it?
No, it wasn't up at all, and it's not up. So I'm just going to close these. I don't need to close that last one. Just because there's no bid on it.
Oh, yeah, right.
Wow, okay, we made it. We made a wee bit of money in Amazon. Okay, so
a little bit there.
Now, Apple's interesting. I'm going to wait on this one. I'm just going to, at least until the end of the show. Hold on, because go to Apple. I'm going to go to Apple. So let's go here. We have, I was pulling up a roll just to see. We could do that too. But right now, it's getting away from us. Apple's down 4%. We need it just above 205, which it's been there before.
So when we put this on, Apple was 215 because we bought the at the money call spread. So it was trading 215. We bought the 215, 217 half wide, 250 wide call spread, and sold that $5 wide put spread to pay for it. Now with Apple, it's teetering right there. I mean, if Apple closes above 205, this thing is a scratch. We don't really lose anything on it.
But right now it's $120 loser. I'm going to hold off. We're going to look at this at the end of the show and decide what we're going to do. I mean, I will be running around today, so I probably can close it later, but.
Pull up the roll. Let's just see. Do we take in a credit for that roll?
You do because of where it's trading, right? So you can go 7 days, you can go 14 days and sell the 205, 200, and you're taking in almost 90 cents.
Maybe we just roll it out.
Yeah, let's not play with it. Right? Or do you want to just wait until the end of the show? We'll do this at the end of the show. That'll be the last thing that we do, okay?
Okay.
And then these are just a little cleanup before we jump into everything else.
Well, and Reddit. You didn't do Reddit yet.
Oh, Reddit, yeah.
That was our other earnings trade.
And Reddit, we bought a debit. See, this is pretty interesting, too. We bought a debit spread and financed it with a put spread, and we got a 5-cent credit for it. This is an $80 winner. I think this might be wide markets because we needed above 125 to make the full profit on that
No,
spread.
But it's kind of like our Apple spread. Like the Apple put is right there, and that's worth $100, and our call is right there, and that's worth something.
Oh, I'm sorry. I'm in Bank of America.
You could see like it's right at our call. It's right at our long call, and that has value. So even though it's out of the money, it's right. It's got value.
It does. Okay, so
just take the $74.
Isn't it weird? It's got value, but it's got value, but we're closing it for exactly what we.
No, we put this on for a 15 cent credit.
No, I know, but the P&L on this call spread when you separate them, the market this doesn't know where your P&L is coming from, but as a package, it was going on as exactly a scratch instead of a win.
Because and so what we made the money on was the put spread. You see, put spread, like the call spread was trading the same as where we put it on,
correct.
But the put spread, we took all the money out of the put spread. But I would buy that back too, just in case.
I'm going to, because Reddit was very interesting because I'm going to go to.
I saw it trade as high as 138 yesterday.
And I saw it trade, and it opened as low as 111, which I think is crazy. Take a look at this. I'm sorry. So it opened at 120 and traded all the way down to 111.
After trading 138 in after hours.
Yeah.
That was crazy. I thought, Reddit can't stop, won't stop. I was kind of mad I didn't have a bigger position in Reddit, and now I didn't miss my chance. I can get back in. I sold more puts in Reddit today now that it's back down to these levels.
It's pretty crazy. But that just shows, you and I talk about this a lot. We'll look at things. Sometimes I don't want to see where the earnings are because it doesn't matter. It doesn't matter after hours unless you're going to do something with it, right?
Unless you're going to do something with it. Like if you have long stock, you could have, if we could have sold our long stock in after hours if we wanted to at 138 if we wanted to. Because I know you had some stock, I had some stock. We could have sold it at in the after hours, but we didn't.
But I was like, oh man, it's going to open up at 170. Part of the problem. Okay, so that's Reddit. That's gone.
So we made some money in Reddit. We made a little money in Amazon, and in Apple. We're down net. Our earnings trades are just about a scratch.
Yeah, but look at this. It's trading 205.07. This should, as the day goes on, right here, we would not be down $100.
I know. So like you said, last thing we do at the end of the show, we're either closing that or rolling it.
Yep. And so we've been rolling and rolling and rolling and rolling. We've had this on for 18 days. We keep rolling. This is a double calendar that you put on with TP. I remember this. And so we have been rolling. We've been taking in additional credits and like decent credits. So we're going to do the same thing again. We're going to roll to the 7 day. I'm also going to put on the put too. So
now, as it gets further away from our strike, like on down days, this has looked better. But as it gets further away from our strike, we're going to get less and less for the roll.
10-cent debit.
Yeah, at some point,
I think we got to call Uncle. Let's just close this thing.
We only have to close within the money.
The calls.
Yes.
Is that right?
Okay. Go look at our long, the 14-day long. There's 9 cents, 10 cents in it.
Yeah.
I would try to sell this for about 9 cents. Not debit. Yeah, you're on credit. Make sure.
I'm on credit. I just want to make sure. It's just so bad.
7, 8, whatever.
Well, I'm glad we got a second set of eyes on this because I was looking at this being like, wait a minute. So that was my first thing is I'm looking at credit. And to Jenny's point, she's in the long and you just cross the aisle and see what that put's worth. It's worth 9 cents. I'm going to go 7 cents and see if we can get filled.
Yeah. And just let that
Filled. Okay.
Right, where it was telling us we were going to have to pay a debit to close it.
Yeah, it's just a little bit of wide market when you need
market.
money. Okay, so that's the one thing you're going to want to do is take off anything that has the little money sign, and we will do that. But take a look at this. We've got 78%. This is only worth 11 cents right now. We're going to close this. I'm surprised we didn't have a GTC in.
Yeah,
We'll
and we can put a new one on in June if you want to.
I kind of do. There's still a 34 rank. It's American Airlines. Let's go to June.
Sell the 10. Just sell the 10 for 54 cents.
Excuse me.
But this is one of those positions where someone was asking about yesterday, smaller accounts. We're getting $54 and using $200 in buying power.
Yeah, these are good small price products with lower price products. Selling puts is the way to kind of jump in if you have a smaller account.
Mm-hmm.
I'm trying to glance down. We did have a short put in Marvell. We're up 50%. We should close that.
Right. And that's June. So 38 rank, that's June. And we'll just keep an eye on it, I guess.
And honestly, Jenny, I'd like to get back in these products soon. I think they have earnings. Do they have earnings coming up? No, they have earnings coming up.
They do. So
we'll get back into some of these products. But right now, going over the weekend, I don't mind cleaning up. You know what I mean?
Mm-hmm.
Okay, look at this, 1,800% in Roblox. So here is one that did work out. We bought a call spread and sold a put spread to pay for it, right? No.
Right.
Yes.
Yeah. And so finally, we had looked at this before and said, well, this is a $1 call spread. It should be worth $1. And it wasn't. So now we should be able to get the $1 for that. I would sell that call spread out. Any position I have like this where it's through the call spread, a $1 call spread, sell it for like 98 cents. We're not going to get $1.13.
This is wide markets. So we know that. That's why it's marking like over 1,000%. So I'm going to go.
I'd go 2 pennies below the spread width.
Let's see. Filled. Okay.
That's what I went through mine today, and anything I had that was like that, I would just go 2 pennies below the spread width.
I mean, just wheels fall off scenario. I'm paying a debit for this. I'm paying 1 cent debit.
And what do we have in Etsy? Because I saw.
Etsy, we've been in for a while. I saw that too. So hold on, I'll go back to it. Etsy, we have this put spread that we've been rolling, and it's still a scratch. But we're in June. We're in June.
At least Etsy is finally catching a bid. That's all everything I've been buying in Etsy. I've been I have never shopped more in my life in Etsy than I've been shopping lately.
What are you getting?
So since I've been on my Disney cruise streak, the stuff I've seen on the Disney cruise, Liz, is out of control. The little gifts people leave at the doors, the way the doors are decorated. The Disney Cruise Line is keeping Etsy in business.
I love it.
So I can make like the plaques on the cruise door that look like your stateroom number.
Yeah.
I had plaques made that are the same as on the new ship, on the brand new ships that are the like cabin door plaques with the stateroom number. I had them made that say the Andrews family. And then for anyone going with us, their family name.
Oh, that's fun.
Yeah. Yeah, so that's my latest Etsy purchase, along with these giant, I guess 3D printed replicas of the actual ship with then the cruise date and name and to put on doors of people on the ship. Like everyone gives surprise gifts on those ships.
It's super fun. I love it. So that's Jenny's single-handedly keeping Etsy in business, and I like it. But now that being said, I want to take off this is Jade Lizard-esque. We collected $1. We got 58%. XOP gone.
And did I tell you someone from our cruise that I don't know at all, but I put something on his door. He posted on social media, like, whoever put this on my door made my daughter's cruise.
Oh.
Yeah.
That's really sweet.
I know.
That is really sweet. I remember that when the kids were little when we were on there, and they would always do like pepper gifts. But you think it's gone?
It's gone totally bonkers now. Totally out of control. It's the level up of the gifts, the surprise gifts for the random cabins of people you don't know is gone to another level.
And that's why I love Disney. I just love all the Disney magic. You know what I mean?
Yeah.
Okay, so that's in there. UPS and U-Haul are the butterflied, but those are to the downside, so we just leave those. That's why they look like they're over 100%. So if I snap, we've got 32%. One of the additional put that we added is at 44%. Should I close that one? Yeah, might as well, right? It's got a 14 rank. So let's take a look at this. Snap now has a 14 rank. When we put this on, we doubled it up. I'm going to close at least one of them.
Close the 8 put, leave the 9.
Okay, so we've basically cleaned everything up.
Because the 9 was there. The 9 had been there. The 8 was just an addition. I think the 9 was a roll.
Yeah, the 9 was a roll. Okay, so we look pretty clean. I'm just looking percentage-wise, not dollar sign-wise. That looks good. Yeah. Let's jump into Twitter, and then we'll go to Kai Study.
Okay, sounds good.
So here, this fella, no trading for him today, out drinking Guinness in Manchester.
Oh.
Huh, I did not know Cupcake was from Manchester. And then I'm going to go top down because I think that was
very cool.
Okay, yeah, that's the first one in. Then Frank the Great comes in with our economic calendar.
Maybe he's just traveling out on the town.
Possibly, yeah. I wonder if he's from Manchester.
I don't know.
Pretty cool though. Okay, so this is Frank's economic calendar. I don't know what this is.
What from we choose replying? They're replying. Oh, okay. So affect autism. Now is that Daria?
Oh, is Daria?
So Daria wrote a book.
It is. There we go.
Yes. So, okay, Daria, so proud of you. Couldn't be prouder. She wrote a book. It's out there. We chose play, raising an autistic child to thrive and feel understood. I'm so happy for her.
Oh, that's amazing.
Yeah. So if anyone wants Daria's book, here it is. It's
that's
out
amazing.
there.
I love it. Okay, that makes sense because I was like, okay, I don't know what we're replying to, but you put the hashtag on there. That's amazing.
And for any newer viewers, we talked about how when we started this show, it was, so many years ago. Annabelle was 3. She was turning 17. Daria was one of our first viewers, and her son was in the hospital, and they couldn't figure out what was wrong with him. And so she spent so many, weeks, months in the hospital with Lucas trying to figure out what was going on and watching our show. And that's how we all came together.
Because he was the same age as Annabelle and Lily.
Right.
Yeah, so he was 3. He was 3 when they were 3 because they're 6 months apart.
Yeah. So now she has this book out all these years later, and we became dear friends just from meeting through her watching our show in the beginning.
Yeah, that's pretty crazy. And she's still kind of a backbone of everybody on Twitter. They still all kind of communicate with her now. And she's been busy lately, so I understand. Sometimes when you get a job, you can't be watching everything. But
she's got a book out there. I can't imagine how busy she is.
I know. Yeah, book tour coming. Okay, but then here's Mikey, our Polish warrior. So 2 peaks in SPX. This was yesterday, so we've gotten to everybody on Twitter, which was good. It's a light tweet day, but that's okay.
Hey, it's Friday. People are already out and about.
People are already out and about. I just want to give an update. It is now 10:24. The SPX, I did it again this morning. I'm following Jacob's study to the letter. I put it on exactly at 9 o'clock. It is 10:24, and it's up $120.
Okay, so let's take a look. Let's take a look at your strikes. I put mine on at 9:07. It's interesting. I put mine on at 9:07, and you put yours on at what time?
9 o'clock. Exactly 9
o'clock. So we could see how different the strikes were in just 7 minutes.
In just 7 minutes. I think the sweet spot is probably like 9:15 is my guess, is where I want to start doing them. But my strikes are, I have the 56.75, or maybe 56.80. Let me look. 56.80, 56.20. Those are my strikes.
Those are your short strikes.
And it's $30 wide. It was exactly the 30 delta, $30 wide, and I collected a lot.
All right. Well, I put mine on at 9:07, and I just sold the 30 delta, and mine at 9:07 was the short put was 56.35.
Okay, so you're up $15.
So the market was higher, right? It was in 56.35 and 56.90.
Yeah, so the market was higher.
Mm-hmm.
And you're a little tighter than I am. You're 2 strikes tighter, meaning yeah. So just 7 minutes is a big deal.
So but I got out of mine in 30 minutes. I took $125 out of it in exactly 30 minutes. Put it on at 9:07, got out of it at 9:37 for $125.
So you didn't put a percentage in? I just put my GTC in. So like I said, I'm watching it right now. I have a 25% GTC, which is, I think, a bit aggressive, because if I got $12, it's going to be like $350 again.
Yeah, I literally put it on, was getting ready, walking around, doing stuff around the house, walked by my computer and saw $125 in 30 minutes. I thought, that seems quick for $125, and I just hit the button, closed it.
But I think the reason that you're getting that much is because we're going $30 wide with a 30 delta. So, we've played with it before. Before, we would go outside the expected move and do $10 to $15 wide. That's going to take a little longer. When you bring it in and you're collecting so much, you can get out a lot quicker.
Right, as long as the market stays in the range,
or comes back in the range.
Right, comes back in the range.
Okay, so that's pretty good. I like it.
I kind of like that work, because I know by the time our show starts, it's a little late. And I know we had told our viewers, if anyone wants Jacob to look at something differently, we did get some feedback. I did send them to Jacob, and I know we have someone who's looking at putting them on multiple times a day at various times throughout the day. So hopefully Jacob will dive deep into that. But we kind of feel like...
And Jet Tucker does that. He does his tranches, they're different strikes, just depending on what time it is.
But his are all still pretty early. They're not like going on at 10:30 or 11.
No, they're about 9:15. They're literally like smack dab in the middle of where Jacob's study was. Thumbs up.
So I think kind of on our show, it might be a little late to do it. I don't know.
I think it is.
Yeah, I think so.
You almost missed the window, so it's kind of crazy. Okay, so I am going to go to, what do you think about this? Kai's Weekly Summary.
Weekly summary of market measures. I love it. That's why I look forward to Fridays, Liz.
I know, me too. Okay, Jenny, I don't know if you reviewed the tape. Did you look through this before?
Yes, I did.
Okay, this is the first one. Maybe I can lean on you a little bit, because first one.
I'm kidding. I'm kidding. That was a white lie. I'm kidding. I never looked at this.
Okay, I was going to say, because this first one, I'm going to encourage everyone. I'm going to say this right away. This is the first one. Number 1, Kelly Criteria, the growth formula. Please look through your market measures and find this. This has been a series that the boys have done for, I think, days and days and days now. And this one, Jenny, is when you start putting formulas. Hold on. When you start putting stuff like this up there, I'm out.
I see that F and the little symbol, and something else comes to mind. What the?
Correct. So we'll read through this, but I'm going to encourage everyone. There are 3 of these, so we're going to go quickly through this one, because once again, we're going to butcher it.
I'm going to say there's a reason I majored in econ and not finance.
Yeah. I mean, I don't know, but yes.
I did not love all these formulas and equations. So that's what's so great about our platform. You don't have to do the formulas in your head. You don't have to sit there with a pencil and paper and write down these equations. You don't have to figure out the standard deviation or the theta. It's all done for you. So we don't really need these. It's all done for us.
Yeah, but here is so the optimal betting size wasn't discovered through trial and error, but through a precise mathematical formula called Kelly's Criterion. Okay, and then it says when it was developed, but this is just going to be here's your formula, Jenny. P times B minus Q over B. Okay. You got this?
I'm so glad. When I talk to my son and he's in advanced calculus and discrete math and this class and that class, I'm so glad I'm done with that all.
Oh, me too. Annabelle loves her math too. But so this is what they're trying to tell you is how much capital to put at use, okay, for your portfolio. Because I did read through this, and then again they put the formula down here. But if you have a portfolio starting at 100,000 and only trade one iron condor strategy, what would be the best capital allocation? That's allocation percentage. Okay. So that's what they're trying to do. So you get an 85% success rate, 15% losing rate, because those are the inverse of each other. Let's say $3 in premium over.
you see, so P is the 85% success rate.
Yeah.
Q is the 15% losing rate. So it's like success rate times
your premium.
The premium minus the losing rate over the premium equals F.
Yep. So there
Excellent.
you go. There you have it.
Criterion.
You heard it here first. Okay, this portfolio should expect to see a 25% final profit over 100 trades with the 0 chance of depleting the capital.
Oh, so 0 chance of depleting capital. That's I'm surprised we could actually say that legally. 0% chance of depleting.
This is what I was going to say. The rune rate, meaning like your account going to 0, you start with 100,000, you're putting in $1,500 in buying power. So that's what I'm saying. This, I don't want to butcher it. I don't want to say anything wrong. Go back and watch the actual market measures. Okay, but here's the takeaways. Kelly Criterion provides a mathematical framework for determining optimal position sizing that balances maximum growth potential with capital preservation.
Okay, many traders often use fractional Kelly, 25 minus 75% of the calculated value to accommodate potential risks.
Okay. Option strategies are particularly well suited for Kelly application since both probability of profit and payoff odds can be estimated before trade execution.
Can you go back one slide for just 1 second? I just want to take a look. So the portfolio should expect to see a 25% final profit after 100 trades with 0% chance of depleting. Kelly 10% mean final, average drawdown, rune rate. So
yeah, but this doesn't have like management in there. It doesn't have any of that stuff. It just has how much capital should be at use. And in this one, it was $1,500. So going back, that's what they're saying. How much capital should be? Your buying power should be $1,500 in your iron condors.
So let's say $3 in premium over $1,500 in buying power.
So you're getting $3 at $300.
So if you're looking at $1,500 in buying power, you've got like a $20 wide iron condor. I mean, or this would be if you say $3 in premium, $1,500 in buying power, you've got an $18 wide. But we know it's the strikes are by 5. So I was just curious of what size, what width are they going for on these iron condors with $100,000?
It looks like it's about a $20 wide ish.
Yeah. Yeah.
Around about, right? So, and that's all they're doing. But there's no, in my opinion, that's what I'm saying, go back. This doesn't jump on top. How are you managing it? What are you doing with it? Are you rolling it? Are you keeping it? Is it 45 days till expiration? So they're just saying how much capital in the Kelly Criterion. That's what I was going to say.
Yeah, this isn't looking at managing at 25% or anything like that.
No. Okay. So then we have...
so that was one of them this week. So if you want to dive deeper into it, you can find it in the archives.
Oh, they did like piece number 4 on it today. And even Tom was like, I have no idea what the heck's happening. Okay, so this is number 2. Uncertainty, volatility, and bid-ask spreads. Okay. So that was this week as well. So you can go back in the market measures and find these from this week. Okay.
And what I would say is when vol's higher, you would expect bid-ask spreads to widen out a little bit.
Yes, for sure.
No one is absolutely sure of their models. That is why market. Are these the takeaways? Uncertainty. Are these the takeaways?
Here, I'll show you. No, there's takeaways are there. This is the spread. This is it.
Oh, okay. The setup of it. No one's absolutely sure of their models. That is why market makers maintain a bid-ask spread to give themselves room to be wrong.
That's very fair. In active underlyings, the size of the bid-ask spread can be seen as the market maker's degree of doubt in their own models. Okay. So, when you see something, we were looking at whatever.
Yes. No, but what was that one, that 30,000 that we saw in the SIBO most active, and the market was like no bid at 250, and they were trying to roll 30-something thousand of those?
Oh, yeah. I remember that. I don't know. I don't remember what it was, but yes, that's your market maker's uncertainty.
Yeah. On the other hand, while the best guess for future prices are current prices up to risk-free rate thanks to EMH, volatility expresses roughly how uncertain the market is of that guess.
Okay, so then let's examine how these two measures of uncertainty relate to each other. So meaning the bid-ask spread and the volatility. So here are the takeaways. So far, I can grasp this. So far, this is within my pay grade.
And let's talk about a fast market. Back on the trading floor, if something crazy was going on and the markets were going wild and there was a lot of uncertainty, the markets would go into a fast market, meaning the spread between the bid and the ask would widen out to $5 wide. You don't see that happen.
And we had Ed on the floor the other day, Ed Berry, when we were interviewing him, and he was talking about how he was in the DPM. And so the DPM is a designated primary market maker, meaning so I was in the DPM for a number of years as well. Now, Jenny was a market maker in there, but you weren't a designated primary market maker. So if you wanted to, you could technically walk away. The DPM couldn't. So there was literally a red button that you would press that I would be like, widen everything out. It was when you didn't know what was happening, and I would take and widen everything out, and mine would override the market makers.
Because the DPM had to fill the orders, and the market makers. The DPM wasn't always there, right? When we started on the floor, there was no such thing as a DPM. It was just the market makers, and we had to fill the orders. Right. But at one point in time, they started that system of we're going to have a DPM in every pit, and that was the designated primary market maker, and they had to fill every order. And
they did that because of the ability for the market makers to walk away. There were so many pits. There was like, okay, well, where's your market makers? They're not here. The DPM had to be there. So it was, and then it got bought, and then it did get bought a lot. Then the DPMs were bought by firms, but that meant somebody had to be there. So if I went to lunch, somebody had to take my place.
And I remember once we switched to DPMs, in our pit, the DPM running in our pit, the big order would kind of come to him like he was the boss, and he'd be like, Jenny, you're going to get, he would divvy it up. Like, Jenny, you're going to get 10, Nelly, you're going to get 10, you're going to get 10, and you're going to get 10. Like, he would divvy it up.
Yeah. Because the DPM also had the broker.
Yeah.
At the power station that we talked about.
But then Ed was telling us that then eventually that all went away.
No, then those DPMs got purchased by TD. A lot of them got purchased by TDs. Then they did that, and then the SIBO took it away. So then the SIBO became the DPM, and they removed the name DPM. But yeah,
right.
It's pretty crazy walking through that. But that's it. Is you have the ability, and when you're not sure what's happening, that was the go-to move. Is widen it out. Get your bid-ask spread as wide as they will allow you, which was $5 wide.
When you didn't know what was going on.
Yeah. So, and they were talking, I mean, Frank just sent this. Remember Mike Kelly from the trading floor? That's why they just did the Kelly. Like, he worked for Morgan Stanley. He would come in and he'd, be buying puts, and all of a sudden the stock would tank. The only recourse you had was to widen it out.
Do you remember OGR?
Yes. He's still down there. He's still on the floor.
I'm pretty sure it was him who came in when there was the whole Imclone scandal and was buying all those Bristol Myers puts, buying puts. I'm pretty sure it was Ogre who came in and did that in our pit.
It was. That sounds about right. Between the two of them, you're always nervous when one of those two guys walked in.
If they walk in and they're like, got a big order here, you're like, oh no.
I gotta
go. No. Lunchtime.
Okay, so here's the takeaways. In dollar terms, bid-ask spreads increase as both volatility increases and we get closer as we looked closer at the money. I'm sure I read that wrong. In dollar terms, bid-ask spreads increase with both as volatility increases and as we looked closer at the money. Okay, fine, got it.
Yeah, closer to at the money, right? Yeah. Like you go to a fire out put and it's not that wide of a market. You're closer to at the money, wider. When volatility's high and the market's going crazy.
Yes, when you don't know, it's going to be those. Okay, go ahead.
Yeah. Okay, however, higher volatility also means higher option prices, and the bid-ask spreads did not increase quite as quickly.
Okay. And then this leads to roughly consistently liquid options markets in percentage terms, with further out-of-the-money options actually being slightly more liquid in high volatility. That's interesting. I did not know that.
Like during those big falls and when you were out of town and the market was plummeting, I was surprised at how easy it was to get in and out of positions.
Really?
But we trade liquid products. So we trade liquid products.
It's not like you're trying to jump into something super illiquid.
Yes.
Yeah. Okay. Sorry, go ahead.
This led to roughly consistent liquid option markets. Did you read that one already? With further out of the money options actually being slightly more liquid.
That's what I was surprised with. While high volatility might speak to greater uncertainty about future underlying prices, it also means that traders and market makers have less to worry about it when it comes to a sudden spike in volatility. Okay. When it's already high, it's already spiked.
Right. Yeah. Don't let apparently wider seeming markets dissuade you taking advantage of high volatility environments. They provide us with an opportunity to push our strikes out while still collecting good credits from liquid markets. And you know what you have to do? You hear Tom talk about price discovery. Like today, I was trying to sell puts in Reddit. The market was literally like 170 at 250. So I put in
190 bid?
Like,
or what, like it, yeah, like a.
I was trying to sell them. I put in like 220, and then I wasn't getting hits. And I put in 210, and then I finally got hit. So if you're dealing with a wider market, don't just jump in and try to hit the bid.
And that's true. We were talking about that yesterday in SPX when you're doing those boxes, because SPX markets are so wide, you can kind of play with it. You're never just going to be like, oh, this is where the market makers want it. Okay. Yeah. Okay, so then that was good. Now, number 3. This is our third thing, Jenny. What makes tail risk risky in short premium trades?
Okay, and what makes tail risk risky in short premium trades? Let's see. I did not see this segment this week. Did you?
No, I did not. Okay. Short options are dynamic products. This means exposure is dependent on many variables that go beyond the traditional way of measuring risk.
Today, we will look at what metrics we use to gauge risk and what not to overlook.
Okay. So what are the different types of risk that are the most important to recognize with short options? Short options means selling premium. It could be calls, could be puts. Short options just means you're selling premium.
And I think, okay, so here, that was the setup. Here are the takeaways. Let's see what takeaways, and we can talk about what we think of this. The tail risk inherent to short premium means that the outlier losses of a strategy will always be much higher than the average risk reward on a trade by trade basis. So if you're looking at like you're going really far out, 2 standard deviations, 3 standard deviations, and you're collecting a very small credit, well, yeah, you collect 10 cents so many times, and you've got one outlier move that's going to wipe out more than you can make up for by collecting such a small amount of premium if you're selling those far out of the money options. It's why we like to bring it in and make sure we're collecting enough.
Wait, is that what they're really trying to say here? So the tail risk inherent to short premium trades means that the outlier losses of a strategy will always be much higher than the average risk reward of a trade by trade basis. Yes, because here, let's go to, I'm going to go to the platform. And then we'll go back to that takeaway. But I want to, so SPX, I'm just going to go, it's a big dog, right? Whatever, here we go. So I'm going to go to, so the outlier risk, does this have a C? No, this is too big. I'm going to go to XSP. 45 days. And does the CVAR come up when you do this? I'm going to go to, let's just go to a 20 delta. So here, this is your selling premium. I don't have the CVAR up here. So your selling premium, your buying power effect is 7,000. You're getting $6 to do it. Are they saying the tail risk is what your buying power effect is?
No, I think it's just saying the way I took it was the tail risk. Okay, tail risk inherent to short means that the outlier losses of a strategy will always be much higher. The outlier losses, sure. I mean, if you're talking about tail risk, you're looking at a 3 standard deviation move. So you're looking at
take a look at XYZ. That's a tail risk.
Yeah, right. Your loss is much bigger than the premium you collected. But what I think, and when you hear tail risk, I think you have to keep your size in check. You have to keep your size in check. Like, I wasn't panicking about XYZ. What did I say to you today? So I'm going to be long XYZ for a while. Rolled my puts out to June, just sitting on my stock, whatever. It's in my account is going to be there for a while. If I were too big and had to close it, then I'm locking in a loss that's much too big for any of the credit I ever collected in XYZ this year.
And that's what it says in the next little bulleted point. Staying small is the only way to protect against the sudden shock of a 5% outcome. So that's just it. Is when you take a look at, I'm going to go back to XYZ because that's a good example of this. That was tail risk. Now, it happened in earnings, which is fine, but we're taking a look at this. The chance of that happening when they're saying a 5%, this was probably a 3 standard deviation move, don't you think, in XYZ? Yeah.
Right.
So if we're going to look at a 3 standard deviation move, I'm just going to go to a 14-day. So here's 1 standard deviation. They don't even have it all the way down. There's 1 standard deviation here. Here's 2 standard deviations. That's what they're looking at. You're looking at a 2 delta.
And some was what I kind of thought when I was reading this was I thought of there are people who, if you open that back up and you go to 2 standard deviations, like you open up an option chain, go to June and go to like 2 standard deviations. There are people who will say, you know what, this is never going to get hit. This is 2 standard deviations away, and they're going to sell a lot of these. Instead of getting $59 for the 37.5 put, they're going to sell 10 of the 27.5 put to get their $50. And that's that's where I think you really have to worry about tail risk. It doesn't necessarily mean we shouldn't be going so far out and doing a huge multiple thinking that's never going to hit, because tail risk is real.
And that's how you can get wiped out. And that's why we say it every single day at the end of the show. Trade small, trade often. Because you can get that same, to your point, you can get that $200 by just selling. I mean, you can come all the way up. You have to bring it up, but you're taking in that same amount of premium with a 1 lot versus a 10 lot.
Right. So we'd rather do 1 higher delta than 10 at, the 30 level because of tail risk, because we've seen it happen.
Yeah, we have seen it happen. So I like this study. This is pretty good. And then the delta of your strangle will effectively scale the exposure to all metrics. Okay. So profitability and normal volatility, conditional value at risk, and outlier risk. So the delta of your strangle, meaning, and that's what we kind of looked at. If you're going in here and you're selling this 8 delta, that's low versus, your 30 delta.
Right, 30 delta. Yeah. So I think the takeaway from this talking about tail risk is stay small, and don't think that going so far out 2 standard deviations, 3 standard deviations isn't going to happen. Because I still go back to when I had Tony from Mexico on that Monday before the big crash week, and we were looking at selling SPX puts, and we thought they're never going to get here, and they were there that week.
Yeah, it's pretty crazy.
Yeah.
It's pretty crazy when you think about it from that perspective. But this was, I just want to go back to that real quick, because was this with the high implied volatility, or they had 2 different ones, right?
That was 2 different studies.
Because the implied volatility, so it's kind of a double-edged sword. When you've got the high implied volatility, you can get yourself pretty far out in time. You're farther away from the at the monies, and you still get to keep some premium. So kind of merging those 2 studies, that's why we're always looking for implied volatility, right? We're always searching for high IVR, implied volatility versus itself.
Because that will help. Starting with high IVR will help.
Yeah.
Which is why we change our trades when the vol is low. You saw when vol was low, we were doing a lot of diagonals. You don't see us doing many diagonals right now.
No, because you're getting so much for the puts. Now it's getting to the point where things are coming down, but volatility is still pretty high. Where's the VIX today?
Wait, what is it, 24?
22.
22, yeah, 22.
So it's coming down. It was right there.
Right.
Just gone through it. So it's coming down. But so that's why we're kind of looking for those IVRs. Gold is up today. What has a high IVR? Let's put on something. Light sweet crude. We haven't been in anything. We just closed our XOM trade. Would you like to get into something that has to do with oil?
Can you look, because this is a trade we forgot about that we said we were going to be doing repeatedly, and we forgot, selling the Monday, Wednesday, Friday. And I'm not suggesting do it now. I just want to look at it. Look at oil, look at how it's been moving. That was a trade we wanted to be in every week, and we have not been. So like today we sell Monday.
This has been a hot topic though. So I will tell you, listening to these, this has been some big moves in oil. Like this would be one of those days where if you decided to do it on these days, you're out.
Right. So I just wanted to see what the vol is like. 88 rank. If you went out, and I can't remember what the delta was. If it was 20 delta.
I think it was 20 delta.
20 delta, but we defined our risk and made them $10 wide. Right?
So yeah, I think you're right. Hold on.
Oh no, not $10 wide. Just like not that wide, because that's.
Yeah, that's $10 wide. Max loss is 700.
Oh yeah, right. Okay, that is how we were doing them. So here you're getting 290, max loss 710, and this expires Monday. This was a trade that a rising star brought on. A rising star brought on every Monday. Friday do Mondays, Monday do Wednesdays, Wednesday do Fridays, and we have had some big moves in oil, and some of these would have taken a hit. But I'm tempted to get back into these.
I am too. I kind of don't like the risk of it over the weekend. I will do Monday for Wednesday and Wednesday for Friday, but I'm very apprehensive given the state of affairs right now that I want to have oil risk over the weekend.
But given the state of affairs, we've got an 88 rank.
Correct.
So you're getting,
and that's just my opinion. It's just my viewpoint. It doesn't matter what's a Sunday versus a Tuesday where you're carrying the risk. You know what I mean? Like if I put it on Monday for Wednesday, what's the difference between a Sunday and a Tuesday? Nothing.
Well, you look at the chart and look at our shorts. Our shorts are 55.25 and 60. So 55.25 is our short put.
Up here.
And was it 59?
And it's
61.25. Take a look at that.
61.25. Here.
I'm doing it. I'm going to do this. When the show ends, I'm doing it.
I commend you. I just think it's a little bit much for us to hold up.
$1,200
isn't bad.
Well, it's using more money than the max loss. The max loss it's a $10 wide, and we're collecting $300 on a $10 wide. The max loss is $100.
It does that when you are nearer term. I was asking TP this. He's like, it does that. Span margining does that when you're nearer term in futures.
Okay.
So it'll do the same thing and I don't mind doing this. We can
I was curious. There's a trade we were going to be putting on all the time, and we've kind of forgotten about it. So I was curious to see how much you were getting and how far you could get.
Yeah, it's not bad.
We don't have to ship it in this account. I just wanted to take a look at it.
So I don't mind it, and you can make it a little bit smaller. But I wanted to go to let's go to like 6. What else is hot topic right now? Like 6E. Is that what was on the watch list? Because there was something else on the watch list that I was looking at. Watch list. Where is it? Yeah, 6E.
That's right there.
So 6E. I wanted to show you. I'm pretty sure it's going to still be holding up a lot more. Yeah, take a look at this. Oh no, that brought it down. Because usually when you're nearer term or within 1 day, it's holding up more. Because I had TP on, and we were talking about that.
Do you want to go to microcrude and just sell a longer term strategy instead of doing the daily? Because maybe we don't want to do this in our account. Just go to MCL and we can sell something. Just go to but then you can see it. The 45-day, you're going to another future.
It's a different future.
You're an N.
And 45 days is a long. I'm not going to lie to you. I'm going to go here. I'm going to go to 13 days because I don't want to see that. This is straight up 70 cents. So if I was going to go to 52, and I'm just grabbing something small, you can go all the way down 16 delta. Mm-hmm. You're putting up $625 to make. It's 10% return on capital in 13 days.
Right.
And that's why I do like MCL. It's a very small product. There's not that much open interest here. And look at the size, the bid ask. You're getting 5 by 2.
I'm just curious. Will you pop out the side and see what we had in MCL? We did have something in MCL. The 45 put for $1.07 bought back for 45 cents. I just wanted to see. So it's the same cycle, this 13-day cycle, and that was a while ago, right? 4.9 and 4.10. That was 3 weeks ago.
Yeah, and that's the 45.
So I think at this point it would be right to move out to the next cycle.
Yeah, I agree. It's just so hard when you're looking at oil. So if you're going to do this, and you'll get a lot farther, right? So if I was looking at 50 cents, where were we at? You said the 45?
We were at the 45.
Yeah, if you're at the 45, you're getting 60, 70 cents for it. It's down pretty far. And look at this. You're only putting up $3.99 to make 70 cents.
Right, it's not bad.
I prefer to bring it up though. Let's go.
I would rather collect. Let's go more.
I'm trying to stick in strikes of round lots. I think
90 cents is good. 90 cents, getting $90 using $442.
I kind of agree. So in your.
Oh, did you see our buying power? $14,000 in buying power.
We closed a ton of stuff today.
Mind
blown. We're gonna have so much fun next week. Putting trades on. Okay. Crunch time for Apple.
Oh, roll it out.
I'm going to roll it. You're right.
It's annoying because we have barely been below 205. I'm tempted to say leave it for here. Let's talk about a lesson in options. If we left that and Apple is in between that spread, we would get assigned on that 205 put, but not it would not exercise that 200 put. So we'd come in long 100 shares of Apple on Monday. We can't afford to buy 100 shares of Apple in this account. So, I mean, we could, but it would use up almost all of our buying power.
It'll take all of our buying power.
It'll take $10,000 of our $15,000 in buying power.
So do you want, do you think I should just put a GTC in for this? I mean, I don't want to take $100 loss.
I don't want to take $100 loss, but just roll it out. Roll it to next week. Let's roll it to next week or the following. Let's see where we can get a bigger credit.
I mean, I went to the 14-day originally just because.
Yeah, that's fine. Roll it to the monthly.
Now, keep in mind, we're only going to have $1 into this.
So we just get the $1.
No. I know, but we had nothing. Like, we didn't have anything. When you use the put premium to buy this is $1.
I'd rather roll it and take in $1 than taking a $100 loss on it.
For sure. Oh, shizzle. Hold on, let me go down. Okay. Filled, so we don't have to worry about that. Let's jump back in the platform to make sure that we've got everything done that needs to be done. I'm not going to chase that. We didn't do, let me see, I'm going to pop off the side, see what we did today. All symbols today.
Oh, geez, I totally forgot my job. I haven't done it yet.
Oh, my goodness, Jenny. Oh my goodness. Okay, so we, Amazon, we closed. I left, keep in mind, I left some of the residual stuff in there that,
sure,
which is fine. Okay. So Amazon we closed, Reddit we closed, Bank of America we closed our calendar that we've been rolling. American Airlines we closed and sold a new one out in June. Marvel we closed. This is why we're getting a lot of buying power back. Like all this stuff was requiring some buying power. Roblox we closed for a win. XOP we closed for 50%. Snap we closed one of our puts, and then Apple we just rolled it out for $1. So we did quite a bit today.
Wait, XOP, did that GTC just hit or something? Because I don't remember.
No, I closed it. It was the XOP. That's why we started looking at oil. It was like a Jade Lizard-esque type position. We collected about $1 and we took it off for 50%. It's not a GTC. I closed it.
Oh, I missed it. I missed that.
You blocked that portion. You blocked that portion to show out.
Okay, I have gotten everything pushed out now on the follow page.
Okay, so we are all good. We've got a lot of buying power back. We don't have a lot of positions in overnight.
Can you look at the rank in Reddit? What I know, since Reddit had that big move up and then really isn't up anymore, what's the rank? I wouldn't mind selling another put spread in there.
It's a 35 rank. The puts you'd go down to you could do the 105 100 for 145.
That's not bad.
You could do the 100, 190, or 195 for 122. I like that better.
Yeah, let's ship that. Just to 35 rank, just to be in it. I cannot believe it's not even. It's only up $1.80 after the move it had yesterday.
I know, crazy, right?
I mean, the guy whoever bought it at 138 must feel like a real jerk. In after hours, I've got to get this.
Was it you? All right, Jenny Andrews, we are out of time for the day. Fastest hour of the day, done and dusted. Have a wonderful weekend. What are you doing this weekend?
Nothing. We were supposed to go up to the lake and decided not to, so I have zero plans.
Are you going to bet on the Derby?
I didn't even know there was a Derby going on this weekend.
You didn't know the Derby was this weekend? It's always wrapped around Annabelle's birthday, so it's always like fresh in my mind. But I thoroughly enjoy betting on the ponies. So I told my son, I was like, "Do you have DraftKings account?" He's like, "Why?" And I was like, "I want to bet on the Derby, and I don't have an account. Do you have an account?"
I do. You can call me. I'll bet for you.
Okay, thank you very much. I will call you. I think I'm going to go Grande, journalism, and who else did I like? Oh, something Bull. It's the first one. Like Criterion Bull. I'm gonna bet on those three. Yeah.
I'll go bet. We have an OTB. Do you want to meet me at the OTB?
Yes.
I will meet you there. What day is it? Is it Saturday or Sunday?
It's Saturday.
I'll meet you at the OTB.
I'll meet you in the lobby, but only because you're paying me to. All right, everybody have a wonderful weekend, and we will see you on Monday. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you on Monday.
See you on Monday, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
What's up, everyone? My name is Mike. This is Options Trading Concepts Live. It is Friday. We've got the markets up pretty significantly. It is Party Shirt Friday, might I add. But yeah, welcome to Options Trading Concepts Live. We're going to walk through my entire portfolio today, and we're going to look at each position. We're going to talk about some adjustments I've made, and yeah, we'll get to it. But if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live, and you'll see this video streaming front and center, and we can get some new trades on. We can look at some potential management, et cetera, et cetera. So join me there. And without further ado, we will walk through every single position in this portfolio. We had some earnings trades in Amazon and Apple. Didn't really go as planned, but we have defensive management capabilities that I've already gone through this morning, so we can walk through some of those, and we'll get to it. So yeah, why don't we pull up the platform, and we will look at this portfolio, this here portfolio. E-minis up 90, NASDAQ up 360, Bitcoin up 1,000, flirting with 100K again. Who would have thought? Who would have thought? But yeah, I think this market is, of course, the strongest we've seen it in quite some time. What is this? 8 days in a row? 2, 3, 4, 5, 6, 7, 8, 9 days in a row. So that's 2 straight weeks because we had a holiday of green days, which is kind of wild. Looking at implied volatility, or the volatility curve, I should say. Ooh, the VIX futures almost out of backwardation, still a little bit of backwardation, which tells us that we should still expect some wider ranges than we're used to. But yeah, down in the low 20s, don't like it. Don't like it. I think it's fine if you're looking to buy a dip. Volatility is telling you that maybe we're out of the woods, but really, are we? I think that's an interesting question. Do we think that volatility is just going to continue to collapse from here and we go from backwardation to contango? Or do we see a little turbulence and we see that widen out and the VIX futures get back up to the mid to high 20s, maybe even the 30s again? Time will tell, but you can't discount this continuous rally we've seen. It's kind of been pretty crazy here. Even with Amazon and Apple down, which is pretty significant. So the rest of the market is pulling up the Amazon and Apple earnings trades that didn't really do much. Amazon, a literal non-move, and Apple down a little bit. Both of these are pretty much within or at the expected move. But yeah, looking at some other futures products, we've got oil futures down 80 cents, kind of hovering around that 60 mark. We've got wheat, big rally today. Shout out Katie. She gave us that bullish trade yesterday, and we're seeing a huge green bar today. So I closed that for a quick winner, and I also made some adjustments in some other trades. But everything else kind of within that 1% range. And if it's within 1%, I'm not really looking at it because that is within the expected move ultimately. But yeah, big movers to the upside. Wheat, natty gas, flirting with that 3.5, 3.6 level. Bitcoin up 1,100. But yeah, everything else kind of just chopping around in this kind of a weird day. We have a really strong equity market and everything else is kind of just flat except for wheat. All right, we're going to walk through every single position in this portfolio. If you have any questions about anything I talk about, you can just pop it into the YouTube chat and we'll get to it shortly. But yeah, starting off with oil. So oil, we had a micro crude long contract. So I like to just straight up buy the contract or short the contract if you see a really big rally. I'm usually on the long side though. I kind of wait for these big dips in micro crude and then I try and, just throw on a micro crude contract. It's a $5,800 notional value if you just buy one, which is typically what I do. And I just hold it. So it's been a great two-sided vehicle for many years. We've seen this thing fluctuate pretty aggressively and it's not typically just to one side. And even with this big sell-off here, there's been opportunities to throw on longs, get out of the longs, throw on shorts. So it's definitely a trader's market in crude, and I don't think that's going to change anytime soon. So we'll always be focused on crude, but I have a long contract that I rolled from the K to the M contract, down $600. I mean, I'm long at like 66-ish. And I need this thing to rally. So what I did a couple days ago was throw on this short call spread in the crude oil futures. So the micro crude is a $6,000 notional. The big crude contract is a $60,000 notional. So decided to just throw on a spread. I could have technically turned this into a covered call by selling a call below my basis, but the premium in micro crude in this 13-day cycle, which is where my contract is, just isn't really there. And even if I was up here, like where I have my cost basis, like 66, just not picking up too much premium. So I decided to take some upside risk and throw on a spread. So this is a $1,000 spread. I collected $220 for it. Because I have the micro crude long static delta against this, I'm not going to close this. I'm probably just going to ride it out until I get 60, 70, 80% max profit, and then I'll close it or roll it. But this is one where I'm going to hold on for more than 50%, simply because I have this offsetting delta against it. So even if this crude spread goes up to 65, this would show me like a $200 loser, but I would get back $700 in this micro crude contract. So pairing these together, kind of just taking a little bit of upside risk with the crude spread and going from there. So we'll see what happens there, but that's kind of going to be the trade going forward. I'm just going to have that micro crude long on And once the M contract falls off, I'll roll to the next contract, and I'll just keep the spread on to keep reducing basis. This $200 actually really helps the microcrude basis because I was at 66. If I combine that $200 credit with my microcrude contract, brings me down to about 64, which is where my short is. Short option in this spread, I should say. So yeah, feel good about that position. Even if we chop around here, I can just keep reducing basis by rolling to the next month and selling another spread against it. Lean live cattle. Not necessarily lean, but definitely live. 215, 220 long call spread in the June 6th cycle, 35 days out. This one's been interesting. I initially got into this with a actually, this had to be a longer term, maybe not. So yeah, got into this with a calendar spread. So I bought the June 65 day, sold the May 30 day, 215 calendar for $1 or 1.3, we'll call it. This is a weird multiplier, but rolled from a calendar up to a diagonal. So I went from the 9 day to the 44 day, and I rolled up and out for a small credit. So basically, I have this 5-point wide spread on, and my cost basis is $390. It's ultimately a scratch, but if we look at this and we just like pretend like we're throwing on a new position here, you can see the max profit here is, this is a $2,000 wide spread. So even though my basis is very small here, basically trading for a scratch, if we get a move up to 215, 216, 217, this will be a big winner. So I'm not doing anything else with this position. In theory, you could roll down the 220 to like the 218 or the 217, but I would rather have the long delta in the gamma here with the wider spread, considering we have 35 days and we are within the expected move. So not going to do anything here. We'll see if we can continue to see this rally. And like we're seeing today, just a small 0.5% move is a $70 profit on this position. So if we see another move like this, or even a 1% move, it'll be a $100, $150 winner, and I'll just take it off. Apple. Okay. So Apple, I had earnings, an earnings call diagonal spread here. So I had the 210, 230 back on April 3rd. So quite some time ago. I rolled the 230 short call down to the 220 in the same cycle for $1.61. So I brought my basis down from $9.44 to $1.60. And then this morning, after Apple sold off, luckily this was a longer term diagonal spread. It wasn't the 1 day. So I had a little bit more meat on that extrinsic value in the short option. So I was actually able to roll from the 220 down to the 215 in the same cycle. So now I have the 210 long option in June, 49 days out, and I've got the 215 against it in the 14 day. So cost basis is $7, but I have a 5-point wide spread. So I do have some risk to the upside, but really I don't think I have that much risk, because if you think about it, like if we throw this position on and let's bring this cost up to where I'm at, which is 698. 698. So we're putting on a new position. Let's throw this on the analysis tab here. Let's get rid of my old position. And you can see I do have upside risk because my debit cost is $7, but it's only a 5-point wide spread. However, you can see I still have some profitability to the upside. Like, it would really take a huge gap up for me to realize losses to the upside. And that's simply because even though I have a $2 debit over the width of the spread here, my long option with 49 days is going to have much more extrinsic value than this short option. And that's why I can still be profitable to the upside here. And that'll be especially apparent if I hold this all the way to expiration. So if I click this May 16th, it's going to push me to the evaluate date to May 16th. About 2 weeks from now, exactly 2 weeks from now. And you can see I still have risk to the upside here, but if I get all this extrinsic value from the 215 short call, I still have plenty of profitability potential here if we get a rally up to 210 or even higher. So made that adjustment this morning just in case this market shows a little weakness. I mean, we've literally had 2 straight weeks of green days in the E-minis and the NASDAQ. So I just want to be more conservative here into this big rally to the upside. And because I don't imagine a world where Apple's up big if the NASDAQ and E-minis fall off here and we see a retracement down to like 5,500 in the E-minis. I just don't see it. So we'll keep battling that one. But I think we're in an okay position. And again, looking at the cost basis reduction, I went from $9.44 down to $6.98. So pretty substantial, almost a 30% cost basis reduction with just a couple rolls. Amazon, similar story. Amazon, we had the call diagonal spread here. I had the 190, 200. So I went out to July. I bought the 190 call, sold the 200 one-day option against it. And of course, Amazon opened a little bit flat this morning, a little bit down actually. That position was profitable. I could have taken it off, but the option's out in July, 77 days, plenty of time for things to work out. I just decided to keep it on. And this morning, I rolled the 0-day 200 call into the 14-day 200 call for $1.20. So again, just reducing basis here. I turned this $10 wide into still a $10 wide, but I added more time on the short option, and I brought that basis down below $10. So seeing a little bit of a rally to right now, could be in consideration to close this now. When I made this roll, Amazon was down $1 or so. It has now rallied $3. We're profitable, $174. I think I'm going to keep this till Monday, see if we can get a little more out of this, just because it's a longer term position. So I want to be more aggressive here. $175. If you're in this position, you could totally take it off and walk away. Have a nice little weekend. But I'm a glutton for pain, it appears. We'll see if we can get a little rally here, but 10 points wide, still plenty of aggressive theta decay on that 14-day short option, considering it's trading for $200, 14 days before it goes to zero. So yeah, if we see a little continued rally here into Monday, I'll get more premium out of this 200, and we'll gain some value in that 190 call. I'll close it on Monday if we're still kind of hovering around this level. Also, I don't want to execute a day trade here. I'm not at risk of day trade being flagged as a pattern day trader in this account because I don't do it. But just in case people out there are doing it, I'm just going to hold off and not route that day trade, which is what would happen if I close this position since I rolled into it this morning. CRM, worthless. This was a call, I assume a call spread or a call diagonal from earnings gone wrong. It's at 3:30. Yeah, a call calendar. I had the 3:30 calendar. Rolled once from the 1-day to the 22-day, picked up some premium to reduce basis. That's all you can really do. And that was before the huge sell-off in the market. Yeah, this was back in February. So as you can see, we went from 330-ish down to 230, 100-point sell-off. We've rallied back, but there's just no time on this option. I'm also not going to close it. I'd rather just keep it on for $10. If something crazy happens and CRM rallies another, 20, 30 points, maybe this 9-cent option turns into $1 or so. You can see that here. If you get a 30-point rally in the next couple days, 9 cents turns into $1. So I'd rather risk the 9 cents than not have it on. So that's worthless. DraftKings, we have ourselves a situation here. Okay, we're up $1. I think I might need to roll this position. So DraftKings is a darling between Nick and I. We've done a ton of trading in here just because it's a $34, $35 product and it has high implied volatility, which just means we can have perpetual premium in here. And as long as nothing crazy happens with DraftKings in terms of going from 30 down to the teens again, like it did a couple years ago, or from 30 to 70, we'll be okay in this position. Down a little bit right now because my short put's at 42. And I've got my 39 short call against it, inverted by 3 points. I've been pretty aggressive here. I had a 3-point inversion for quite some time, and I have $5 in premium against it. So looking at this position, started with 275, rolled for $1, rolled for $1.50. So yeah, 3-point inversion here, $5 credit. What can we do? We've got earnings May 8th after the close. So this is certainly in the earnings cycle. You can see there's a 20% implied volatility bonus here in terms of premium relative to time. And you can visually see that here, right? 14 days out, $4 expected move compared to 50 days out, almost 5 times more time, but barely any more implied volatility in terms of the expected move. And that's just because the May cycle has an 80% IV and the June cycle has a 60% IV. With that said, we can take a look here, just double check, make sure it doesn't make sense to roll out. So I'd have to go to the 40 from the 39. I could keep the 42 there. Yeah, so I'm not making this roll. 50 cents to add a significant amount of time to this position just doesn't make a lot of sense to me. I would rather, and I mean, I guess you could roll this down to like the 37, create a 5-point wide inversion for $1.50. That would bring my basis to $6.60 on a 5-point wide. So you could do that technically, but I would rather roll the dice here simply because if I hold this position, first of all, if I get assigned on this short put, I would just have basically a covered call position with a short call at 39. If DraftKings rallies from earnings, the earnings implied move is $3. So we could get up there if it's a bullish rally or a bullish earnings move, I should say. Could get up there. I would rather be aggressive here because I can just hold this position forever. I've already done it for an entire year. That's what I would do going forward. So I'm going to be more aggressive by not rolling. If you want to be conservative, you could totally roll out in time, and I would probably go to the 37.42, pick up $1.50. You'd have $6 and change. You're still over the width of the inversion. Your break even would be at 36. Stock price is right there. So if you're on the conservative side, maybe you go to June and you go to the 37.42. But I'm going to hold and see if we get an earnings move to the upside. Because if that happens, of course, I'm going to get all this extrinsic value premium out of both of these options. And then I can roll into June for a much bigger credit. Because June's still going to have plenty of IV. As you can see, the furthest out cycles have like 50% IV. So plenty of implied volatility that would still be in this June option. This thing's not going to go from like 60% to 30%. It's just not going to happen because DraftKings kind of hovers around this 50% range. So that's that. FCX. What are we going to... Okay, we're going to do something here with this position. So this is one I followed Nick into. This is a spicy trade. I haven't done anything with this position here. So I've got the 38, 41, 44 call ratio. So I have the 38 short put, which is where the product is right now. We're up $77. I think what I'm going to do here is I'm going to keep the call ratio in the 14-day because if we continue to rally, I want to have that upside profit potential. So I think what I'm going to do here is this. I think I'm going to... Yeah, this is what we're going to do. So I want to keep the ratio spread in the near-term cycle because that's the best way to get quick profits out of a ratio spread or a butterfly. And you need to have as little extrinsic value as possible. And with FCX, with a 14-day cycle, that's where you want to be. Outside of the expected move, you need a big rally there. But I'm going to remove the upside risk here and just buy the wing. So this started off as a 41-44 call ratio. To remove the risk in the ratio spread and just turn it into a butterfly, what I can do here is buy a wing that's 3 points higher than this 44 strike, right? Just create symmetry around this. That way, my 3-point wide debit spread would offset the risk in my 3-point wide credit spread, which means buying this wing here. Let's see if we can get fills for 5 cents. Okay, instantly filled for 5 cents, which tells me I probably could have got it for 4. All right, so we're fine here. So now we have this 3-point wide debit spread, 3-point wide credit spread. There's no risk in this position. I've collected a credit already of $1.86 after I just made that purchase for $5. So no risk to the upside. And we can see that here now. If I just analyze this position. Oh no, misclick. Let's see. Here we go. Curve analysis. Let's get all these options here. Okay. So now we have no risk to the upside because I purchased that call. If I didn't purchase that call for 5 cents, I would have risk to the upside because I would have this extra short call that would show me losses to the upside. So we're fine to the upside now, but I want to roll this put because I want to pick up some more premium. So I'm going to buy back this 38 in May, and we're going to roll to June for another $1. Look at that. Beautiful. Okay. So we've got the short put in June. We've got the call butterfly that we have on for free. And now we have a total credit of $280. We're profitable on this position. So if you wanted to close it, you totally could. But I kind of like where we're at here with FCX just churning around this level. If we get a little boost up to 44, we'll be just fine on this position. The short put will lose value. The call butterfly will gain value. It'll be a really nice trade. So that's the adjustment for FCX. IBIT. Okay, this one's really fun. So IBIT has been a great trade for us. This was the year-long trade for me. And this one is another one, $55. It follows Bitcoin in pretty much lockstep. If you look at the change in Bitcoin futures, up 1.3%, IBIT is up 1.3%. So talk about a product that's super liquid, 25 million shares traded, markets are penny wide pretty much. We'll call it penny wide. They're 3 or 4 cents wide. Totally fine. But look at this. If you want to just sell a put, let's say you didn't want to have, you wanted to reduce basis on Bitcoin, you could sell a put in a 50-day cycle and almost collect 10% of the notional value of your risk here. Plenty of premium. This is probably going to be the best year-long trade we've had, and it's only May. And I say that just because we're right where we want it to be. And we started with this position with a 565 credit on a 50-65 strangle. So I went out to Fab, just created this core position, 50-65 strangle, and IBIT kind of chopped around there. I went from a 50-65 strangle to a 55-70. So I rolled it up and out to March from February for 272. And then I just rolled the same position out from March to April for $2. And then, what did I do here? 50-55. Oh, this is the call ratio. So I added a call ratio for 40 cents just to get some more upside boost there. And then I rolled from, I bought back the 55 put. And then I rolled to the 55 May and added another call ratio for 40 cent credit. Bought the 60 call. So what we just did in FCX, I did the same thing in IBIT. I turned my call ratio into a symmetrical butterfly. I had the 50-55 call ratio, bought the 60 call to turn that into a butterfly. And then did a similar thing here, bought back the 55, rolled to a 55-60 strangle. And that was in June. So I rolled to the 55-60 strangle, which is what I have now. And then like FCX, I kept that butterfly in the May cycle. And then we got that big rally in IBIT, and I was able to sell out of that butterfly for $1.40. So it's a nice thing when you can have short premium paired with a near-term butterfly that you turned into a butterfly from a ratio spread. So all that said, started with 565 in a Feb strangle. We now have $1,500 in extrinsic value collection with a 55-60 strangle. Now the nice thing about this is IBIT is seeing a nice rally here, but I don't ever want to have short delta in IBIT. So what does that mean? Right now I have a 55-60 strangle in IBIT, but what if I had the 50-55 strangle in IBIT? So sometimes it's not about collecting premium all the time. Of course, that's what we want to do in an ideal situation. But let's say I'm in June, and let's say IBIT continues to rally. So if I had a 50-55 strangle, what I could do is I could just buy back the 50-55 strangle and shift it to a 55-60 strangle for a scratch. So this is what I'm going to do. Like if we continue to see IBIT rally, I will buy back my 55-60 and I'll roll it to a 60-65. for a scratch at that point in time. You're seeing a credit here because if I did this now, I'd be selling intrinsic value. But ultimately, I can do that, and I can pretty much offset any kind of short delta that I gain into a rally to the upside. And at that point, let's say I made that adjustment. I buy back the 55.60, I move it to a 60.65. That's where my new downside short put is, and that's where I'll keep it. And I'll keep doing that and just keep collecting premium. And that's one way to offset upside risk. You don't have to just roll up the put. You could just totally shift this whole thing up. So we're not there yet. I don't need to do anything, but if IBIT does go to 60, I will be doing that. I'll be shifting my short put from 55 to 60, and I'll move my 60 call to 65, and I'll just keep shifting for a scratch and just keep moving my risk to make sure that my risk is to the downside and not the upside. Intel, call ratio 2021, not much to do here. Sorry, this is a zebra. This is not a call ratio. This is a call zebra. So again, not much to do here. If you wanted to, you could sell an extra call against this, but I would rather not have the 60 cents. It's trading for 60 cents here. I could pick up another 60 cents and just have 2 call spreads on, but I would rather just have the upside. We're right there. If we get a 2-point rally, this will be a profitable trade. So not much to do there. Micron. This is another one, earnings gone wrong, I'm sure. Yeah, I had the 105, 115 call diagonal spread, long June, 90 days out, and I sold the 1 day against it. And then I rolled from the 115 down to the 105, 14 days out for 60 cents, and that fell off. So can I do anything here? Probably not. Because this, I definitely can't. Because my long option out in June is only trading for 60 cents, which tells me anything I sell against it in a near-term cycle will be trading for like 30 cents. So nothing to do there. All right. NVIDIA. This was I'm sure, a call diagonal spread. Yeah. So it was a longer-term call diagonal spread. I went with a June 115 call, 86 days out when I placed this. Sold a 125 against it, 22 days out for $9. Rolled the 125 down to the 120 in the same cycle for 75 cents. Rolled the 125 down to the 120 for another 90 cents. And I'm sorry, I didn't do that. I rolled it out and up. So I moved from the 120 down to up to the 125 in May for a credit. So rolled up and out, used that extrinsic value to move my strike higher and reestablish that 10-point wide diagonal spread while still reducing basis. And then I rolled the 125 down to the 115 to create a calendar spread for $1. So I basically turned this $9 wide diagonal spread into a $6 and change calendar spread. And if we look at this here. Okay, so we're right at 115. We're down a couple $100. We're getting the move we need. I'm going to re-diagonalize this right now. Ooh. Yep. Okay, so this is what we're going to do. I have the June 115. I'm going to roll from the May cycle, which is prior to earnings. I'm going to roll this into the earnings cycle, which is May 28th. And we are going to be able to move this significantly higher. Okay, yeah. So we're going to reestablish this 10-point wide diagonal here right now. And what we're going to do is we're going to pay a little bit of a debit here. But what's it going to be? What's this going to result as? I'm going to have a 115, 125 call diagonal spread on for a debit of about 760. So 10-point wide diagonal for a debit of 760. Perfect. No risk to the upside. I would rather pay a debit here than watch NVIDIA go through my strikes to the upside and result in a losing position. So let's make this adjustment before we take on intrinsic value. Let's do this right now. We're probably going to pay somewhere between, 92 cents. Okay. So I now have a 115, 125. Long the June, short the weekly, not this week, but the week of the earnings announcement for 764. If we get a rally up to 125, this will be a profitable trade. I'll probably just close it out and restructure it if it happens prior to earnings. Just because I would rather have my option in July than June if I can help it. All right, beautiful. Qs, this is a downside hedge against the market just ripping lower. What can I do here? Can I actually, I think I can just buy this back. Yeah, I'm just going to buy this back and just leave myself with a long option. Because if we see, if we see a 200-point sell-off in the E-minis, this long put for $2 will go to $7. So, and there's not much premium here anyways. If I were to, it's already at a calendar. So yeah, I'm just gonna buy this back, and we're just gonna lean short with a long put option in the Qs. I've already reduced basis here. I had a $10 wide diagonal and I rolled it into the calendar for 365. So we've reduced basis aggressively here. And again, if we see a big violent sell-off to the downside, this will be just a nice hedge because we'll get that downside delta, we'll get the IV increase. I don't see a reason to keep reducing basis on this for pennies. So we're gonna buy that back for what, 35 cents? Do we have 35 cents? I'm just gonna leave it there. It'll fill, I assume. But if it doesn't, we'll come back to it. SLV. So SLV was a call zebra, and we had a 30-31 call zebra for $2. I bought back the 31 short call for 30 cents. So I lost pretty much all the value there. And this ultimately just frees up and gives me the ability to have 200 deltas in terms of possibility to the upside versus 100 with that short call on. So I freed up my extra long call here to give myself that upside room in SLV, which is what I want. It's showing a loss right now. This is kind of a funny one because we're literally right at 30. We're a point away from 30, but it's essentially worthless, trading for 60 cents. The total options, there you go. Q's filled at 35 cents. So yeah, I'm just gonna leave this on. If we see a 2-point rally in SLV up to 31 or 31 and a half, back to where we were, this will be a profitable position and I can just close it. SPY, same thing here. We put on a put diagonal into the sell-off, and look at this option. The 525 in May has lost almost all of its value. It's gone from $9 to $1. And I paid $1,100 for this, and this is 15 points wide. So we can definitely make an adjustment here. Let's see if I can buy this back and move this. So I paid $1,100 for this with the 540. So I can move this to the 530. No. For 30 cents, just kidding, not doing anything. This still has $1, 14 days to go. This would be a better roll if I do this on a downside move, of course, because if we see a downside move in the next couple weeks, I can buy back this 525. I can roll it out in time. So I could add it, I can move it to like the May 30th. Maybe that's what I can consider doing here. Yeah, that's what we'll do. So we'll just do this right now. We'll buy back the 525 14 day and we'll roll it to the May 30th. And we'll do that. We'll pick up some extra premium here, $1.61. That'll bring me down to a $10 diagonal, $10 debit on a 15-point wide. We'll just hedge a little bit, just so that long option doesn't decay aggressively. Now, ideally, again, you do it into a sell-off because this option has lost $1.80 today, but can't always get what you want, as the song says. I'm going the wrong way with this. All right, $1.59. There you go. Wow, we're making moves here. Okay, SVXY. This is another one. I was trying to buy the dip in reverse volatility. So SVXY is a product that tracks the inverse move in volatility. So when we saw that huge spike in the VIX, this product collapses. I really like this product for long-term investing. If you are waiting for volatility spikes above 30 or 40 and you throw on some shares in SVXY, if you look at a long-term chart in SVXY, you're going to see This was the vol collapse here, where all those volatility products got destroyed. But if we remove that, you can see, okay, grind higher, volatility spike, grind higher, volatility spike, grind higher, volatility spike. So here we are. We're at this post-VIX rally where you can buy SVXY at 38. It's not for the faint of heart, but this is structured to drift higher in these periods of low volatility, like you see here. So I like SVXY as a longer term trade for short vol trades by buying a product. So you're shorting vol, but you're buying a product that can go to zero. But if you do it small and you can withstand that volatility, it's a nice volatility reversion trade for sure. But I bought a call spread in there. It's probably going to be worthless unless we continue to see this rally and continue to see volatility collapse. Then we'll see the SVXY go from 38 to 39 to 40, and maybe I can get some value back here. Target, worthless long call. No reason to close it though. It's trading for 20 cents. I've got 50 days, 130 strike, 30 points away. But again, no reason to close it. I'd rather leave it on as a lotto ticket. 100 shares of Under Armour. Nick would kill me for this, but I think I've had this on for 5 years, something like that. But again, it's a $5 stock now. I'm down $1,000 here. I had a short put at 19, so I'm just gonna hold on to this forever. Maybe they get bought out and the stock doubles, but I just don't see a reason to close this. UAL, I made this adjustment this morning, so UAL has been crazy. This is going to be probably my anatomy of a trade of a year if I can get this back to a scratch. I started with a 90-120 strangle back in February before all the craziness for $6.50. I thought to myself, wow, that's a great credit for a nice strangle. Short put at 90. Look at the chart of United. Boom. Went from 120 all the way down to 50 at its low. So crazy move. Cut in half, more than cut in half. And we now sit with the 80-90 strangle, inverted strangle, and I've collected 1063. So I'm trying to claw this back. As you can see, I went from 90-120 down to I rolled down from the 120 to the 100 for credit, rolled from the 100 to the 90 for credit. So I was at a straddle there. Then I rolled the straddle out to May for $2. Rolled the short call. This was during the craziness, early April. Rolled the short call down from 90 to 70 for $2. And then I made this adjustment where I bought back the 70-90 inversion, which is 20 points wide, rolled it from May to June, and I reduced that 20-point wide inversion to a 5-point wide inversion for $3.70. So I paid a $3.70 debit, but I removed $1,500 of intrinsic value from that position. And I rolled the strikes down closer to where the stock price was. Actually, no, I'm sorry. I rolled it up from 70 to 90 to 85.90. So I bought in a lot of that intrinsic value, but it only cost me $3.70. So that just gives you an idea of how high implied volatility was on April 9th. I was able to remove $1,500 of intrinsic value for a $3.70 debit. And then this morning, I went from the 85 short call down to the 80 short call. So picked up another $1.27. And I just figured, I had this option on. I just figured we're getting a nice rally today. It's up 7%, 8%. I can roll into this extrinsic value strength by buying back my further out of the money option, roll into the rally we're seeing today. You can see the difference here is about a 60-cent better roll today into this $5 rally than if I would have done it yesterday where UAL was $5 lower. So rolling into extrinsic value strength means rolling calls down into a rally. And I did this because I'm just trying to get out of this for a scratch. This at one point was like a $2,000 loser. It's an $800 loser now. So we've clawed back. UAL's rallied nicely, but I'm still just trying to be as defensive as I can. And look at this lean hogs trade. Wow. Wow. Do we take this off? I think we might just take this off. Yeah, lean hogs has just ripped higher since we started this show here. Yeah, we're gonna take this off. We're gonna book this winner here. Free up some capital, and we'll call it a day. We'll route it for 60 cents. We'll see if we can get filled here. But I also don't mind just holding on, considering we're seeing a nice bull run here in live cattle. Okay, wow, that was the whole position. Hopefully, or the whole portfolio. A lot of stuff. I'm gonna walk through this chat here. If you want to join me on the YouTube chat, pop over to Tasty Live. You can throw in your trade ideas along the right-hand side chat. All right, Aaron. Been wrestling Amazon for months now. Sitting on a messy combo. 2 June put spreads. Let's see if we can get this on. Let's see if we can replicate this here. All right. 2 June put spreads, 195, 175. Short put spreads, yeah. 195, 175. A July call debit, 3 by 225. Okay. Let's see. Let's bump this up to 2. Bada bing, bada boom. And a short 200 call in June. All for a $8.83 credit. $8.83. Bada bing, bada boom. Now we got to go to analysis, remove my stuff. And let's see this masterpiece here. Oh, there you go. Okay, so what is your expiration graph? I think that's okay. Yeah, so you've got some put spreads here. $8 credit. You got some put spreads. You've got the calls and unlimited upside above 240, which is a low probability. If I were to do something with this position, I mean, maybe you just sell. Maybe you sell the calls. Sell the calls in July, or you could. Let's see. This is a 120-point wide. If you bought this 220 short call, maybe that's what I do, because your risk is really in the 200 short, right? So maybe you give up some premium here and you buy a couple of the 220s. If you buy, well, actually what you could do is, yeah, actually you only have one here. So you could buy one of the 220s and remove a lot of that upside risk if you did that. Or you could sell another 200 call here and buy 2 of the 220s. Turn this into an iron fly, pick up some more premium, but that would create a lower probability trade for you. But yeah, I mean, the problem here is your short call at 200 if it continues to rally, that is. But you have 20 points wide here. Maybe you sell, or maybe you buy back this 200 call and you sell 2 of like the 200 or the 205, 225 spreads. So you could buy back this for $5 and you could sell 2 of the 205, 225 spreads for $6.40. So you'd pick up a credit, you'd move your 200 to the 205, you'd define your risk to the upside. I kind of like that. And you can do that without using more buying power. You'd actually remove a lot of buying power requirement because you'd turn your naked call at 200 into 2 20-point wide spreads, which would match your other spreads here, and you give it some distance. But yeah, tricky one for sure. Looking for a real small trade, so X and GM are possible. Wow, X. I used to trade this all the time. This used to be another one that was a really good trade for me. It was just a perpetual trade I had on, and it all just comes down to having a mid-price stock, $40, that has high IV. So yeah, GM has earnings, like you said. I don't see it on the calendar here though. But yeah, if I were to pick one, I would trade US Steel over GM, just because GM has half the implied volatility. Similar price product, but like if you sell a 45 strike put in GM, you're picking up $2. If you sell a 45 strike put in X, you're picking up almost $3. So yeah. Yeah, these markets are interesting though. These are really wide. So maybe I wouldn't trade X because they're super wide. But yeah, that's kind of why I like IBIT. $55 stock, 60% IV, or DraftKings even, $35, 80% IV, 60% IV. So yeah, there's plenty out there. General question. I struggle to get short deltas. Portfolio is usually around 80 beta weighted deltas. What are some of your strategies to add short delta? So if you have 80 beta weighted deltas to SPY, I would just go to SPY. Simple as that. So if you have, so 80 is like really not that much, but what I would do is maybe if you're trying to add short deltas in SPY, maybe you just do like a little downside calendar. So if we go to May or even June, you could do something like this. So like if I go to the expected move in June, 535, and then I buy the 535 in July, it's about a $300 debit. It's a short delta of 3, which is pretty low, but it's kind of misleading because like this is a $3 debit, but if you get a downside move, if you get a 30-point sell-off in SPY, this thing's going to go from $3 to $4 or $5, maybe $6. You could diagonalize it. So if you're willing to put up a little more premium, you could buy the 535 in July, sell the 530 against it in June for $4. Gives you some more delta, but this trade would be a $200 winner if you get a sell off down to this level. So it just depends on how much you're trying to hedge, but I would use SPY. I like debit trades. I like diagonals and calendars if I'm using them for hedges, because those are risk defined, and that's kind of what you want if you're hedging a bullish portfolio. Meta over 600. Wow. Look at that. Look at that. Sergio, inverted strangle, 9 rolls in UAL. Welcome to my world. 87.5 put, 80 call for $10. Roll down the current call for an extra $1. That's what I did today. So yeah, you could roll down to a similar position. So you are, I assume you're in June. Yeah, you're in June. So yeah, you could do that. You've got the very similar position to mine. So yeah, you could take this 87.5 put. You could roll the short call from 80 to 77.5, pick up another $1, and you'd be left with $1,100, almost $1,200, 10 points wide, which would bring your break even to right where the stock is. So yeah, literally the same position I have. You just have a little bit better credit. So nice work. Can you show the P&L graph of what? Andrew, let me know. Where's Nick? Nick is in Arizona, hopefully golfing. Sold to put in DraftKings, 49 days. Total P&L is negative $1. I think I'll sell a call spread against it. You could, but I would just check out the strikes there. I mean, you don't want to give up all your upside potential, especially if you're like at the money. I don't think you need to sell anything against it unless you really want to, but just make sure if you sell a call spread against it, I would turn into like a jade lizard. So if you have a $2 credit here with 34.5, if you sell the 36.38, you have a 2-point wide credit spread for 262, so you'd have no upside risk. because you're collecting over $2 and your risk is a 2-point wide spread here to the upside. So I would just turn it into a Jade Lizard if you can. Sebastian, a few shorts on the S&P 500, so my portfolio is negative delta now. What stock or ETF would you get into to get some positive delta? You could add some positive delta in the S&P 500 if you're willing to take some more risk, especially if you have downside trades. So like if you have like downside diagonals, et cetera, you could sell a put in SPY or throw on a short put spread and SPY against it. It's tough. I mean, it's tough now after this big rally to add on a bullish trade. If you're still bearish, I might see if you can get a little sell-off here. We've had a really big rally from bottom to top here. What is that, a 10% rally in 2 weeks? Basically cut this huge move in half. So it just depends on where you stand, but you could also take off, if you have short deltas on that are at a scratch, you could take those off to get positive deltas, because removing bearish delta will naturally give you a more positive portfolio. June IBIT Strangle 66.48 sounds good to me. 66.48. $66.48. Yeah, $2. Nice and wide. Yeah, if you're just looking to sell some premium, I like that range. 66 brings you above the all-time high here, and 48 brings you about halfway down from where we are. Strangle in 2 different expirations. Closing the legs. Is it easier to just look at the P&L from the open and close if it's positive, or calculate the trade to market to cost basis? Well, the P&L open is your difference between the current value of the position and what you sold the option for. So yes, just looking at the P&L open accounts for your trade's market price and your cost basis. And that's especially true if you've been managing positions. Just make sure you have group buy order chains on, and that will show you your cost basis after your rolls. So in Amazon, you can see 967 here. This includes the adjustments I've made. So I initially had a $10.80 debit. I made an adjustment for $1.20. I now have my cost basis down to 967, and that's what's shown on the platform. So make sure you have group by order chains if you're adjusting positions, and it'll show you your net credit. Holding a UAL put spread in June, 75.60, leftover iron condor. Closed the call spread and rolled out. Breaking in small profit today. Wouldn't mind taking my buying power back, but also think it's going to continue to move up. Yeah, I mean, you're in June, so if you want to keep it there, you totally could. But if you want to buy back this position, just wipe your mind of it and then restart with a new position in June or July, you could totally do that too. But you're at 75.60, you're right where the stock price is. You definitely got bailed out in this big move. You've seen a 20-point move to the upside, so maybe you close it, come back to it next week, and reevaluate. But that's a nice trade, and good job by closing the call spread. Sometimes that's all it takes, is just closing that one side, as opposed to rolling down and turning it into a butterfly. I've got time for one more. How are you tracking your cost basis? Is it all just in your head? I wish I could say it's all in my head, but no. We use that order chains feature, RSU Millionaire. So order chains is one of the best platform features of Tasty Trade, in my opinion, just because it keeps track of all your adjustments. You don't have to have an exterior Excel sheet, et cetera, et cetera. But yeah, it's just taking, and to get to the order chains, you can pop out this tab here, go to these little arrows pointing right and left, and you'll see your adjustments through any position you add here, UAL, DraftKings, what have you. And if you click this little question mark on the platform, it'll take you to the Help Center, and that will bring you to the Help Center where you can search for order chains, and there's a huge explainer piece on all the things you see. So definitely check that out. All right. That's it for me. Thank you so much for tuning in. That was a lot. I think that's that was the most positions I've had on when I've gone through the solo YOLO portfolio review. But hopefully that helps. I think we got some nice tidbits in there. I made a ton of adjustments, so check out those adjustments. I'll post them on the follow page shortly. You can just click on my name and you'll see all those adjustments. I'll put in some commentary as well. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central on Monday. Have a great weekend. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We are back. It is Friday, May 2nd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. We're here on this Jobs Friday. Pretty darn good jobs report there, Mr. Spivak. Wasn't bad at all.
Wasn't good either. It's funny because the revision to the previous report was almost exactly the same as the outperformance on the headline, almost to the number. So the previous month was revised down from 228 by almost exactly to the job amount, almost, not exactly, but almost exactly to the job that this one beat. So it wasn't bad, but did it do anything relative to expectations? No, but the market certainly liked it. There's no question there.
Good news is apparently good news. The jobs report wasn't bad.
News is good news, apparently.
And I think that, we can break down the jobs report quickly as we go to the slides here. Why it's good, why it may be masking problems to come is certainly a conversation that's worth having. But at least the top line figures here, as we delve into it, they're decent enough, right? You can't argue with the fact that it's 177,000 jobs created versus 130,000 jobs expected. The unemployment rate holds up at 4.2%, which is in line with expectations. Ultimately, the labor force participation rate goes up by 0.1%. So the economy adding more jobs, we're seeing that more people are involved in the labor market, and thus far, the economy is able to absorb them so far. This is actually incorrect. They should say expected is 4.2% from the Bloomberg consensus forecast. Reuters said 4.1, but Bloomberg, and when I looked elsewhere, CNBC, it said 4.2, so that should say 4.2. It is in line. It's not an increase for the majority of forecasters there. But Here's the wrinkle for all this, right? If people are looking at this data and saying, see, no tariff impact, what's all the hemming and hawing about? The way that the Bureau of Labor Statistics collects the non-farm payrolls figures is it uses a reference week. Week that circulates around whatever week has the 12th of the month in it. So last month in April, the 12th is a Saturday. So the reference week that they have is April 6th through April 12th. And during that period, they're pinging the 130,000 or so businesses that they collect data from to get updates on working conditions, employment, yada, yada, yada. Mm-hmm. April 6th to April 12th is a period when tariffs are paused. And we don't really know. We have, the significant on again, off again. Is this the final resting place of where we're going right now? That's not really decided during this reference window, right? April 2nd's Liberation Day. April 9th, they're lifted. The port slowdown only really begins to occur here at the end of April going into the beginning of May. So I see this as a good report. I understand why the market's moving up. Fed cut odds are down, though, which I think is a monkey paw curl, be careful what you wish for situation. But this doesn't capture the tariff impact yet because it can't. The reference window for the collection period wouldn't allow for that.
There's that, but also you don't get employment reacting that quickly to news that comes out so rapidly. I mean, we're talking about humans here. This isn't exactly adjusting incremental supply of energy flowing through your pipe. Oh, it's a little bit warmer. Let me turn the heater down. Oh, it's a little bit cooler. Let me turn it up. Instant adjustments. That's not how this works. Companies don't fire and hire people with that kind of volatility. The upshot here is pretty straightforward. We were expecting 130,000 jobs. We got 177. Okay, so we beat by 40-odd thousand jobs, which, by the way, not a lot. But we beat by a little.
Yeah.
Okay, the prior number was revised down from 228 to 185. Almost the exact amount that this number beat by. So net over 2 months, is the jobs market better than baseline expectations had it? No. Is it worse? Not really, no. The jobs market is forever a slow-moving, lagging indicator. That's not just a thing people say. There's lots of things in finance that people just say, which for those of us that follow macro is always fun because people get their talking points and their kind of repeatable heuristics from the financial media oftentimes. And the financial media oftentimes doesn't actually adjust to events. They just remember, oh, why isn't gold rallying when stocks are down, and things like this, which are never consistent, correlations wax and wane, et cetera, et cetera. But when you look at the sort of bottom line here, has anything actually changed? No. Would you expect it to change this quickly for a report that lags because people are not a space heater and you can't adjust up and down, and it takes a long time for labor markets to catch things? Well, no, it's not very surprising at all. This is sort of similar to what we're seeing in the GDP number earlier this week. Everybody was very quick to say, oh, look at this jump in inventories and look at this surge in imports. Just take those out. Don't worry about it. Everything's okay. No, 68.5% of GDP is consumption, and consumption is growing at the slowest rate in almost 2 years in the last report. That's a problem. It's a structural one. It lines up with nearly 3 months of collapsing consumer confidence. This would be something that would shock me if, let's say, the numbers really did beat by a large margin and the revisions were positive, or at least significantly less negative than the beat. Okay, that would tell me that since the beginning of the year, because again, this is employment, it takes time to interview people, to do their background checks, to hire them, to onboard them. All of this stuff takes time. So if you got a really strong report today, you beat by a good margin, you would say, right, people came into the beginning of the year, this is the April report, so somewhere around February-ish, as the tariffs started to kind of germinate, businesses were confident and hiring people. And there was an on-ramp February to March, and then by April, these people started to show up in the numbers. Okay, that's optimistic. That's not what this is. Every single revision to these numbers over the past 3-4 months has been down. And this one was just incredibly fortuitous for those of us that are skeptics, because quite literally, the difference between the downside revision for the previous month and this beat is single-digit 1,000 jobs.
It's not a huge report. It's not a big one, but it's not like the market collapsed in anticipation of the tariffs rising. And I think that, in terms of a view, right? And early this week when we were looking at the GDP report, I went through and stripped everything down, final sales of GDP, even looking at core GDP, because again, the metrics that I was reviewing several years ago in 2022 to push back on the whole stagflation recession narrative was strip out government spending, inventories, trade. What are you left with? And you still see an economy under the surface that's chugging along. And by that metric, we were at 3%. Annualized for the first quarter. So that plus something like this is like enough to say,
investment you have to discount as well, though, because inventory build was a huge one.
I know. I'm aware. But there's enough on the meat of the bone that
I counted a kind of super core.
We're not careening into an immediate recession right now.
That's certainly the case.
That's the important takeaway from all of this, that there's a lot of the hard data has yet to catch up to the soft data.
Yes.
And the soft data is kind of apocalyptic right now still.
The soft data is all fire and brimstone.
Which sets up a vibe session opportunity, which is, not to discount the literal underperformance of the microeconomy, grocery prices, gas prices, insurance, all through the roof, straining household finances in 22, 23, 24, even now, right? But there was a disconnect between what you were seeing in the macro level numbers and how people were feeling. And this is something that kind of broke from before COVID, where if you were to take all the inputs about the jobless rate and where home prices had gone and XYZ factors, you would think that consumers would have been a lot more confident than they were. And so people dubbed this, I think Kyla Scanlon is the one who came up with it. They called it the vibe session. And so maybe we kind of have that right now. The vibes are terrible. The data's holding up for now.
Again, I've got to push back on it a little. And I agree with you. The hard data is not nearly as bad as the survey data would suggest. But you can't get the slowest consumption in nearly 2 years following a steep slide in consumer confidence over a number of months leading into that data and say these things are not connected. And this is the majority of the economy. Moreover, it's the service sector. And that has been the only thing growing, not just in the US, but internationally, basically since the middle of last year. So, tariffs, no tariffs, we've been talking about this for 9 months. The one thing you could not lose if you did not want to have a global recession was the US service sector, because basically the global economy hinges on 3 things: the Eurozone, China, and the US. The Eurozone and China have slowed to a standstill and have basically sat there for half a year. The US was powering on, and it wasn't feeding demand elsewhere because the powering on was in services and not in goods. So there was no uptake that was spilling over into other economies. We were not prodigious importers of goods. The demand was not there. So if you wanted to keep global growth afloat, what you had to do was keep the US service sector up. It's not up. So, and you're seeing it in the consumption numbers. You've been seeing it in CPI, where the core parts of the CPI, the ones where the sticky inflation is, which tells you where demand is pulling, that's the part that's slowing. Core services. So all of the ingredients are here, but all of the lagging indicators, to your point, like the jobs data, they've not caught up. And that puts the Fed in a bind because they can't cut and they can't get overly dovish. We see that in the bond market today. And it certainly gives stocks enough to hang their hat on.
You talk about the bond market here and careful what you wish for. Did you know that there is a higher chance of a 25 basis point rate hike next week than a 25 basis point rate cut right now, according to Fed Funds futures? So the market,
that's just fun. That's just good fun.
Right? The current mix of data is not a set of data that's going to allow the Fed to act just yet. And the reality is that if the economy is holding up more, then you're tilting towards an environment where it's more concerned with the inflation side than the growth. And then it has to hike rates again. We're not there yet, of course. No. And that's not the news of the day for stocks. The news of the day for stocks is that the economy isn't falling apart imminently. So you're getting a big sigh of relief right now. I would question whether or not this is well placed because of the reference period in which the data is collected, but that's neither here nor there. What matters is that stock's 5,700 right now, 26.9 IVR. We are continuing to extend this rally. We close above the 1 week moving average here on April 22nd, and it has been every close since then. 8 consecutive days. Haven't seen a rally like this in quite some time. I think it's been at least a decade. Last I checked, I think 2012, but it could be beyond then either. We still haven't breached the April 2nd swing high, though, the Liberation Day high, which is a level that we flagged yesterday as where it kind of felt like the market was racing towards. We're making further progress towards there, 57.73 and a quarter. The Nasdaq's already breached the equivalent level in the market, clearing the April 2nd swing high. It did so yesterday, and now with a close today, it would get through that 20,044 and a quarter level. So maybe that means a push to the late March high. Late March high April 2nd high for NASDAQ and ES respectively. And we look into next week's calendar for potential catalysts. Monday could be that short circuit. ISM Services is due Monday. And that is another sentiment survey. And the sentiment surveys have been terrible. So it feels like there is a piece of bad economic data lurking around the corner that I can't help but think maybe we're skating past.
Last time, just to answer your question here, as I'm looking on the chart, last time we had 9 consecutive days. Looks like it was December 2019, right before the moment.
December 2019. Okay.
Looks like it. We've had many more instances of 8 consecutive days, but 9 consecutive days is unusual, and that was the last time.
I'm not one who believes in the, like, I don't necessarily believe long in the tooth unless you get to some like really extreme level, like you see like gold 25% above its 200-day moving average. How often does that happen? Not really ever. Right, like, so that I don't really buy, like, we've rallied 8 days in a row. How far have we gone? And particularly in a stressful environment like this, where if you're selling because of this unknown and the unknown is removed, then you're going to snap back to where you were. And that's where we are. We're now basically where we were at the start of April.
This to me is the most critical thing. If you look, the first leg of the decline comes when that survey data starts to sour. And that's sort of, let's call it mid to late February.
February 21st, you actually get that PMI report.
Right. I mean, it's interesting, of course, because you actually set the highs in early December, and you never breach those highs. So you stop the rally in early December before the year turns and before the new administration takes hold, ostensibly because people go, you know what? I don't know what's going to happen here. The holidays are coming up. I'm packing my suitcase. Have a nice time. I'll see you later. And then nothing happens. You don't breach the highs. You just oscillate until February 21st, I think is right. You start getting the PMI data that starts to scare you. That into the middle of March is a growth scare. It's very orderly. There's no panic. There is a steady decline in stocks. Bonds go up because we're going to have rate cuts. The dollar weakens. It's all very regular. Not until Liberation Day do the markets set their hair on fire. We've now erased that hair on fire incident. And rightly so, in my opinion. Because as we've talked about before here, most of that seemed like a giant build-out of term premium, which would imply genuine sovereign crisis type of price action for the U.S. And to have a sovereign crisis in the U.S. is a bit like to trade for Armageddon. You can't. You cannot base an investment strategy on there being Armageddon. Because then you can't bet on markets being open, on any of the market structure even existing. You cannot.
You're short, but you have no more counterparties. So who's going to give you the money?
It's like you were short, but the stock exchange isn't open, and hyenas are roaming in the streets. Like, what? No. So at some point, you have to invest with the idea that there will be markets. They will be liquid. Counterparties will exist. They will fill orders. So you can't bet on sort of utter collapse of civilization. And the treasury bond and the dollar are so ingrained into the system, and it would take so many decades for them to be uningrained, even if you had an alternative, which you don't, that to have a real sovereign crisis in the U.S. over the course of a month is lunacy. There's no alternative. And if there's no alternative and the system itself continues to exist, well, then there is no sovereign crisis in the U.S. because it's still the most eligible borrower by default. So it makes sense that April reset, but where are we? Exactly where we landed on the growth scare.
Well, we're back.
Done it. We're back.
The question is right now, what's the approach? I mean, if you're doing this from a pure technical perspective, as we've talked in recent days, for me, the problem is that I just think that there's this huge economic overhang, this bill that's coming due now. The trade data is shaping up a little bit better. As we talked with the Port of LA, the bookings are coming back in, and year over year, it's actually positive in future weeks. So some of that trade disruption for now looks like it's just going to be a temporary wrinkle. We'll have to keep an eye on the data, though.
I mean, looking at the GDP report, you don't really envision that there's going to be a huge drop-off in shipments because obviously there was a huge melt-up in imports and in inventory building. You can see it. It's right there. It's off the charts. And those ships are going to take weeks and weeks and weeks to keep arriving. If that was the number through the end of March, and those ships can take weeks and weeks to sail, we'll just do the math. If a good chunk of that is March, they're not arriving yet. They'll arrive at some point in May. They'll get time to process. I mean, this is not going to happen overnight. People that are running around screaming about empty shelves are probably very, very early, if at all correct, because we've stocked up a lot. And you can see it in the numbers. So it'll take us some time to wear that down. And who knows, maybe before then there is some sort of an off-ramp for this thing. So I think it's important to be both skeptical but also not hysterical.
Skeptical but not hysterical. I think that's well said. Sector performance today, it's another good one here. The only things that are negative territory, believe it or not, are the gold miners, GDX and GDXJ, but GDXJ is unchanged right now. GDX is only down 0.5%. Otherwise, it's all about the semis, which very tariff sensitive here. So maybe there's a read through on that, another 3.48% gain. Regional banks up as well, 2.62% right now, which is a pretty nice look and move there. Ilya, we have the bank ETF, we have XLF, which to me has been the one chart that silver lining among the sector ETFs here. If the economy is really going in the tank, then the banks are not going to be doing well, right? The fact is that they're back in the midst of the multi-month trading range that defined XLF's price action from mid-November, or we could say October onwards up until early April, and we've broken the downtrend here. So you can pick and choose. I mean, there are legitimate reasons to think that we may have washed out. We talk about the dollar nominal amount of calls and puts purchased in the S&P 500 at the start of April. It was the ratio was the most negative it had been since COVID, and it was more negative than it was at the COVID low. So talk about abject panic in the market. Yeah. And likewise, there's one other point to that end. Jamal and I discussed this yesterday. I tweeted about it yesterday as well, so you should check the Twitter feed for a conversation between me and Jamal, at least a mention of him. But retail traders were buying the entire way down in April.
Yeah.
It was institutions that
The
were
Economist even wrote about it this week, about the resilience of U.S. markets and how money managers are spooked and institutional money is spooked, but retail is buying the entire dip.
That sets up an interesting dynamic where, according to the most recent CFTC COT report, which we will get another iteration of today in about 2 hours and 2 minutes, so data will be updated.
As of Tuesday last week is that positioning.
So. Yeah, so it's not.
We're not going to see
yesterday. We're not going to see what happens Wednesday, Thursday, or Friday's positioning, right? But the point is that we did have a net short position among speculators in the futures market. And so knowing that fund managers abandoned stocks at the start of Q2 and have since ripped back to the upside, you have an interesting dynamic where a lot of people are incentivized to chase every little positive headline. They're incentivized to chase and push higher and push higher and push higher.
Well, that's, if you're bearish, by the way, as I am, that is a beautiful sort of situation. Because the one thing you get very concerned about, and I talk about this a lot when my trades are working, especially when they're really working, is when I get the most nervous. Because that tells you the trade is fast on its way to becoming consensus. And once it becomes consensus, it's probably over. Look at the past three Economist covers, not this week, but the preceding few, and you're like, oh my God, this thing is running out of steam. This is becoming very, very, very consensus.
It was an injured eagle last week. I mean, like, we flagged that. Like, come on.
Yeah, it was an injured eagle. It was the Scream painting redone as the dollar before that. I have the preceding one right here, actually. There it is. You can see that. It says the age of chaos. So it's absolutely nuts. The speed with which the move occurred and became consensus. This, if you look at the data and you look at the underpinnings and then you look at the unclenching and the price action, this is beautiful if you're bearish. Now, obviously, my shorts are feeling some pain here. Thankfully, we're still well within risk controls because as I constantly repeat, I'm using verticals and very small size because these are very choppy markets. They're very volatile. You have to be exceedingly careful. But, and to that end, it would have been better to get short later, not when I did. I jumped the gun. But that the market has reset, from my perspective, is a good thing for the downside perspective, if that's your opinion. I mean, if you believe this rally, Godspeed. I don't. And so for me, this is now becoming a consensus bullish thing, which makes me more confident in shorting it.
Just taking a quick look at SPX through the end of the day, still about 18 points either direction. So quieter session here. We've seen some actually jumpy markets or even through the halfway mark of the show. Still looking at basically a % move priced in through the end of the session. It's been a quieter day, though. I do want to point that out. Usually we like to benchmark 1 million cars traded here, as some might say. In ES, we're only at 880,000. So quiet start to the month, and we basically have been pinned all session. We came in around 57.08, talking stocks for 20 minutes. Indexes have done absolutely nothing. But, bonds today, good news is good news for the stock market. Good news is bad news for bonds. You're seeing a little bit of a growth premium, inflation premium get built back into the market. But that's in part because those cut odds turned south. And I think that's where I want to start, Elia, when we take a look at the SR30 Z5 here. Over the course of the day, really over the course of the past 2 days, an entire cut's been taken off the board for 2025, right? Yesterday, we have a market that's looking at a 3.25% Fed funds rate by the end of the year. With today's move, we're back already past 3.5%. So this is a very dramatic shift in Fed funds expectations in a short period of time.
Yes.
But it leaves the Fed in a position, like the market's now saying greater chance of a hike than a cut next week, which obviously isn't going to happen.
Right.
But if the economy is holding up and there are concerns from the Fed's own modeling that inflation is going to rise, but the economy holds up, they can't cut.
They can't cut. Yeah.
They can't cut.
You can't do it. No. So this is where the situation gets interesting. Because to me, this is the dance now. And what the Fed says at this point, take one step back. If April was a panic because maybe the entire architecture of the global economic system was starting to crack, once we saw the put emerge, the Trump put emerge in the bond market, everything unclenched. Because the market said, oh, okay. We are being heard. We're just not being heard in the stock market. We're being heard over here. The pain point is higher rates. Okay. Lesson learned. And they unclench. Then there is this spook on firing Powell, and the bond market goes, wait, were you not listening? And they go back to the point of maximum bond market pain, and the White House again goes, whoa, 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 whoa. Take it easy. Nobody's firing anybody. I don't even know what you're saying. Who said anything about firing? You did. Oh, I don't know anything about that.
Never met
And
her.
so that didn't happen. Who? And so you get this situation where, again, the markets go, oh, okay, market discipline works. We can shape these outcomes. It doesn't have to be the end of the world, because if it is, then the bond market will go back to the warning signal, and then we'll step back off. Okay, this is not unmanageable. Now go to where we are now, and it's just a regular growth scare, and the Fed is no closer to resolving any of what it said in March and before, which is, well, we don't know what these things are going to do. We're like you. We're all sitting here waiting for stuff to happen. See you next month. Bye.
That's kind of how I'm approaching notes and bonds right now, just directionally neutral.
Yes.
Been making the case a lot this week that when we look where we are in the grand scheme of things for notes and bonds, it's been sitting, this week we've been oscillating between the 38.2 and 618 retracements of the yearly, the high-low trading range that we've carved out this year. So it's not like this is a market that's going anywhere fast. I'm obviously a little disappointed because I do have a short put spread on here in ZB as well right now, which I intend on keeping on. But there's a short iron condor in ZB, and then there's a short iron condor on in ZN right now. And so as long as we continue to oscillate around these levels and we hold the lows here from April, I'm totally copacetic with hanging out right now.
I've been torturing my long end position for weeks. Basically, I had it first on as a call vertical. Then the meltdown in bonds happened. And I still had plenty of duration, but vol had become expensive. So once the put emerged, I started selling put verticals. And over time, ended up constructing this big long end position where the cost had been whittled down to basically nothing. Because the premium I paid for the calls was offset by the premium I received by selling the puts, and things were still not really going anywhere. And then the long end had a nice little rally. So today, when I saw the pullback today, I said, you know what? This thing is basically costing nothing, but some of the early parts of it are maybe 2 weeks out to expiry. I'm just going to close this entire thing. The whole thing has basically become a scratch.
Better than a loss.
Better than a loss. So I've been massaging this long end trade for like a month and a half. It ended up being nothing, and it shouldn't work any better, I would suspect, next week, because you're not going to get a Fed that's going to be eager to do anything. The only thing that I suspect might get me excited again about the long end, let's say between now and the Fed announcement, unless, of course, there's always a tweet, you never know. But the market may read the Fed's reluctance as a reason to build more easing into the back of the curve. And that might be something here. So, we'll see. But no question, the market does not feel nearly the confidence in the Fed's sense of urgency than they did even just a couple days ago.
We're looking at 3 cuts priced in this year right now.
It's a little bit north of the Fed's expectation. A little bit.
We have stocks back to where they were on Liberation Day. You could put your recession trades back on.
That's what I'm thinking. That's what I'm thinking. Exactly.
Right.
That's exactly what I'm thinking. It's like, okay, we've doused our hair on fire situation. Now let's just get back to our recession trades. Obviously, they're now out of consensus, which should make them work better. Here we go. Let's get a terrible ISM number on Monday and see what these markets do. Because that's the way this is shaping up.
I'm still looking at the 109, 110 short put spread, the 115, 116 short call spread. That's the body of the Iron Condor. We're still ping-ponging in between there. Same thing for ZB. Not really much to do as long as we're playing this game of ping pong right now, and I do have a little bit of an upside bias as well. Not working today, but Theta Bird is our friend, and as long as the Trump administration lets 4.5% of the 10s hold and 5% on the 30s, you just have to be patient. That's the plan right now, having faith in the Trump put in TLT. Metals today find some reprieve. It's both good news for both gold and copper, at least for me. Elliot, I'm not sure how you're handling this right now, but gold.
I don't have any exposure in the metals at the moment. It's fuzzy. I want to be long gold. I don't have a good idea on, not so much on having a directional opinion on copper. I have a directional opinion. I just still do not find myself with a good tradable instrument that's not too big for the way I do risk management. As you know, I like to open small, and I like to build into conviction, and manage risk very, very, very tightly. Because a lot of times when you're macro oriented, you're early, and so you have to be able to ride out things. You have to keep your position size small because you're wrong at the beginning a lot, until the move finally comes. And so you need to be light, and you need to make sure that your ultimate gains, like that insane run in the dollar at the beginning of the year, which has been my most profitable thing so far this year. I've made, was it like 12% so far this year, give or take. And most of it has not been catching the stocks sell-off. It's been catching the dollar dump. So you need to be flexible, and I don't see where the copper instrument is that would let you do that. But gold, I want to be long. The question is where.
3,200 seems like the ideal spot. Yeah. And I got a little impatient here in the short and jumped the gun and flipped long. So today is a little bit better, but it's only up by 0.42% right now. It was up more earlier. We need to see 3,200 hold. Although given the trade headlines, right, one has to assume that if there was a significant jump forward, particularly between the U.S. and China, you're going to perhaps get that break of 3,200, and you'll want to back off any long delta exposure while the market goes through its reorientation period. And they'd probably mean a squeeze higher in stocks, right? You're going to see a squeeze higher in bonds a bit. The Buy America trade goes back on. The economic reality hasn't changed. That's not to say that gold and bonds still won't be great places to hide out during a recession if history is any guide. Sure. I have my line in the sand here. Close below 3,200 on a daily basis. I'm done. I'm going to stay long for now here. Copper's working out a little bit better, though. Short put spread was sold near the lows the other day, so operating around that low, 450, 440 still.
Yeah.
Just because of where we had come into the market on this 4-hour time frame, we could see in recent weeks and months, this area right around 4.55 seemed to be something of interest, and that's where we stopped falling. So I have some things to work with that are a little bit growthier, right? Copper's up today alongside stocks. Some things that aren't working today that are growthier, like oil, which we'll get to in a moment. There's an OPEC meeting that was moved up. Metals are mixed. They're not hurting terribly today, but I wish they were doing better.
Yeah. I mean, if I got a sense here that oil was bottoming and gold was cracking lower, that would be more of a consistent story across kind of, here's what's going on with rates, here's what's going on with with growth. Here's what's going on with expectations for the economy. You did see oil stabilize today, and I got out of my shorts, but what you don't have is this consistency. I would love to get long gold here, but it's difficult to want to do that. And it's difficult to be optimistic on anything growthy at the same time. If you had a response today where yields went down, gold anchored, that would start to look like a narrative. You would start to see the pieces across markets and across assets lining up. You're not seeing that here.
You're not seeing that here today. Silver prices are down as well. I'm getting impatient with this position. I've taken it on the chin enough, but momentum is flipping here, and now the 5 EMA is below the 1 week. Momentum, sell signal at MACD today. We're out of oversold. Excuse me, rather out of overbought. The silver exposure may need to be revisited, and the gold silver ratio has popped back through 100. So what looked like you had a legitimate turn coming here, even just last week, right, poking through that uptrend again, has since failed. But if copper's up, silver should be following. There's enough to work with, but I'm losing patience being long silver for the time being. Oil down, nat gas up today. Ilya, OPEC Plus has announced that they will be moving forward a meeting regarding increasing production up from next week to discuss June production to this Saturday. Ilya, what could be so important that OPEC Plus is going to force people like you and me who have a real sickness about these things to pay attention to the news flow over the weekend?
Especially considering that these guys are not really an incremental producer anymore. This is one of those things that the financial media, in my mind, amplifies to more significance than it deserves. These guys don't really shape market outcomes. Other than headlines come out, markets get into a kerfuffle, and then eventually they remember, oh yeah, the U.S. produces more petroleum products than Russia and Saudi combined. Who cares what these guys are talking about? And so it's interesting. It's interesting. But of course, I mean, why so urgently this weekend? You can come up with all kinds of different narratives. My favorite theory floating around is that a U.S. strike against Iran, or at least an Israeli strike that's U.S. blessed and supported, is some kind of imminent over the coming weeks, and all of a sudden we need to increase output because there's going to be a supply shock in the Gulf. That's if you want to get your Reynolds wrap out and make yourself a hat. That's probably my favorite version of this story.
Crude's down a little bit. Natural gas is up. I still don't have anything going on in natural gas here. The volatility has accelerated in recent sessions, though. That is worth noting. There was a few days ago where IVRs were 0, but now back to 362. We never quite got to the area that I was personally looking for in this head and shoulders pattern, so I did not jump in on the long side. Maybe some people were a little bit more daring than I was and were able to establish long deltas. I suppose the question is where to next, though, right now. And considering where the market fell off, there's not really much here in terms of technical. So 394 maybe on a rebound. Natural gas, obviously, if we have tariffs in place, the domestic market's going to be flooded. It's been a warmer spring so far. The tariffs are coming down, then maybe that oversupply in the domestic market dissipates. Ilya, we only have a few minutes left here, and I know that you're itching to get to currency. So if this is good news for the U.S. economy and Fed cut odds are down, where we now have a world where the market's pricing in a greater chance of a hike than a cut next week, why on earth is the U.S. dollar not finding this to be a supportive environment? Granted, it's not on its lows today, but it's still down on the session.
I think the U.S. dollar has been the most, for me, the most logical market of this entire episode. You'll notice from the extremes in April, where you had the sort of the sell America vibe, U.S. stocks, U.S. bonds, dollar were all going down together. Stocks unclenched. We just looked at them. They're back to basically where the handoff from recession to panic mode occurred. Bonds have mostly unclenched. They're a little bit down today, but I mean, clearly we're well off the panic lows, and this looks like a trend higher, with this being a stair step down. And we'll see where it bottoms, but the trend in bonds, especially at the long end, has been higher highs, higher lows. The dollar has not come back and is just hovering. If you look at the euro, range.
It's hovering.
Pound, range. I got a little bit long Aussie today, actually, because it cracked through the top of its narrow range. So that actually looks like maybe something's changing. So I suppose I have a little bit of a hedge on to my short equity exposure now, because I'm offsetting it with a little bit of a long, high beta commodity currency type of offset.
But so couldn't there be a world in which the Aussie rallies and then the broader dollar rallies as well?
Totally.
Right? I mean,
Sure.
I guess what it feels like is I'm just thinking about levels here. 3,200 in gold. Basically 100 or so in the DXY. You look at that 4-hour time frame.
Mm-hmm.
First off, let's just reestablish where we were on the daily real quick. Lows that you have in September prior to the market pricing in Trump as the favorite. And as Trump increasingly becomes the favorite in October, ultimately coinciding with his win in November, the dollar pushes up. So this is the pivot when it goes from Kamala being the favorite to the Donald being the favorite.
Well, and yields are building this entire time, because the upshot starts going, oh, okay, all of this is going to be positive for the dollar, because all of this helps support a less dovish Fed.
I point out that line where we bottomed in September in DXY is where we're finding resistance post-Liberation Day. Yeah. And so you can make the case, right? If gold is below 3,200 and the DXY is punching through 100.5, the market has made its collective weight that this tariff episode is over. We're on the off ramp.
Yes.
We are on the off ramp. It's no longer we're looking for it. We are officially on the off ramp.
If the dollar starts to strengthen in earnest, yes, I think so. Because
forget the noise in the news and everything else.
That has been the thing that has told you, don't get too cocky here about everything is fine. The dollar has not unclenched. That's cash. That's the biggest market by far. And if the dollar has not chosen to participate here, but for when the Bank of Japan spooks the yen of its own accord, which, by the way, has already mostly unraveled, then something else needs to be kept in mind here. Maybe it's that the market is still priced in for more rate cuts than the Fed is saying. And that's an important overhang.
It is.
Why is it that the market is priced for more cuts than the Fed has said? We started the year, let's remember, with the market being 50 basis points lighter than the Fed, and the Fed being dovish relative to market expectations. That gives you a strong dollar going into the beginning of the year. Soon as the calendar turns, bonds start going higher, yields start coming in, dollar starts coming down. It's as though the market is preparing for something. Stocks can be emotional. Bonds and currencies, especially when you look at them over like a week or two, they're a lot more kind of sober in what they do, especially when you look at liquid things. So it's interesting what the dollar is doing here. And I agree with you. If the dollar really goes on a meaningful rally, then we're going to have to come back to any kind of holy hell scenario at some point, like over the summer. There'll be a good window of a couple of months where nothing is on fire. Not there yet, though.
Not there yet. Yeah, it sets up, you can almost start to see, as I'm piecing it together myself, trying to take a step back, the contours of a 2Q that holds up a little bit better. And that's really Q3. If there's going to be damage, that's where the market would rear its head. And so it's almost like maybe it's going to be a typical year. We're at the start of May. Everyone says sell in May and go away. I like to say that it's buy through July, in part because the market has tended to rally in recent years, past 10, past 20 on average in May and June. And in July, the market has almost uniformly taken a dive in August, September, October, almost clockwork for whatever reason. So maybe that's what we're doing again this year, Elliot, right? Like we all got too worked up in Q1. Q2 is about relaxation. Q3 then becomes about the panic again. Q4, we have a sense of where we're actually heading. Things stabilize. In any event, we're going to get more of this bad data perhaps on Monday. What's next on the calendar? It's a thin calendar for Monday, but you're going to have the ISM Services PMI. I suppose there is a speech from a Fed official over the weekend, but Fed officials haven't really mattered much unless their name starts with J and ends in a Rome. So this is not Powell. I don't think we're going to see much of an impact here. And of course, anything that we get in terms of a Truth Social announcement or tweet or that supersedes most anything else. So
that's right.
With that said, though, Ilya, another fascinating week. We've started May on strong footing for stocks. A jobs report that wasn't the worst of all worlds. So heading into the weekend with a bit more steam at equity markets back. Other than that, though, you and I are done for the week here. You'll be back on Sunday for First Call. I'll be back on Monday with you for Futures Power Hour. So best of luck to everyone continuing to trade here. After a brief break, Ilya and I are gone, but Dr. Jim Schultz is coming in with From Theory to Practice up next on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do. Welcome to the post-apocalyptic edition of what it is that we are trying to do. Guys, I still can't believe it. Apparently, we made it through NFP. Apparently, the economy is actually pretty strong. Apparently, a lot of people are getting some jobs. And so apparently here we are. We live to fight another day. So welcome to the show. I'm so glad that you're here. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and you can join the discussion and you can celebrate if you are a bull and you can commiserate if you are indeed a bear. But before we look at the market, guys, let last night be another example. If you had the numbers beforehand, you wouldn't know how to make money. If you knew the Apple numbers before they were released, you wouldn't know how to make money. If you knew the Amazon numbers before they were released, you wouldn't know how to make money. It is completely random. The stock market reaction, the reaction function to these earnings results, man, it's 50-50. Maybe 55-45, kind of slanted to the upside to match, the longer-term positive drift in the marketplace. But you would have no idea. You would have absolutely no idea how to make money. Not to mention, find me the person that had Apple crushed on earnings, Amazon crushed last night, but has since rebounded today, which is not so great for us, but also NASDAQ up 400, right? Even the S&P is up 100. Nobody had that on their bingo card. Nobody saw that coming, not a single person, right? Not even Jam Croissant, not even ICT. Nobody saw this one coming. So anyway, I rest my case. It's all pretty unpredictable, man. So Josh, bring us into the market. We're getting all fired up here on this Friday. Let's take a look and see what the market is doing. Yeah, here we go. Even S&P's up 92 on the day, looking rather robust and rather plump and juicy. Risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product, up 365 on the day. You've got the boomers up 575. And then you've got the Russell 2000 Futures Index up 50 on the day. So looking pretty strong. Got gold up 15. Got bonds down about 28 ticks. Got notes down. Got oil down. Got UB40 down. British pound is up. Euro's up. Volatility obviously down. Bitcoin bros celebrating today with, another $400 in their back pocket. So I guess they would immediately transfer that to their cold storage back into crypto. Is that how that works? I feel like Bitcoin should be priced in itself. I feel like Bitcoin should be priced in more Bitcoin. It shouldn't really be priced in dollars. That doesn't really make any sense. The whole point of Bitcoin is to get rid of dollars. So we need a new unit of measurement on Bitcoin, but I digress. VIX, the old spot volatility, the old VIX instrument, down to $1.93, getting smashed to pieces, down to 22. Man, we used to be something, guys. We had them for a minute. We had them there for a couple of weeks. VIX 30, 35, 40, 45, 50, 55, 60. I mean, the VIX was crazy there a couple of weeks ago. And now, VIX 22. Again, why even put pants on? Why even get your day going? It doesn't really make a lot of sense. If I go to, I don't really want a 1 hour chart. Let me go to a daily chart of the VIX. Look at this, man. It's so funny. Back here, volatility is such a funny thing, by the way, a little housekeeping for you guys. Don't forget, I'm going to be out all of next week. So we're going to be out next week. I've got to burn up all this vacation that Autumn is making me use. Again, just between us, I think I'd rather be here. But I love my wife and I love my children, don't get me wrong. But I also love being able to do what I do every single day with you guys. And so the fact that I won't be able to do that is a little bit bittersweet for me. But I'm going to be out all next week, which, by the way, man, I picked a doozy of a week to be gone. Because you think that it's over, like you think we got through the woods, like you think that we're, out of the thick of it, having now surpassed or gotten by NFP. Next Wednesday, I've never seen a more important FOMC print. There has never even been a more important Fed meeting than what's coming down the chute next Wednesday. What's Powell going to do now? Is he going to cut rates? Is he going to cut rates into a super hot labor market? Is he going to cut rates into runaway inflation? Or is he going to, maybe he's going to hike rates again? I see 25 bips on the hike cycle getting a little probability on the old Fed funds watch there. So next Wednesday, man, it's going to be a little something. And I am not going to be here to help guide you guys through it, which is actually probably better for you. You're probably going to have a better performance with my absence. So you're welcome. But if you look at volatility is such a funny thing because back here, back when like the beginning of the year, you've got the VIX under 20. We're all like, oh man, there's nothing to do. We're all crying and we're whining and we're like, the VIX is 17. Again, why put pants on? Like, why even start my day? Like, I got it. Then the VIX spikes up to 30 and everybody's like, whoa, hey, hold your horses now. Like, I kind of enjoyed the comfy confines of, a VIX at 17. A VIX at 18 and a quarter. It was pretty nice, right? Then VIX spikes up to 30. It's like, well, wait a minute now. This may is not exactly what I wanted. So then the VIX calms back down, and you're like, all right, that's a little bit better. But then right here, for just a tiny couple of seconds here, everybody again, there's whining, there's crying, there's weeping, there's gnashing of teeth. Like all those things are happening, and then boom, there you go. All the volatility you can handle and more, with the VIX going all the way up to over 60. Now again, I don't know if this is real. I'm not sure if VIX HQ is going to even let us use these prints, but this is just what I have in front of me here on the chart. And so VIX over 60, that was definitely something to, give you a run for your money. And now we're back to VIX at 22. And again, it's like, all right, I'm just going to start taking some more days off. Which again, I'm doing next week because I have all this vacation built up. But even you yourself, wherever you might be, it might be time to just kind of mail it in with the VIX only at a 22. It's like, man, like what? I mean, what are we talking about now? 80-point daily ranges? Like I need an 80-point, hourly range in even the S&Ps. Like that's what I need to kind of get me going. But anyway, I digress. Market is strong. Market loves the NFP. Market loves everything about it, all the fake stuff, all the real stuff. I mean, most of it's fake, but some of it might be real. And market is loving us. All right, so what we need to do, man, we had them. We had them last night. Man, we had them last night. Right? I mean, you can bet your bottom biscuit. I was at Bonefish. I didn't plan on going to Bonefish, but when Apple started sinking and Amazon started sinking, I said, Autumn, we're going to Bonefish tonight. Like, we're getting the filet. I'm getting the filet. You're getting the filet. You don't even have to get 6 ounces. I'm going to let you get 9 ounces tonight. Right? I mean, we had a great time at Bonefish, but then all of a sudden, right, Apple has stayed pretty low, stayed pretty weak all day. You can see that right here with Apple at 205. But then Bezos, man, like I thought we could keep him down, but my man just came, like he came with the chest and back pump yesterday. And then today he just went with the tried and true Friday buys and tries pump. Like he just went tried and true Friday. I think he went delts, buys, and tries. I think he went a little shoulders and arms on Friday, which would explain Amazon's resilience to, whatever happened last night with the numbers, with the whatevers. I mean, obviously all the numbers were amazing. They're always amazing. They always beat on revenue. They beat on earnings. I mean, it's all just it's a game, right? They're all going to overperform and kind of guide them down throughout the quarter. And then obviously jump over that hurdle when the lights are on and the cameras are rolling. But still, that doesn't really do anything for the reaction function because you just never know what's going to happen. But Amazon, yeah, it's man, we really had them. Apple, Roku. Look at Roku, man. Look at Starbucks. Wow, our Starbucks earnings trade is actually going to kind of work now. So there's gimmies and gotchas. It is indeed bittersweet. Right? And so Amazon didn't work. Amazon's a bit of a bummer. Now, the short call that we did for Amazon is working okay. But the expecting move butterfly is not obviously in a great spot because you've got Amazon now over 190. And so we'll talk about that here in a couple of minutes. But Apple is going to be a huge winner. I mean, we'll start with that. Let's go ahead and shoot from strength here. And this victory lap alone is probably going to take me the rest of the program. But you've got Apple at 205 and some change. And you can see right here, if you saw the show yesterday, we did this trade on air on the show. We did the 217.5, 207.5 long put spread for Apple. We did this trade, if I bring up the chains here really quick, the old trusty Allison chains. We did this trade on 5-1, which was yesterday. Happy month anniversary to you guys retroactively. We did it at 213, so we did it pretty early in the show, and we bought the spread for 480. It is currently marking for 992. Its maximum mark price is only $10. And so we have found a way to squeeze every single drop out of this orange. And so, I mean, I'm still going to find 5 minutes of commentary, but this is pretty much how you draw up a vertical spread. This is pretty much how you draw really any defined risk earnings trade where you're buying premium. You want the spread to reach maximum value. Now, if you're selling a put spread or selling a call spread, still, defined risk. You don't want the spread to reach maximum value. You want the spread to reach zero. You want the spread to move in the other direction. But when you have a long premium play, like a long premium play, I should say, like a long vertical spread, you want that guy to go to maximum value. And that's exactly what's happening here. It's only a couple of pennies off of the maximum value of $10. And so obviously there's nothing else to do. There's nothing else to talk about. We're not going to roll this. We're not going to hold this any longer. Like, we're going to go ahead and close this guy down. And it ended up being an amazing winner. It ended up being a terrific winner. Basically maximum profit on the trade. So about $5 is what we're going to be able to take home from the Apple trade, which is good. I mean, that pretty much paid for last night's bonefish and several more bonefishes. And so that's some pretty good stuff. So let's go ahead. Let's close out of this vertical spread. That wasn't too bad. I had you guys out the door in only another 90 seconds. Man, so 990. I'll probably get filled at 990. I might even get improved, actually, at 990. Yeah, we got improved to 992. And so we got filled at 992. Again, the maximum value was $10. And so we ended up picking up about $5 on the Apple trade. So the Apple earnings trade was indeed a winner. I'll come back to Amazon because that's going to be a little bit of a longer discussion in terms of what we're going to do. Roku is going to be a quick discussion. Didn't one of you guys bring me Roku? Who did I write down on my list? Hold on a second. One of you guys brought me Roku, right? Who was it? Roku. So I've got Brad Glazier written down, but then it's crossed out and it says Dr. Jim's trade. So I guess this was my trade all along. And so Roku, nice trade by me yesterday. And so we were able to take this guy off for a win. No, thank you, Brad. I appreciate you, my friend. Thank you so much for this trade. We needed it because, Amazon was, we were so close. Oh, man, we were so close. We were about to hit the trifecta. Man, we were about to get the earnings triple crown. Right, Apple to the downside, Amazon to the downside, and Roku to the downside, but actually skewed a little bit more of a neutral trade, which is actually exactly what Roku did. I mean, that's pretty wild that Roku, it went down, but it didn't go down too much, which is exactly what we wanted, having sold both sides, on this strangle, the 50-80 strangle, which is what we have right here. And you can see, I mean, I guess you could keep it on. You could possibly entertain the idea of keeping this trade on. I'm certainly not going to do it simply because I'm not going to be here next week, so I won't even be around to manage it. So that certainly doesn't make any sense. But you could, if you're going to be business as usual come Monday or whatever, I guess you could hold the trade. It doesn't really make sense to me for a couple of reasons. Number one, you had basically the perfect earnings move. But then number two, which actually probably should have been number one, it's beyond 50% of max profit. So now that I'm kind of saying this out loud and verbally processing kind of where we're at, it doesn't really make sense to hold this at all. I think closing the trade is certainly the way to go here for the Roku trade. So let's go ahead for Roku. Yeah, this is wow, this is some good stuff. That Roku trade was really, really nice. Thank you so much, Brad, for bringing that to my to my attention. So let's go ahead and close this guy down, and let's do $1.28 on that guy. All right, so we got filled on Roku. All right, so Roku winner, Apple winner. Let's go to Starbucks too. I'm going to come back to Amazon because again, it's a little bit more complex because of where Amazon is right now exactly at 191, and our first put on the long butterfly is 190. So it's a little bit dicey. But let's go to Starbucks because, so this thing was on life support yesterday. But like I said, man, we heard that faint little beep. And now all of a sudden, we got eyes open, we got speech coming out, it's all happening. It's all happening right here, only on the Tasty Live network. We're going to be able to take off. Now, the butterfly obviously is gone. This guy's not coming back. Boom, that's going to be gone. I guess I shouldn't say that. It's 14 cents. So the butterfly apparently is marking at 14 cents. And you've got, Starbucks is really close to that 85 strike. So let's close out of the vertical first, because I definitely want to close this part of the package. So there's three pieces to the Starbucks trade, right? There's the vertical spread, which we're going to close. There's the butterfly, which is going to be a little bit of a question mark. And then there's the short 80 put, which is not probably something I'm going to close. I'm probably just going to leave it on because we're not at 50% of max profit, although I am leaving next week. My gut tells me to leave that one on, but we'll come back to that here in a second. Let's do the vertical spread first because I know I want to close that. So let's go in here. Let me highlight, let's see here. Let's highlight the 82.86. The 82.86 vertical spread. Looks like we can get it for 255. So I think that's going to be a slight winner on the vertical spread. Like I'll go back in and check we'll check the tapes here on what we bought it for. But I think it was maybe $2 probably. Like I'd be surprised if we paid too much more than $2 for it. But now they're doing some cat and mouse on us here on this Friday afternoon. All right, so we got filled at 244. What did I do? Let me look at my chains here. What did I buy the vertical for? Yeah, there you go, 209. Okay, so it's right here. I found it right here. There's your vertical spread, 209, and there's the close that we just did. Oh, that's so nice. They go back in and like they kind of like, collate the trades that belong together that are part of the same trade package. Oh, that's good stuff, man. The developers at Tasty Trade, they must have read my dissertation where I talked about trade packages back in 2008. Well, it's 2009 that it actually got finished. But 2000, it's crazy. So 209, we sold it for 244. So we picked up 35 cents on that. So that's going to get you. That'll get you the 6-ounce fillet at Bonefish. It might get you 2/3. It might get you the expected move of the 6-ounce fillet at Bonefish. But it's a start, right? You got to start somewhere. So that's Starbucks. So that's the first piece to it. The second piece to the earnings trade would be the butterfly. So the butterfly is a little tricky because it's very close to greatness. And by greatness, I mean, the 85 call just barely sneaking in the money. So maybe greatness is a little too grandiose of a term. But man, we are close. And I mean, Starbucks it's got on its horse today, man. Like this thing has been, just up and up and up. I mean, very similar to the rest of the market, of course, because, immediate S&P is up 2%, NASDAQ up almost 2%, Boomer's even up 1.5%. Going into the weekend. But you've got Starbucks up, $2.50. I mean, that's a huge move. That's an over 3% move on the stock. Apparently, the powers that be over at Tasty Trade, the fine folks at Tasty Trade, are telling me that I can close out of this butterfly for 13 cents. I can close out of the 85 long call for 13 cents. The 91.97, it's not marking for anything. You can see right there are no mark prices on those guys. So it doesn't really make sense to try to close the whole package because I may have a more difficult time closing the whole package because I'll be trading options that have no bid prices and there's just no activity left in there and things like that. The tricky part is, though, I don't really want to be holding a short naked call in Starbucks to the close. Or do I really care? I don't know if I care. I mean, what are the odds? So hold on. Let's leave my opinion out of this because my opinion is not very good. Let's go to the probabilities. So let me go to the trade page. So what is the delta? So here's what I'm trying to figure out. So rather than just, I just gave you guys a whole bunch of incompleteness with my random thoughts that were coming out of my head. So what I'm thinking about with Starbucks, with the butterfly, is I don't really want to keep it on anymore because I'm like, hey, we've only got a couple hours to go. We might be doing something similar in Amazon here in just a minute. And so it's like, all right, this could be a pretty crazy close. Or maybe it's just going to be another 100, 200 points to the upside. I mean, who knows, right? I mean, who absolutely knows? But I'm like, with Starbucks, I'm like, I kind of want to save this 15 cents. Like, I feel like they're just giving you 15 cents. Right, which I mean, 15 cents in the options world, that's $15 in the actual world. That's going to get you some potatoes au gratin at Bonefish. Like, it won't get you to a bang bang strip, but it can get you some potatoes au gratin. Like, it can get you some of the, the lemon garlic broccoli or something. So it's like, I don't think we want to necessarily just kind of leave this on the side of the road. But the thing about it is, if I just close out of this long call, we have to be aware of what I'm going to be left with. So I'm going to be left with short 2 91 calls and long a 97 call. Now, my 97 call will cover one of my 91 calls, but I will have one extra short call just dangling out there. Now, again, does it really matter? Now, obviously, all things being equal, ceteris paribus, we don't really love to have our short calls just dangling out there. Like, that makes sense. But we're talking about 2 hours. right? Like, we're talking about practice. Is it going to be a problem? Is this going to be an issue? I don't really think that it is. And so, we'll have to put up some extra buying power, maybe a couple $1,000s, but it actually might be more difficult it actually might be more problematic. I won't say difficult. It might be more problematic to try to close out of the spread, like the 85-91 spread, than it would be to just leave the 91 short call on there, because as long as 4 o'clock comes and goes and Starbucks doesn't rally another 7 points, then it's just going to expire out of the money, and then, nobody gets hurt and we can all go home. And so I kind of think that's what I'm going to do. I kind of think I'm just going to close out of the 85 call. And you're going to see my buying power. It only goes up by $500. Wow, really? Interesting. I thought it was going to go up by maybe 1,000 or 1,500 at least, because I'm going to have that extra short call out there. But okay. I mean, it's whatever the powers that be have to say, right? Your Sosnoffs, your Sheridans, your Batistas, like, they're calling the shots here, man. We are not calling the shots. Like, we are going to be price takers. We are not price makers. And so let's go ahead and, can I get 16 cents? Are they going to give it to me? No, they won't give me 16 cents, but will they give me something close? Can I get 14 cents? I mean, again, that's $14, man. All right, there you go, 14 cents. So we actually got it. Now, again, just to recap, we are short an extra unit of this call right here. You can see it right here. We have kind of I guess this would be, is this a back ratio or a front ratio? I get them mixed up all the time. It's kind of like when I'm playing chess. Is that a pin or a skewer? Like, are they the same? No, they're definitely not the same. But I'm like, which one is which? Which one is what? And so I can't remember. This is the opposite of the ratio spread that I would typically do, where I'm buying 1 and then selling 2. This is selling 2 and then buying 1. And so this is some type of ratio spread, but I always get them mixed up, the front and the back. Typically, when I think of a ratio spread, I always think of it as buying 1 and then selling 2. I rarely do like a sell 2, buy 1 type of ratio spread, which is what I have right here. But you can see this was not an order entry thing. This was kind of a, we kind of finagled our way into this position. And so I think we're going to be fine, though. We'll just let this guy go. And I'm not super worried about it. All right, so let's go to Amazon now. So what are we going to do? Okay, so a couple of things with this Amazon position. And then I'm going to get to you guys. Man, I see you guys. Man, I see you guys in the chat. Look at you guys. I see Lucky's in the chat. Joshua's in the chat. Man, Emmett Morrison's in the chat. Flower Power in the chat. Don721. Kyle Hamill's in the chat. Man, Brad Glazier's in the chat. Brad, again, thank you for the Roku trade. I'm pretty sure that was you, at least according to my notes here. And so let's go into Amazon. So what are we going to do? Okay, so number one, we have this short call on at the 215 strike. I really think, now normally, if I was going to be here next week, I would just leave this on. If I was going to be here next week, I would definitely leave this trade on, because I'm like, hey, we got through the binary event. We're 25 points out of the money. Like, let's leave it on and go for our 50% max profit, which would most likely come early to mid next week, assuming nothing super crazy happens. Which, again, I mean, in the world that we live in, man, we are one Trump tweet away from all kinds of craziness getting let loose in the market, right? And so that may not necessarily be a good assumption. But we would probably get there, next week sometime. We're very close to 50% of max profit on the short call. It was part of the original earnings package. So I guess the spirit of the trade is probably take it off now. Like, the spirit of the trade is probably not to leave this on. So I'm still not sure what I'm going to do with the butterfly, but let's take off the short call. And it looks like we're going to make a little over $1 on the short call. And so again, if you're keeping track at home, we made $5 on Apple. We made about $2.50 on Roku, or $2.25, whatever. So $7 and some change. We're now going to make about another $1.20. So that brings us up to about $8.50 in earnings winnings. Now, of course, we have the butterfly trade, which is not going to be a winner, at least not yet. It is currently sitting at about a $3 loser. So, and it's almost at maximum loss. So, I mean, worst case scenario, we're going to come out of earnings up about $5 or so, which is pretty nice. But again, man, what could have been? What could have been? It's very, very sad. In fact, I'll tell you what. So senior year, Father Kaslika was our religion teacher. I went to Notre Dame High School there in Grosse Pointe, Michigan. Father Kaslika, on the last day of class, he said a quote that I will never, ever forget. He was like, men, as you go off into the world, we're all 17, 18, whatever, right? Have no idea what we're doing, but we're about to start like adult life now, right? And so I was about to graduate. One of the final things he said to our class was, he said, men, as you go off into the world and you become men and you do different things and you take risks and you do whatever. He was like, I want you all to remember these words. There are many sad words of tongue and pen, but the saddest are these, it might have been. And I'm like, man, that was 25 years ago, and that exactly explains this Amazon trade. That's brutal, Father K. That's brutal. And so that's exactly how I feel with this Amazon trade, because last night we were there, man. We had him. We had him at 181, I think we had him at, right? Maybe 180? Man, it was all right there. The greatness was just, I could taste it. That's brutal. But anyway, I did get to taste those potatoes au gratin at Bonefish, so it could have been worse. But let's go into this short call at the 215 strike. Let's close this guy down. We're going to make a little over $1 on this, $1.20 or so. But again, it's not that big of a difference. All right, so we're out of the Amazon short call. Again, I do kind of feel like we beat the system. Like, I don't know how you guys feel, but I do kind of feel like we cheated death a little bit there. Like, we were really, we were juggling with some hand grenades or something, man. Selling calls in Amazon? Like, that's some crazy stuff. Look at GM. Speaking of selling calls, hold on a second. What's going on with GM? Yeah, look at GM. Here's our other naked call. Man, this might become from theory to naked call. Like, look at these, man. This is great. And so GM, we're actually down a little bit today, but that's fine. Let's close out a GM really quick. So I'll get back to Amazon here in a second, but it just caught my gaze there. That I was like, yeah, what about GM? We're actually at 50% of max profit, a little bit beyond 50% of max profit. So let's close that guy down. And then there you go. Sell naked calls. I think I'm going to go, take a week off, and I'm going to think about this, and I'm going to come back, and I'm just going to be selling boatloads of calls every which way. Don't we have NVIDIA earnings coming up? Oh yeah. Maybe we'll sell some calls for NVIDIA earnings. Yeah, that'll be, famous last words for sure. So now, okay. So for Amazon, all right. So the tricky part about Amazon here is, we only have 2 hours to expiration. We're very, very close. And Amazon is not like Starbucks. Like, obviously, Starbucks has had a great day today, and it could have easily gone up another $1 or $2 by the close. That's very possible. We'll see what it does. But Amazon is very volatile, generally speaking. Like, Amazon can move quite a bit, as evidenced by what it did, last night and into the morning and on the open. And then, it's pretty much sat around 190 pretty much all day. I think it's been between maybe 187 and 192 or so. And so it hasn't had a super wide range. But if something crazy happens in the market, whether like a tariff deal, falls through, or a tariff deal goes forward, or whatever, Amazon could easily be down $2 or $3 going into the close today. And so for that reason, I kind of want to hold this trade and keep it on, because when I'm looking at this, I'm like, all right, we can only save another 30 cents. Now, again, that's 2 orders of potatoes au gratin. That's potatoes au gratin for me and potatoes au gratin for Autumn. Like, I understand that. But we've already got, we've got all kinds of potatoes au gratin. We've got all the potatoes au gratin we could eat now, from Apple and Roku, Starbucks, General Motors, right? And so now I'm kind of thinking, all right, let's just hold this trade. Let's see what happens going into the close, right? We may not get to 177.5. We may not get there. We're not going to get there, obviously. But is it possible that Amazon is 187? Definitely. Could it happen that Amazon's 188 and we actually, make a couple of bucks off of this butterfly trade? Not make a couple of bucks, but sell it for a couple of bucks to kind of, whittle down the loss on the position. I think that's very possible. And so I'm kind of looking at this the same way that I typically look at defined risk strategies when they're not exactly working the way that you would like them to work. You've paid for that time. Use all of it. Like, you've paid for that time. You've paid for the right to take this thing all the way to expiration. So, hey, man, look at the hourglass. There's still a few crystals left. Like, use those crystals. Those are your crystals. There's no reason to take it off right now. You're only saving, it's only 26S now. It's actually getting worse as I continue to talk, which makes it actually more of a reason to just hold the trade and not close it right now. So, for Amazon, I am going to sit tight and I'm going to do nothing. Now, that means if this thing slides under 190, then I'm hopefully not going to forget about it. And, I get caught up doing something else. I get caught up with some of my other end of the day duties or whatever. Then I forget about it. We end up being short some shares in Amazon going into Monday, which is obviously vacation week for me. If that is the case, if that does happen, then, well, first of all, if I close this trade, you'll see it on the follow page later, because obviously the show is going to be over in 20 minutes. The show's almost over right now. Wow, the victory laps actually did take the whole show. That's crazy. I said it in jest, but I didn't know all along it was actually going to be the real deal. If I close this trade, then you'll see it on the follow page. If I forget about it and the 190 put goes in the money, then I'm going to be assigned. I'm going to be short some shares on Amazon come Monday. I don't really want to be short some shares in Amazon now for like a week when I'm not really looking at the markets. So if that does happen, then on Monday morning, I'll probably sneak in here. I'll close the shares and you'll see that come on the follow page on Monday. So that's kind of the, the map through the forest from this point. So hopefully that helps a little bit. So, all right, so let's see here. Let me find somebody in the middle. Here we go. I see Lucky. Got pretty lucky here. All right, Lucky. What's going on there? I appreciate you, my friend. Thank you for being here. I'm very, very humbled that you're here and part of the show and a part of the network. So thank you so much. Lucky says, afternoon, Dr. Jim. I'm looking at placing a put butterfly in ES at 21 days to go. Do you have any strike suggestions? Well, I'll actually do you one better there, Lucky, or maybe one worse, depending on how you look at it. And I'll give you even some more general thoughts about that trade from an overall standpoint. I don't love it. And the reason why is because I don't recall you being in the chat, so you might be checking out the show for the first time. If you are, hey, welcome aboard. I'm so glad that you're here. One of the things that you're going to see me do, which I actually just talked about in Starbucks and Amazon, I like to use butterflies a lot for binary events, short-term plays, kind of earnings trades, and use the butterfly that's in that week. I don't love using butterflies for longer term time horizons. Now, again, you can find some other traders, on the internet. You can find some other traders on the network that love using butterflies in longer cycles. But if we're talking about a standard butterfly, symmetric on both sides, you're not breaking wings, you're not breaking hearts, like this is just a regular butterfly. I don't love doing it in like 28 days to go or 45 days to go or even really anything outside of a week, to be honest with you. The reason why is simply this. It's very, very difficult to make money on a butterfly unless you are close to expiration. It's the same with a straddle. It's the same with an iron fly. Like these strategies, because you have those two shared strikes in the center that are both short, they're going to cling to extrinsic value, even if you get the move that you want. So remember with a butterfly, Lucky, you want the stock to go to your short strike. If the stock runs to your short strike, that's great for you. The problem is if you still have 28 days to go or 35 days to go or whatever, those options, those strikes specifically are going to cling on to extrinsic value. They're going to hold on to them all the way to their death. Right? They're just going to absolutely just really, really cling to that extrinsic value. That's a problem for trying to make money because when you buy a butterfly, you actually want the extrinsic value to come out of the option. That lifts the value of the overall butterfly. And so that's why I much prefer to use butterflies in the front week as opposed to 45 days, 28 days, whatever. To me, that's where you go to your more standard run-of-the-mill Betty Crocker strategies. Not that a butterfly isn't a Betty Crocker strategy, but that's more like a Duncan Hines. Like, that's more like, all right, this is not really the tried and true. This is off the beaten path just a little bit. Like, sure, I've heard of it, and I'll use it in a pinch if they're all out of Betty Crocker. But nobody's going to Duncan Hines first, right? Obviously. So same type of thing here. You've got volatility that's fairly high. You want to sell some premium. You want to, kind of play the short side of the option contract, which is kind of what you're doing when you buy a butterfly, because the two shorts in the middle are actually controlling the butterfly, for lack of a better phrase. I would go to something else. I would go to a vertical spread. I'd go to an iron condor even, if you want to do something that's defined risk. If you want to do something that's undefined risk, then you're getting into ratios and strangles and short puts and whatever. Short calls even, possibly. But given the fact that you asked about a defined risk strategy, you probably have a hankering to stay in the defined risk category, which is totally fine. But I would probably encourage you to do something like an iron condor or a vertical spread. And given the nature that you chose a butterfly, you didn't tell me the strike, so I don't know if you wanted it to be neutral or you wanted it to be directional. But if you wanted your butterfly to be directional, then I'd go with a vertical spread. If you wanted your butterfly to be neutral, then I'd go with an iron condor. That's how I would actually view the spirit of the trade that you're looking to put on, and hopefully that's a little bit helpful. And so let's see here. Let's go all the way back to the beginning, all the way back to the start. Man, Emmett Morrison's in the house. Well, I see Daniel Perkins before my comment, which I always use to kind of demarcate the end of the Futures Power Hour in the beginning of my show. But I see Daniel Perkins says, "Hey, Dr. Jim, we survived until the next data point hits, of course." Yeah, we survived. Like, I'm more shocked that we survived the factory orders print at 10 o'clock than I am the NFP at 830. Because when I actually thought about it more last night, I'm like, man, NFP is nothing. NFP is nothing up against this factory orders number that's going to drop at 10 o'clock. So if we do happen to get through 830, which is not looking too good, but if we do, man, 10 o'clock is going to drop the hammer. And so the fact that we are still here, that's really, really crazy stuff. But man, I wouldn't get too comfy cozy because next Wednesday, it is all over. And so Daniel Perkins, thank you for being here. Emmett Morrison's in the house, says it's Dr. Jim time. The best 45 minutes of the day, man. I appreciate you. I appreciate you so much. I even got that email back to you a little while ago. I hope that you saw that. I will send you the cast that we talked about for you putting this comment in the stream at this very time. So thank you so much, my friend. And I thank you for being here, of course. Emmett, you are part of the core position. So I appreciate you. Brad Glazier, thank you for being here. Thank you again for the Roku trade. I appreciate you, my friend. That's very, very helpful. And so Sam L's in the house. Dr. Jim, our homeboy Jeff B came through. Yeah, apparently so, man. I can't believe it. Amazon was down, but I guess that TRT kicked in and pumped the stock right back up. Man, he must have done something. I mean, he must have hit it with at least a little BPC 157 because it was hurt last night. Man, it was injured last night. And if you're a peptide bro, what do you go to when you get hurt and you get injured? You go to BPC 157. You go to TB 500. So he probably went with the combo pack. Like he probably went with the little 1-2 punch. And so, I mean, that's the only thing that would, especially with this type of reaction, I mean, theoretically, those peptides work pretty quick. But Sam L says, man, Tim Apple needs to hit up Jeff B for a clean PED cycle. Might be the only way to pump that stock back into shape. Yeah, Apple, I mean, I'm sure they're going to be fine. I mean, by fine, they're at 204. I mean, they may asymptotically approach like, I mean, just 170, 165 or something, but they'll be fine. They'll be totally fine. And so, speaking of stocks asymptotically approaching lower levels, how's Tesla doing these days? Yeah, look at this, man. All the Tesla haters, right? The i.e. Tom Sosnoffs of the world, right? Man, look at that. How about that? They really, really missed the mark on that one. So let's see here. If I go to the chart of Tesla, here you go. Ah, yes, the old triple bottom. Gets them every time. Bottom 1, bottom 2, bottom 3. Boom, boom, boom. Tesla back to 293. And so chances are, this thing's gonna run to 400, maybe 500. I'm actually going to see my father-in-law tonight. He usually joins us on Friday night. Friday night at the Schultz household is movie night. And so I don't know what we're going to watch tonight, but if I have any say, it's going to be one of the Bourne movies, of course. But I'm not so sure that will go over so well with the children. But they've got to learn at one point or another about Jason Bourne. So tonight might be the night. But either way, he's going to be pretty excited about Tesla. And so, yeah, I mean, Tesla to me, I mean, they have, and obviously people have very strong feelings about Elon one way or another. I understand. I got it. But just leave Elon out of it for a second. If you can do that. Maybe you can't. I don't know. Tesla still has a hold in the marketplace that no other company can match. Like when it comes to the EV movement, when it comes to electric cars and all the other crazy stuff he's got going on, I mean, the actual product itself is so good. And I don't have a Tesla. I don't really give a rip about Tesla one way or another. But man, he has really shaken up the industry in some really, really significant ways with a very, very high quality product. And so at the end of the day, that's going to be the thing that's ultimately going to determine the stock price in the long run. In the short run, obviously it could be all kinds of things. It could be, people's feelings. It could be, Fibonacci extensions. It can even be, that classic MACD, divergence, convergence, resurgence trio that could definitely be shaking up the stock price. But I just, Tesla at 200 looked a little crazy to me. But, the next thing we know, it may be under 200. So I digress. If we go to, look at the NASDAQ now up 400. Man, there you go. Look at that. Wow. Yeah, so it looks like we should have closed that butterfly when we had a chance to, but alas, we press on. Kyle Hamill in the house says, Dr. Jim, what's going on there, Kyle Hamill? I appreciate you, my friend. Thank you for being here. I appreciate you very much. Catch That Voltage says, hey, Dr. Jim, I'm just here for the victory laps, although not on Amazon, but Apple. Yes. I was all queued up for multiple victory laps. We had Apple, we had Roku, we had General Motors, which I totally forgot about. We've had Starbucks in a weird, odd kind of way, which wasn't technically a victory lap, but I mean, I'm still going to take it. But then Amazon, man, again, yeah. There are many sad words of tongue and pen. I mean, Father K was right, 100%. So Andy Tampa says, yippee, chat back open, here for the algos. Man, I appreciate you. That's what I'm saying. Appreciate you very much. Tom says, tell him, Jim, yeah, we're doing what we can. We are 100% doing what we can. Down to 721, we made it through the most important numbers of our lifetime, Dr. J. Yes, we did. Only to be met with, without question, the most important FOMC meeting of our lifetimes. Now, what do you guys think the delta is on Powell wearing a non-purple tie? Do you think is it over 0? Like, what is the delta on Powell coming out with, I mean, it doesn't have to be fire engine red. Like, it doesn't need to be forest green. Can we get a pink? Like, can you throw me a fuchsia? Can you throw me something that, like, at first glance, from a distance, you're like, that might be purple. But then when you look up close, like, that's definitely fuchsia. That might even be periwinkle. Right? Can you give me something just to mix it up? Just shock the muscle a little bit. Because we all know, the muscles, they get used to the same old thing. Like those fibers, they're not going to respond the way that they used to. But anyway, that's all going to happen Wednesday. And I will not be part of it. And by not be part of it, I mean I'm going to sneak away from the family when all of it's going on, and I will be looking at it in secret. And so Alex says, if I'm just being honest with you guys, so I will very much be a part of it, but just not this type of way. So Alex says, agreed. A while ago, the FBI caught Russian hackers cracking financial reports before the call. They still managed to lose many trades. Oh, is that for Amazon? I didn't know that. Maybe that's for Amazon. Stefan in the house. Good afternoon, Dr. Jim. Always a pleasure, man. I appreciate you, Stefan. Thanks for being here, my friend. I appreciate you very much. Flower Power 2222 says, it seems like the aggregate of all market participants' opinions on earnings is totally confused, Dr. J. So how can we do any better? As Tom says, nobody knows anything. Tom's not the one who said that. I'm the one who said that. So don't ever let Tom fool you, right? No one takes credit for work he didn't do better than Tom Sosnoff. But you need to know the truth. So back in 2017, so I joined the Tasty Network in 2016. In 2017, we went on the road together. We all went on the road together. It's the first time that they had been on the road together, like as like a tour type of thing. I think in Tasty's history. I mean, obviously Tom had done a bunch of things, and Tony had even done a bunch of things. But like going together as like a group, which is kind of what we do now, kind of on a regular basis. It was Tony, it was Tom, it was Liz, it was Jenny, it was me, and it was great. And my whole talk in 2017, the whole thing, it was the same talk in every city. It was all about how nobody knows anything. In fact, the title of the talk was I Don't Know. And I shared some funny stories from selling windows and whatever, and it was a great time. It was amazing. But I am the one who coined the phrase nobody knows anything. Now, I don't have much to hold on to, right? Liz and Jenny have, zebras and jade lizards, and Mike, Nick, and Katie have broken heart trades and crab trades and whatever. All I have are gimmies and gotchas. And nobody knows anything. So I'm not letting Tom Sosnoff take that away from me. I'm not letting it happen. Not on my watch. So that is not Tom's line. That is my line. It's 100% my line. But anyway, I digress. Flower Power, what are we going to do? I mean, honestly, earnings, it's probably not going to move the needle too much either way. Now, I mean, do I think that it could potentially move the needle? Yeah, possibly. I do that. I mean, that's why we're doing it. Right. I also do think that there is some value in just the pure, the engagement of it in terms of you engaging with the market, me engaging with the market. And I do think it helps to sharpen your skills. I don't really think you're going to get hurt too badly in the end. I do think it's possible that you could end up with a slight positive in the end, simply because earnings, if you think about what earnings are, they're just an accelerated version of what we normally do. And what we normally do seems to be pretty, effective in the long run. And so with this being an accelerated version, could it also be effective? I think you're giving up a lot because you don't have the first half of the cycle. That's why I don't like selling like 0 DT options and things like that. But I think, I don't know, if you can kind of make up for that with some really decent strategy, could you potentially move the needle forward? I think maybe you could. But I also respect the fact that some people say, hey, earnings is totally 50-50. It's too risky. It's just gambling. It's just this. It's just that. So I'm just going to focus on regular trades. I think that's totally fine. Flower Power. And that may or may not be you. But if you are kind of feeling like, hey, how can I even do this? Especially given like last night's reactions. It's like, yeah, if I had those numbers beforehand, I wouldn't have made any money. I would have went all in long, bazooka long Apple, bazooka long Amazon. And you would have broke even on Amazon and gotten steamrolled on Apple. And so it's like, man, that's a tough game to play. I respect that. I totally respect that. So Theta Trader's in the house. Data Trader says, why did no one tell me to buy back my short call? I specifically requested it. Oh, I don't know what that's about, Data Trader, so I'm sorry that the group and the team here let you down. But hopefully next time we can have your back. Brian Watson says, nice jam croissant reference. I'll tell you what, man, he's really good at what he does. He is very good at what he does. I mean, with his market calls and stuff, and I mean, his understanding of volatility, it's way, way, way beyond where I'm at when it comes to volatility. I mean, I look like a toddler, like going up against, Jam Croissant when it comes to the volatility space specifically. So I think he's a great colleague. I don't know him personally, but I think he's a great colleague to have in the financial space. I think that he's very, very intelligent. I think he's a great trader, and I really appreciate having him in the community. And he knows. Apparently, he's the only one that knows. And so Emmett Morrison says, so what you're saying, Dr. Jim, is be long 100% of the time and let the probability of positive drift work its magic. Well, that's not exactly what I'm saying. I'm kind of saying something completely different from that. But the thing about positive drift is it's not even a probability play. It kind of is a probability play, I guess. I wouldn't really think about it that way, because when you start to go out like long term, which to me positive drift is a long term play. Like, you're not trading positive drift like today. Like, I'm not trading positive drift like by Wednesday. Like, this thing should really pick up steam. Like, it doesn't work that way. Like, positive drift is a longer term play. So to me, when I think of positive drift and I think of positive risk premiums for like stocks and indexes, I'm thinking about the growth. I'm thinking about the innovation. I'm thinking about the product development and the different things that the companies and the overall indexes will be doing, because they're just collections of the companies, that's going to spur the companies forward. And so, I think positive drift is a fine way to play. And I'm a perma bull at heart. I'm bearish this year, and I have been bearish, since the beginning of the year. But when I zoom out, I definitely think the market will continue to drift higher to some degree. Is it going to be 7% a year? I don't know. Is it going to be 9% a year? I don't know. Is it going to be 18% a year, 22% a year? Probably not. Like, I think we can, essentially rest assured that that's not going to happen. But I do think that the historical averages are going to come home to roost. And so, wow, we're done with the show. I gotta go, man. I appreciate you guys. I appreciate you guys so much. Man, you guys are what make the show go. It's not me, it's you guys. We are a team, man. It's so amazing to be able to come here and be with you guys every single day. And so you guys give my work so much purpose. And so I just appreciate you guys so much. If I can ever help you guys, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. And I will see you guys a week from Monday, which will be May 12th.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I distinctly remember getting an email from Tasty that Look Back had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler, and I brought in the Assistant Chief Negotiator to China, Julia Spina. Julia, what do you think about this rally? One of the biggest in 20 years.
I'm glad I closed all my neutral trades yesterday, that's for sure. They were still losses, but, could have been worse.
I can't reconcile with this, man. I think it's just crazy. I mean, I don't want to sound like a negative Nelly in an environment where the market has just been, obviously, people's fortunes are being restored, which is good, I would think. But it seems a little wild that all of a sudden we're just not as worried about tariffs. We were scared to death of them.
I know, and then they did the will they, won't they, did they did, and then they didn't, and I don't know. I feel like I don't know. Market's got no attention span the last, pretty much since I started trading, actually, since the last 5 years.
You're right. Actually, it's funny you say that. That's exactly what I've been thinking about. More recently when I was talking to people on air, I was just saying, look, this time it's going to be a little bit more difficult, and the rebound is not going to be as fast, and all this other shit, and what does that matter?
Dude, I don't know. I don't know, but there's no such safe haven. I don't know. Everything's popping off or popping to I don't know, just for totally different reasons. So, I don't know. It's been a wild market. I already have a hard time making directional assumptions when I put a trade on. There's so many different variables you can take into account, so many different styles people have. So,
no, you really do. Why is that?
I know.
Why don't you do you ever do any directional trades?
I do directional trades, and I don't. Anecdotally, they seem like they kind of work out sometimes, but I can't tell if that's luck or not.
You're scared to pick a direction.
There's some things that I don't mind being directional in, like metals, for whatever reason.
Oh, this is good. Okay, pull up the platform. Now I'm going to put you on the spot. You know what? Just like you were doing me yesterday. What was it yesterday? What was that?
We were doing bullish or bearish.
Yeah, so bullish or bearish, right?
And you were bearish everything but Bitcoin. Everything but Bitcoin.
I don't remember it that way, but yeah, probably.
And that's how I remember it.
Okay.
You had no directional assumptions on bonds, if I recall correctly.
Copper, bullish or bearish?
I'm gonna say, what is this?
I know. Sorry, I didn't mean to do that.
What is
Copper,
this?
Bullish or bearish? Go.
Oh.
See, look how difficult.
Not
this is just the first one. We got a lot to go. Okay, fine. I'll start
little eensy weensy teensy bit bullish, teeny bit. After a drop like that, teeny bit bullish.
Stock market, S&P 500, bullish.
Dude, I am at a loss on this one. I do. I get. Oh man, actually, this is my first time looking at this.
I guess we should say what time frame are we talking about?
That's also fair. I'm thinking
let's say 3
months, right?
Let's say 3 months.
Oh, 3 months is we're at 1, 2, 3, 4, 5, 6, 7, 8, 9. Are we at 9th consecutive green day?
We're up 9 days in a row, man. It's the biggest streak in 20 years, they say.
Right, and I'm and this is right after we dumped, and it all just happened so quickly. I don't know. 3 months though, moderately bullish on the market.
I love how you say teensy and moderate. There's.
Yeah, it's I gotta go with my confidence, and I'm not confident on any directional assumption actually. But if I don't know, are you bullish, bearish?
30-year treasury, bullish or bearish?
Oh, well, bearish.
Ooh.
A scandalo.
You don't like America? Is that what you're trying to say? I mean,
am I bearish America? Maybe a little bit.
Okay. Oil. Trading $58 right now. Bullish or bearish?
See, shit. I don't know. I got a hard time with this.
This is so hard for you.
I know. I did.
See, I told you. I know you.
Short term, a little bullish. A little bounce, because that was a little bit.
I'm kind of bearish in oil, in a way.
Wait, contrarian over here. Why are you bearish in oil?
You know what's interesting? This is the one thing that, it should be up today. If everything is really fine and dandy, and the market is up and volatility's come down, and like this whole situation and crisis that we've been worried about seems to be, the market is coming around to and reconciling with it, then why is this not up? Why isn't this $64 over the last?
You're trying to make sense of something that is confused. The whole market is just confused, and that's why I'm just like. That's what I don't know. I think at making directional assumptions. That's why I like neutral trades, because you're making volatility assumptions and you are, neutral price assumptions, right? Which I like trading around that more.
Totally
Not
agree.
that it always works out, but
totally agree. By the way, I mean that's actually like ZB. I'm directionally neutral in this. I feel real. This is like the trade that I feel. This and ZN actually. I mean same trade basically.
Sure,
similar trade in both of them. These are the ones I feel the best about because IB is still fairly elevated, and I don't feel like my strikes are going to get breached at all.
Well,
however,
if you go
this is an interesting move here today. I mean, why? This is another thing that doesn't make sense. Last 2 days, 3 days, bonds have gotten rocked, and market has done nothing but go up. And these were kind of correlated. Like bonds were moving the same as. I don't know. You're right. It's so weird right now. It's so strange.
But if you go back at the chart, and this is what I'm noticing in a lot of underlines right now, like we are in a range, like in a really wide range. And that's why, so we got 38 Ivy rank. So like it is like, expected range for a lot of these underlines is wide enough, statistically to capture some of these channels, I would expect. So obviously that's not necessarily true. We just had like a crazy bullish run in the market. And so my positions they were not very happy with that. But a lot of these underlines, we're just seeing like these crazy, like kind of whipsaws to the upside and to the downside. So that's why like neutral strategies, I'd rather be, betting on vol contractions and changes in time because you can, that's going to happen no matter what, right? Changes in time. So I'm a little more comfortable doing that. But like there's certain underlyings where I think I've just been scorned, like gold. Like when gold moves, it really moves, and it's still like kind of on a tear, isn't it?
Yeah, I mean, gold is the OG momentum stock, if you will, right? Like when when it moves, it moves.
It moves, and it really moves. So yeah, I'm generally when I feel like it has momentum is maybe not the right word, although I think it's technically what I'm talking about. When I feel like when it's got that upward momentum, then I'm a little more comfortable making like directional assumptions in that. But those also happen to be when it's at like all-time highs, and I always hear from Tom like it's at all-time highs. I can't be bullish on gold. For whatever that's worth, right?
Yeah, I know, right? He has that disposition. I got to make a decision here in the coming days. This one's at 21 days. This is one where I did a condor for whatever inexplicable reason. I rolled this put spread down, and I don't know why I did it. I really don't. I'm so dumb. I mean, this part is great. Like, 3,400, whatever. I know we got up there, but it faded. But I put this trade on essentially right here. It was around here. And I said $200 to the upside, and bing, that's why I did this, 3,450, right? And then I said $200 to the downside, which at the time, again, I originally had the 30-50,
sure,
30-30 put spread. And I just one day in the past week was like, gold's gonna fall, but I don't think it's gonna fall like it's gonna fall $100+, but I think I'll be fine moving it here. And so far I am, but I'm
don't
just
jinx it. Gotta knock on wood.
No.
Yeah.
Or gold.
Gold is piped down a little bit. It has piped down a little bit. It's really that run up. That's what makes me nervous. Those are the times when I've been hit especially trading neutral strategies that I haven't been super fond of, but we have actually calmed down a bit for the last like 2 weeks, which is an eternity in this market. But
this thing was damn near moving $100 a pop at times, right?
Mm-hmm.
And now, I mean, we did have a $100 day just yesterday, but but to be fair, like we had, we had what, 1, 2, 3, 4, 5, like $500 days within 5 out of 6 $100 days. Then there was a couple more, but I don't know if over the next week we don't get another $100 day, I think we can officially say it's calmed down.
Okay, that'll be the cutoff.
That's the time. Yeah, same thing. Well, I would like to say that S&P 500 has calmed down, but again, this is like $80-something day. This is wild, man. Like, what can you say? Look at this range today.
Yeah.
Wait, is this today?
That's why.
I guess that's right. Yeah, that is the range. It really hasn't been down. It's really been mostly up.
Yeah, man, it's tricky, right? Because like when the market has those really big down moves, like moves to the downside, right? They're very large and they happen very quickly, right? So like a lot of the most extreme losses that we see with options trades on market indices are like to the downside, right? But those like death by 1,000 paper cuts that you get to the upside because of that upside risk, even though those losses typically aren't as dramatic, a lot of the time they happen more often because of that upside drift. So that's like, and I'm having a really hard time making a long-term directional assumption, not even long-term, even over the next month when it comes to the market. 9 days in a row though, man, that's like, especially today. Today hurt a little bit. I don't know. 90% of the market's up today. 90% of the stocks in the S&P are up today. Who's one of the sad losers? GoDaddy, I think.
I was about to say, yeah. What are the 50 names that are down? I'm curious.
Let me take a look. Actually, that's the fun thing I like to do. It's just like sorting the components of the S&P, like that watch list. We
I do it all the
GoDaddy.
time. Yeah, I do it all the time.
9% GoDaddy.
Actually, I guess I can do it here. Yeah, GoDaddy. What's MSI? Museum of Science and Industry. When's the last time you've been there? Is that your favorite museum?
No, actually.
No? What kind of scientist are you?
It,
Jesus Christ. That's the
yeah.
best museum in the town.
I like
What's better than Museum of Science and
MSI.
Industry?
I like it, but I like the Field Museum more. Like the Museum of Natural History. It's so peaceful in there.
Yeah, you wanted to take a nap every time you're in there.
I have. You know what? I actually have slept over there.
I believe you.
I have slept over there. There's a thing that you can do where it's like a program that they have. I guess it's mostly for like Girl Scouts and Boy Scouts, but we just did it. It's super fun. So it's so peaceful and calm. And I don't know, MSI, it feels like, it's everything's bright, fluorescent, very cool, high tech, but I just
it keeps you up. Exactly. See, you notice what you literally just described the biggest difference between.
I don't know if I don't know. I kind of want peace when I go to a museum. Is that crazy? Maybe.
I mean, it's not, but that's what makes MSI so cool.
Serenity now.
I don't know how they keep that thing fresh and up to date. It's so massive, and yet they always have like a new exhibit or something. And even the ones that have been there forever are still cool. Like the train thing. That train hall is so cool. Little boys
that
go in
is
there and they just
something.
lose their shit.
It truly impresses me how many new installations that are consistently high quality. Super cool for a museum. Because like the Field Museum, like all the museums like have like kind of moving, rotating exhibits, but MSI just gets like completely new shit all the time. It's so cool.
They do. Yeah. Look at these names that are down. Take-Two.
MSI is Motorola.
Why is Take-Two down? I knew
EA why
Sports.
is Take-Two down?
Take-Two is down because they pushed back GTA 6.
No.
Yeah, they pushed back to like May of next year.
Dude, it's never coming out. Hell will freeze over before GTA 6 comes out.
Well, whenever it comes out, I'm
today.
so good, man.
I heard that today. Someone told me like, yeah, GTA 6 got delayed a year. I'm like, it got delayed 10 years. It's never coming out. It's going. I've read, people publish articles about this. The economic impact that is expected when that game comes out, because everyone's just going to stay home and play it. They're not going to go to work. It's going to hit GDPs across the globe.
It's pretty amazing when you think about some games and how much money they make, and when you think about like music, right? And obviously everything's gone streaming, I guess, but just in general, when music comes out and like when things go platinum, like games just go. I mean, it's crazy how many people buy them, right?
Yeah.
That game is funny because I have been playing that game forever, like going way back, and
It's iconic.
My 21-year-old kid is definitely brainwashed because I used to. I didn't play with him when he was a baby, but I did used to let him drive like the ambulance and police car. He was so into those things, ambulance and police cars, like boys are. And so I would let him drive that. Of course, my wife would lose it. Like when she was like, "What are you doing? You letting him play?" I'm like, "No, he's just driving an ambulance, and we're not getting into trouble. I swear." Like so it was do we ride around with the lights?
That's precarious, though.
It was. I know. And so eventually, I did start letting him play, like at around 12 or 13. And of course, he's 21 now. He'll play on his own. But I mean, he has, like, I'm pretty sure it has a memory in his brain that he probably, how it is when you're little. You're like, why do I like this thing so much? Or why am I? But because he probably doesn't really remember that. But yeah, I used to have him sit on my lap and just like let him roll around in like the cop car or the ambulance, and like he just loved it. He thought it was the greatest thing ever.
That was my dad with like Doom 95. And or the old school Doom. I don't remember actually what year the first one came out. I thought it was 95, but like the old school Doom, and like the monsters were like 7 pixels. So they're like, don't look at this. I'm shooting the monsters. I'm like, I don't know. I thought it was fun. And
yeah, nobody's scared of a 7-pixel monster, even a little girl.
I'm not. I'm ready to. I'll shoot it. I don't care. That's right. I forgot about that because GTA's Rockstar and Take-Two owns like actually a bunch of these. They have so many subsidiaries. I forgot about that. Yeah, they got Rockstar and oh man, yeah, and GTA 6 is never coming out.
I know it sucks. HSY confectionaries are down. I mean, it's a hodgepodge of names. Actually, you know what though? It is to some degree. I saw this a little bit yesterday. It is like consumer staples names. It is a little bit of utilities. Like it's an unwind, basically, is what's happening here. Because ED is obviously a utility, and LMT, a defense name, those were getting bought up as all this was going on, and people were fearful, right? ConAgra, another defensive name. So there's a lot of defensive names kind of getting sold off during these last couple days here.
But that's like so fast. Like that's what I'm saying. Market has like no attention span these days.
Market is ADD for sure.
It's ADD, dude. I'm like it. Like, oh no, everything's fine. Let's just like completely flip everything. I don't know.
It's one of the Colgate, Palmolive, AT&T, Merck. Mm-hmm. Yeah, it's just a lot of defensive ex salon. This is one of the reasons why I just feel like taking off a bunch of positions and kind of just like starting fresh. And I've started to take some stuff off. I've stopped myself short though, because there's some that are good positions that I really don't need to take off. Sure. But I don't know. Yeah, I just wanted to raise some capital because I just don't really understand. I don't want to say I don't understand. It just doesn't. It doesn't jibe. It doesn't make sense. 9 days in a row when there's really not much resolution.
Mm-hmm.
I don't know, dude. And then you could argue whether or not any of this ever made sense at all. Are we really giving tariffs across the whole entire universe or just to China? Was that always the plan? Was that always the move? Is there a plan? You know what I'm saying?
I don't know that there's a plan. I'm going to be honest. Maybe I don't know. I just I can't think at that high level. Maybe this is part of some grand plan. It doesn't seem like there's a plan. Which is again why
we want them, Julia.
God, I'm right. I just I can't. I don't know. I don't have the perspective to figure it out. But that's why I'm like, it doesn't seem like there's a plan. It seems like there's still pretty big macroeconomic uncertainty, especially around the tariffs. So I'm like, why is the market just yep, no, everything's fine. Let's just dive right back in. Yeah. I don't know.
What is that? 5 names down? 6 names? 6 names down for the Dow. Of course, Apple is the common denominator between both of these indices.
Yeah, dude, Apple's getting wasted right now.
I mean, it should. I mean, dead serious. First of all, you haven't come out with anything original in quite some time. And then on top of all that, you have a lot of stuff in China, between China and Vietnam and India. I mean, come on, man. What are we talking about here? And we know there's no way you're bringing all of this. You're bringing all of this production that you have overseas to the U.S. anytime soon. It's just not happening.
There's no way. But they talked about relocating to other countries, right?
Yeah. Okay. Well, where and when?
I thought I remember reading about India.
No, I mean I'm sure they've talked about it, but
let me see if I can find. I've got a fact check.
I mean, I'm sure they've done a lot of talking about it. You have to say it. Yes, we're going to attempt to
They're aiming to source from an AI overview.
See?
Aiming
attempt
to source most of its iPhones sold in the US from India by the end of 26, which is soon-ish.
Well, I mean, that might not be fast. It's already May of 25. That's kind of fast, isn't it?
That is kind of fast. That's what I'm saying. So they're aiming, but their time horizon is very short. And from all things considered, with the level of operations that they're moving over. So moving on it, move to shift away from China.
China. We're still in backwardation. Just slightly. I mean, they're all a nickel above the rest, but May is 22.60, June is 22.55, and July is 22.50. So we're like a nickel in backwardation in each future. Don't know what to make of that, but
I don't know what to make of that either. I don't know.
As Tom would say, bonds just ticked up. Does that sound like a little bit? A little bit.
I don't know if I
bonds
got
just ticked up.
Bonds
are up a tick here.
I don't think you can sound like Tom if you're not like banging your mouse on the desk while you're saying it.
It's true.
But yeah, I mean, like VIX is at like 22.5, 22.66. It's like kind of elevated. It's not even that elevated actually. Long-term average is like 20. So
right. Yeah.
It does actually seem a little low, all things considered. But yeah, I don't know.
I mean, don't get me wrong. Like going back to like 2 weeks ago, I was like, well, the worst is probably over, but I certainly didn't expect a 9-day rally. You know what I'm saying? Like, I didn't expect us to be back at 5,100. I thought that was a little crazy when we did that. Whatever that was, almost 2 weeks ago now. But I didn't think we were heading back towards 4,800 or anything like that. But still, like, a 9-day rally is wild, especially when we're still in backwardation in VIX, which again, I think that's going to still continue to calm down. By next week, it should be out of it, I would assume. The bond sell-off, I can't really make heads or tails of it. Gold is down, but it doesn't really want to like fall down.
Because I was thinking, like, this is the first like earnings cycle that we've had, especially for the Mag 7, since like the tariffs plan has gotten more solidified. So I kind of figured like, okay, we might see a big rally if like, especially like these bigger tech companies or some of these more consumer facing companies like Amazon, like demonstrated that they have a plan, they have a strategy, like we know how to get around this. And I just kind of haven't seen that really. If anything, I've seen the opposite, and then it's still like it's just very it's against my intuition. I was really surprised.
Yeah, I mean, it is kind of when you mention it, Amazon's kind of flat all day. They raised some concerns about consumer spending due to tariffs and whatnot. Obviously, Apple is down because they have such a reliance on China. But to your point, like Microsoft and Meta, these were the companies that during their earnings, we were waiting for them to justify how much they were spending on AI. I mean, they didn't really even mention that a whole lot. Like they probably did, but the takeaway was their business is going to be fine during this tariff situation. That was the takeaway, right? That was the takeaway from Microsoft. That was the takeaway from Meta. It was the opposite of that for Amazon and Apple. Nvidia's a ways off. Google.
Tesla's Teslaing again, so that's cool.
Tesla's Teslaing again. That is for sure. That's probably one of the big stories of the week. That stock has been on the go.
God, I remember very briefly back in like 2023, Tesla was trading like an automotive company, and I'm like, oh man, I think I'm actually like ready to trade Tesla. I think I'm fine getting into it, and then that happened in 2024. We got a little Peloton curve actually.
If I was the type of person to still trade directionally, I would buy calls in Tesla for next week.
Would you really?
I think it's going to keep going. Yeah. I would.
Actually, Ivy ranks 33, but that's for Tesla. So I was going to say, like, they're not even that spency right now.
Yeah, I would. I mean, just because, it's not going to be cheap, but yeah, I would.
Oh.
I probably should.
Won't he? Oh, well, you probably should. I don't know if that's
I just think it's going to keep going. I mean, at this point, like, why not? Why would the lunacy stop now? This is exactly how it works with Tesla, Like, 1 minute, nobody wants the stock. It's not interesting at all, and it's falling down, and everybody's saying all these turns, and then all of a sudden it starts to turn. It looks like it's going to go. People are sort of interested, but not really, and then it really goes, and then people really get interested, and then it keeps going. Right? And I feel like it happens like that often.
I mean, Tesla, everything happens. So by that logic, you could trade anything if you got the right timing. You'll be right?
I mean, it's kind of true. Yeah.
Why not trade it? It gives me anxiety.
We have a Fed meeting next week.
What's Polymarket saying?
I'm going to be in the middle of a panel during the Fed meeting. I'm at this OIC panel next week. And,
that's going to be fun.
Yeah,
you're going to look down at your positions while you're trying to talk, and you're going to be very happy or very
stuff
sad.
off. Everybody's going to be looking down.
Oh my God, yeah.
It's me, Jessica Inskip, who used to work with Tony Zhang at Options Play. Now she's at stockbrokers.com. She's pretty cool. Brett Kachuba, who I've worked with before on Spot Gamma. Cool dude. Mark Benzaquin from the OIC, a good friend, like him a lot. So it should be a good panel. We're just talking about, it's actually, I don't remember the exact title, but the gist of the panel is just kind of like, we're all people who are in this educational kind of space, right? And so I think we're just going to be talking about that to some degree. Should be good.
That should be good. That sounds like a good time.
Yeah, it's going to be a good time. But before we go, Fed meeting next week, any thoughts about that?
According to Polymarket for May 7th, there's a 99% chance of no change. And I've learned to I don't rely on Polymarket, but I remember the first time the first rate cut that we got, they were predicting, like the market on there was predicting like a 50 basis point cut. And I'm like, that's so stupid. And then it happened. So now I don't know. It's just really interesting to see, like aggregate expectations. So I don't know, 99% chance of no change. I'd also personally agree with that. That's what I would guess. What the market's going to do in response, I don't know. Dump probably, but maybe, I don't know, quote me on that.
Probably at this point. It'll be about the meeting for sure. Folks, thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
Thanks, guys. Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Hello, everybody. Well, we're at the end of the week. For the Bulls, the past 9 days have been glorious. And for the Bears, they've been wretched, I think sums up pretty nicely. The last down day we had was Monday, 2 Mondays ago. We've had 9 up days in a row, which I think hasn't happened in something like 20 years, something like that. Really unusual. And it was a real roller coaster just since yesterday because after the close, everybody was waiting for Apple and Amazon. They came out, they both dropped. The incur dropped, everything dropped. So that's step one. And then step two is that suddenly everything went green. I was wondering why. Well, because there was rumors and chatter about, China and U.S. are talking. And stage 3 was all through the night. The gains kind of got smaller and smaller as people sort of said, well, that's not really news. And then phase 4 was when the jobs report came out, which for whatever reason, the numbers were very appealing to the bulls and things blasted higher than ever. And then kind of phase 5 has been going all night long, which is more and more credibility to China-U.S. talks. This is just like the 2017 to 2020 administration, where China talks are going well, China talks are going well. They can do this for years if they want to. And paradoxically, the worst thing the bulls could have at this point would be, we, the U.S. and China, have agreed to all the terms. Here's the document. It's been signed. We're done. Because hope and innuendo is much better than facts and data. Because when the trade negotiations were actually completed in the first term, when it was done, there wasn't much to it. It did create a few U.S. jobs, and they ran the numbers, and it turns out that those jobs cost about $900,000 per new job. So it wasn't much of a bargain, but it made for good theater. So as it is now, if they keep doing this, China talks are going well without ever really reaching a destination. This can just go up till the moon. So that's what's been going on the past 9 days. But yeah, I've been trading for a long time, about 37 years. The past couple of weeks been some of the worst I've ever seen for the bears. It's not like the ES was up 500 points suddenly, but it's just like bang, 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 day after day. And it was only a few days ago when it seemed like, listen, this is a counter trend bounce. When it's done, the bulls are in for a big surprise. Not so sure anymore. At this point, maybe we have yet again a bear market that lasted a week, probably at best a week, really just a few days, and it's really just gone. It's sort of April 3rd, April 4, the next morning, and then that was pretty much it. All done. So there have been a number of important resistance levels which are toast now. Really the only thing left at all is the peak from, I think we'll see in a second, like March 25th, I think it was. There was this bounce, and there's a line there. That's about the last line in the sand. But the bulls have just run roughshod over the bears. And the likelihood of them being able to sustain this is a lot higher than it was even yesterday. Because in the face of lousy Amazon and Apple results, didn't matter. The mere notion that folks are talking is enough to outdo that. So with that as an intro, rather grim intro, let's jump in, see what's going on. This is the line I was talking about, and this is still intact for almost everything. This was the peak, March 25, with this sort of bounce here, which at the time I thought would be a tough bounce to endure. Oof. Not really. This is the bounce to endure. From April 7 to today, that has been a monster compared to this little blip, this little nothingness that we endured. But anyway, that's the last feeble hope that we might still be in some form of a bear market here. If you beat that, it's like, okay, just forget it. Looking at some of the results recently, 4 of the Mag 7 here. So last night we had Apple. Apple is still down. I mean, the news was so grim that even in the face of like hundreds of points on the NQ and 100 points in the ES, and Apple has still managed to be down. One of the few tidbits of red on the screen. And we've got a new gap right there based on yesterday's low. So Apple was down last night. It's down now. Amazon was down last night, but it's up a little bit now. Okay, a penny. All right, it's up a penny. There's no clear line on this one at all. We're still well below the highs on this, but it managed to shake off those bad results. As for the night prior, both of which were up, Meta is up more. Meta's up another $26 and change. We've got a bullish engulfing pattern on this one. And then Microsoft is also up again, double digits. And did that gap get sealed? Let's find out. No, actually, I think it's still intact. So the gap itself was at 445.99. Today's high looks like do I have that wrong? I'm sorry. The low 439.52 and the high 439.44. Yeah, it looks like, assuming this data is correct, that gap is still open. I got very close to ceiling. So that's mildly interesting. So I'll just leave that line there. But some other non-Mag 7 stocks that have been former darlings are becoming darlings again. Here we have Roblox up over $4, almost 6%. And even more dramatically, we've got Duolingo, which is up almost $75, lifetime high, and up about 19%. So this has been, so this was the gap down, then we've got a gap up. So Duolingo is setting the world on fire. But all in all, as we look at the cubes, as with the spiders, they're still below the March 25 high, but not by much. Not by much at all. You can see there's very little sunlight between that red line and today's peak. Who knows what the weekend will hold? Earnings season is pretty much wrapped at this point. The only big event that's scheduled next week, and I say scheduled because in the world we live in now, most important things are unscheduled. The only scheduled big event next week is the Fed. So on Wednesday, they'll do their normal shtick and press conference. Even more dramatically, here's XLK, the technology select, and it is very close to its own March 25th peak. Hasn't quite exceeded it yet, but it's wouldn't take much at this point. The small caps finally had their day in the sun. They have tended to be lagging most days. Today, it's different. The RTY is up about 2.5% now, which is in contrast to, say, even the NQ, which is up 1.8%. So small caps are zipping higher. This peak here is from Liberation Day. This was the high on Liberation Day. Hasn't bested that, and it's still well below its March 25. So longer term, the small caps are the laggards. Today specifically, they're the leaders. As far as the diamonds go, the Dow 30, this is very, very close to sealing its own gap. This was the Liberation Day gap. So the diamonds are also lagging the likes of the spiders and the cubes. Those sealed their gaps up a while ago. This one hasn't quite done so yet. Should it cross, 416 and above, that will be another feather in the bullish cap. Hasn't happened quite yet. As with the rest, it wouldn't take much at this point. Its companion, IYT, the transports, is been very, very weak. It has sealed its own gap. This was the Liberation Day gap. It's just sealed the day. We're just about exactly at the low for that day. So all of this has been pretty tidy. The reason that, let me put it this way, I might have said this, I should have said this in the intro. If the challenge were find bullish charts, find good long setups. This is a bull market, find good long setups. I am so sorry, but I can't. There's stocks that are going up. There's stocks like Duolingo that zip up 19, 20%. There are things getting squeezed. There are stocks that were trashed that are getting untrashed in a big hurry. There are plenty of spectacular rises going on. But in terms of honest to goodness, terrific setups that are well formed and defensible, no, I haven't seen any. Take this one, for example. This is the transports. Transports have been having a great time lately. Would you buy this? I wouldn't. Look at that. All it's done is undo all the damage. And now it's butted up against an amazingly large amount of overhead supply. It's not impossible that it'll get through it, but getting through this, pushing through a couple of days of drop is a cinch. Pushing through this massive ownership at these prices, not a cinch. It is like night and day. This is moving through air. This is moving through concrete. So don't mean to get emotional about this, but I really want to just pound the table on that point. Big distinction. EFA, highest point in history. Rather astonishing. So EFA, this is the basically world equities outside North America, blasting higher today by about 2%. But to the same point, as we look at the individual countries that are involved, you look at, say, FXI, close the gap today. You look at France, getting close to its own topping pattern. You look at Japan, getting close to this mass of overhead supply. It's the same story. They've had a terrific time. They have blasted higher for several weeks now in an astonishing turnaround. But it may turn out to be kind of like this was here. Rip higher and then down again. But the EFA is peculiar because it's where the bulls want it to be. Lifetime high, everybody's a winner. There's nothing holding it back. But weirdly, a lot of the countries that comprise it are at pretty horrible areas of all that mass above them, which make it tougher to go higher easily. Bonds are down about 1% in the face of the jobs report. Interest rates are going up. And so it'll be interesting to see how Powell handles this on Wednesday, because the market's definitely not liking bonds right now. Silver is behaving itself, because what happened here is that we had this price gap. This is how a gap should behave. We got blasting right up to it. We got maybe a penny away, hung around there for a day, and then down it goes. So that's how gaps can be useful in terms of recognizing sensible resistance areas, stop loss areas, and also good entry points. Over in crude oil land, this is behaving itself. This is down again. The front month's down about 1.6%. Here we can see that, except for yesterday's little kind of saber rattling bounce, very tiny, it has been slumping lower fairly consistently over the past couple of weeks. You can see this reflected in the USO, down 1.2%. The energy stocks themselves are showing some strength today. I would say the key resistance point here on the XOP is 119.36, which is a ways away. That's a few dollars away. So there's plenty of sunlight there that it could continue to push into. And then XLE is also up with the general push higher, but the resistance there is much closer, like so, that dashed line. I've got a couple of moments left. Let's just wrap up with a couple of quick items here. XLB, the material select sector, this gap is almost perfectly sealed. We're just about up to that diamond pattern. The dashed line is the gap. We are pennies away at this point. Unless we have a 10th, 11th, 12th, 13th update, this is a beautiful entry point. If the market keeps raging higher, okay, well, I guess we'll just blow right past it. But, this is kind of what I've been waiting for on this one. The gap is almost perfectly sealed in the midst of all this buying. Last chart is the DJ. This is the Dow Jones Futures. And just want to point out, and this is the case kind of across the board, both U.S. and abroad, we are right up against the base of a big top. It may not matter. Past couple of weeks have been up every day but one. So it may not matter, but I just do want to point out that a lot of people own at these levels, and it counts. So I'm looking forward to this weekend, but I will see you on Monday. Hope you're doing all right, and take care. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our Cherry on Top weekly recap. Bat, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do?
we have a party.
You have a party?
Have a party. Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Evian?
No. Hose water size enough, so I'm gonna tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you
like
put him in a tracksuit. Is that tracksuit? Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on
Sure.
the weekends, so I'll be good with the tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is
It's a
spot
pink
on.
sheet, yeah, like
The
a
disco
card.
ball, I can handle it. What I have a problem with is how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. Tom it looks like Tom. Like, that's Tom. I mean,
That's because I did this one.
right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about
They
that.
have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The
Yeah.
basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's the
great.
cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah,
Very
he's got the
good.
snowboard, the Chinese takeout, the dumbbell,
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
Was not me.
Okay.
It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and what the? This is not. This is. Gus did the Batistas, I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals, that's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys fly.
What's that? Wild turkeys do not fly.
Yes, Beth. I think you and
Did
me.
you call
I
me
think
a
this was
turkey?
more.
I didn't call you. I'm calling
No, I think
Scott.
Turkeys
it was
don't
me.
fly. They can get airborne for a second.
I called him a wild
fly.
turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
yeah,
taking
he
a
sees
hike
wild
in the
turkey.
woods, I've seen wild turkeys fly all over the place.
Mm-hmm.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live at the closing bell. Even the S&Ps, well, they're up just about 90. So I don't know if I'm going to round up by $1 or $2 here. NASDAQ up 324. Your leader of the clubhouse is actually the Russell up 45. That's a 2.25% move to about a 1.5% move to the other three indices. The Dow up 584. Volatility never percolated today at all. 2270 down $1.07 going into the weekend, giving a lot of legs to the bull market. Really no sell-off at all today. Bonds have been stuck at 115 after the I guess a great jobs report came out, better than anybody would have expected with the market doing what it's doing. Bitcoin up 300 and change, 87.5. Oil down $1. Gold up 14 to 32.36, kind of mid-range to the low end of its range. You can see it trade up to 32.77. But this was an equity market today, Sadnov, and an equity market to the upside. Just looking at the NASDAQ 100, you got
Meta up $25, Netflix up $23, Costco up $13, Amazon basically unchanged after earnings, down 16 cents, and Apple being a bucker, down $8 and change. Kind of weird on a day when everything went higher.
Can you imagine what they would have been up today if Apple was up?
Apple's really the only thing kind of holding it down. I mean,
Apple's
Netflix
the only red. I have no red on my screen other than Apple.
And you notice I didn't mention Microsoft for you. I was a good boy, up $10.
Yeah, I mean, at this point, I sucked it up this morning.
I know.
Yeah, I mean, I just adjusted Microsoft and kind of flattened it out in there. I mean, honestly, after they kind of goosed them up early, right? They were up, 60, 70, pretty much up 70. And then all of a sudden, midday, there was a little spurt up 90, and they've kind of sat here all day. I wouldn't say it was a great trading day. There wasn't any kind of two-sided action.
No, only a million one. You mean the S&P is trading relatively, kind of like what we had yesterday, on the lighter side for such a large move. 4 million Tesla options have traded, 2 million Apple, 3 million SPX. Better option volume, but really not a good futures trading day. I agree with you 100%.
Yeah, I mean, I didn't do much in the futures world. Oh, I shouldn't say that. I did a lot of bond trading today. I didn't actually. I take that back. I didn't trade bonds. I bought a lot of bonds.
You didn't do any good futures trading. Let's put it to you that way. There we go. I was just putting.
I didn't really lose anything on the bond options we sold were unchanged, and on the futures we're down tiny. We bought some at 15.15, and we bought some in the 14 handle. 14. I don't remember, 1430, I think, or 1431. But I said I was going to buy them if they get into the 14 handle, and they did.
Your 1424 is the low on the bond today.
Right, and I think I paid 1431. Yeah, I mean, the bonds I think are the most the bonds I think are the cheapest, best risk reward out there. I mean, after a move like this, I kind of feel like you're going to get, a couple of bucks. It's a good risk reward to buy some Apple here, but I'm not going to.
Oh, because it's a kind of a bucker to the day with a high correlation to the overall market.
Yeah, you might get, if you get any follow through in the market on Monday. Well, if the market goes down on Monday, Apple will go down. But on a day where they're up 90 on a Friday, they usually don't go down on Monday. But I'm kind of thinking
every event is random, but I get what your point is. We haven't had a downtick.
Well, I want to get
been
short.
Up huge since the lows. So, I mean, 1,000. I mean, 1,000.
I know. I want to get short, but what are you getting short? What do you sell here?
I don't think you do. I mean, like
I know,
why? I mean, we're up 1,000 points in a month.
I know. So assume you want to get short here, like me. What do you sell?
I mean,
I'm not short, so I want to get short right here.
Well, the biggest beast of them all is Netflix.
No.
No, it's not.
No. It's a beast, but Netflix is like kind of untradeable.
I did a defined risk trade in there. It's okay. I did both sides. It's
okay. Yeah,
it's a small winner. Unchanged, whatever.
Yeah. You can trade a few things and they're small. I agree, but I mean, if you want to put a position on to get short, I think you got to do something in SPX or spiders. But I'm not exactly. Yeah, I don't know which one to do. Usually,
SPX or spiders are exactly the same thing. One's just a little bit bigger than the other one. So enough. SPX, it's not like Thai food in Thailand and Taiwan. Those are completely different things. SPX and SPY are essentially the same exact thing, except SPY is a lot smaller, 10 times smaller than SPX, and SPX is cash settled.
Did you steal Vinny's geography book today? I mean, are you like?
I went through his books like crazy, Sosnoff.
I don't know what I'm gonna do. I gotta do something here on the close. I'm leaning.
Well, if you're gonna do anything, you do your call spreads. IB rank at 26 and SPY. I mean, IWM is the weakest of the group. The IB rank is the 27th. That's 27. They're all around the same IB rank. Qs are 28. There's a point in between all of them. Nothing. But IWM has been the weakest, and it's the strongest today. So if you want to play a little bit of something, you could do that.
If you wanted to play the expected move for June, it is
in IWM, or you go somewhere else?
No, in the S&Ps, it's 300 points. So if you go up to the expected move, it's it's right around 300 points. We're at 57.13. You go up to 60.25 to 60.50. Oof, not a lot of juice.
SPX.
Yeah, I know. There's not a lot of juice. $25 wide call spread at the expected move is 465.
$20 wide?
$25 wide.
Oh.
Well, yeah, it's about 20% of the width of the strikes.
Yeah, I mean, what should it be? Yeah, it's right there. That's what it's supposed to be.
At the expected move.
Yeah. Yeah.
Ooh, boy. All right, well, I'm going to put some orders in, but I need a little rally here.
More than 90 handles and
yes,
being
please.
10 handles off of the highs. You need more.
I need more. Thank you.
100 handles ago, you said that's the area I've been waiting for and looking to get short. You didn't do anything because you respect the bull, and I respect you for respecting that. But that's what you said. Now we're 100 handles above that. Now you're starting to piss me off. Okay?
All right, well, I'm going to put my order
now
in.
you're starting to make me mad.
I'm going to put my order in right now.
Mm-hmm.
I'll see. I just lowered my price. I lowered my target.
Oh, good for you. Good for you.
So I'd like to get a little stuff off, maybe a little higher in here. I sold some S&Ps when they were up over 100, but I covered those.
Yes, you did. Yes, you did. You made a little scalpy. I think another scalpy out there that needs a little help.
I need a lot of help.
So my Taiwanese sources say you let me just get this straight. You need a rally to sell some calls after 9 days up in a row?
Is it 9? Let's see. Is it 9 in the S&Ps?
I mean, if you're looking at ES, it's 1, 2, 3, 4, 5, 6, 7, 8, 9. I count 9. How many you count?
I count 9. No.
Nine.
I count 9.
But oh my God, did I bait you into doing it?
No, not yet. No. That's just an adjustment. No. I'm offering.
It's just
above.
an adjustment. Selling futures is an adjustment now.
No. I'm offering my call spreads are above.
I got it. The futures are obviously at the offer.
Yeah. Those are nothing. Those are crappy trades. Can't hold futures anyway. It's way easier to hold call spreads.
Yes, I agree. That's why I said do the call spreads.
Yeah. Well, they just sold off. I missed them by that much.
They just sold off 2 handles. You gotta, act like you've been here before.
I'm saying they just sold off. I was offering about 10 handles higher. I should have sold them when they were up 100 earlier, but I missed them.
You're embarrassing me. So you missed them up 100 handles. Up 90 handles is a miss?
Yes, sir. But here's the thing. They sold them off so hard on the close yesterday that I kind of felt like...
Don't say it, that they're going to kind of bid them up today.
That's what I was hoping for. That's why I was holding off.
Yeah. I mean, when was the last time you were right?
I guess it was a long time ago. I was 6 for 6 on earnings last night. I just want to go on record. I was 6 for 6. And
you don't get the credit you receive, Sazno.
I think we've only had one losing earnings trade, which was
Microsoft.
Microsoft.
Mm-hmm.
Yeah, and today was the day today was one of those weird days where you really wanted to wait because everything came back. Airbnb came back, Roku came back. They all came back.
Yes, they did. Roku is weird in after hours, man. Roku down $6 now. Roku, not Roku. I mean Reddit. Reddit was weird in after hours.
Reddit was weird yesterday. It was weird today.
And it down $4.50 after being up $9 or so. I mean, Reddit traded all the way up to
it traded 140 last night.
Yeah, about
I know, but last night it traded 140.
40, right?
Crazy.
Yeah.
I was watching it.
I know you were.
A lot of people bought stock up there. I could tell they were just buying stock, trying to hedge their losses, and it was like, oh my god, got double whammied. All right, let's take a quick look through the watch list and see if there's anything else that jumps off the screen at us here today.
Have you gone through your watch list and tried to get rid of anything with, a relatively low implied volatility?
Not today. I don't know why, but not today. Kind of had a lot of other stuff going on, and not today. There are.
Do you have a Nike position? It's up $1.80. Nike's had a decent run the last 3 days, going from a low of around 53 or so to up to 58. I mean, if you sold some puts, it's probably time to go.
Nike. Yes, we definitely are long Nike.
I mean, if you're looking to do things to take off Delta, I mean, I know Nike's on its butt, still has a good IV rank of 37, but I closed my puts today.
Did you? I'm short the 52.5 puts, the 57 puts, and I'm short the 57, 52.5, and 50 puts in there.
To take off one of them. Take off the lower strike.
No, I'm gonna let him go.
Okay, all right, tough guy. I you know what? I don't hope this, because there's probably other people that are long Nike that needed to go higher. But I wouldn't mind if the market was significantly higher on Monday and Nike was down $5. If there's a guide you could listen to me, that'd be great.
I'm gonna hold it.
I'm gonna hold it. Good idea. No. Everybody with a good idea could stand up. Bat, no need to stand up. You're good. Yes, everybody, go ahead.
I'm gonna hold it. Damn. Can't believe they're going to sell off here in the face of this crappy.
Well, you put the kibosh on. You put the kibosh on it right away when you said, which is a random event, by the way. They sold off yesterday, and a couple of, 1.5 million E-mini S&Ps have probably traded from yesterday's close till now. And you say that today's event is going to be up because yesterday's was lower. It's a silly statement.
Well, I'm still hoping. So that's what I'm betting on. I'm still hoping.
You can hope as much as you like.
All right, let's see what else. Next week, what do you think here? I don't know if are most of the earnings done now?
Yeah, I mean, you still got a few, I'm sure, but all the big names are pretty much done. I'm sure there'll be some stocks that you like to trade or you have positions in. I can look right now for you and let you know if you want me to. What's coming out? We've got Palantir will be coming out next week. SMCI, AMD, Uber, Shop is one that always you like to participate in. Firm, your beloved Bob will be coming out the week after that. So that's about it for that you have positions in.
Yeah, that's a lot of stocks.
Yeah, that's a lot of stocks to left here. Oh, look, Saz, even the S&P is back up 10 handles to 86, right where you needed them.
No, 97. I need a rally. I need my prognosis rally on the close to be correct, and then let them have it. Do we whack them and how?
Mm-hmm.
Don't forget we have a show.
Good.
I was going to say, don't forget we have a show Sunday night. It starts at 4:55. It's myself and Victor Jones along with Pete and Ilya, and we'll talk about the markets opening up and giving you kind of a Sunday night glimpse into what's setting up for the week. Although it's never easy, but so today, big purchase today were bonds. We're back on the long side. Bought some in the right around 15. Sold a lot of puts. We're back on the long side of bonds. That was probably the big purchase of the day.
Mm-hmm.
Other than that, in commodity world, oh boy, nothing much. We're still short gold. Came down a little bit off its high. It was up 50 this morning. It's up 18 right now. So we're still short gold. And then that's pretty much the extent of everything.
Saj, you got a Tesla position? They just killed premium in there. I sold a strangle on Thursday. It's only Friday. It's in by $1, sound enough. And I was all the way out in the 15 Delta handle. So if you got a Tesla position, you should probably take a look at that.
I do. And it's
Tesla IV rank is still good at 32, but you can see how it's come down here. I mean, I sold a strangle at 9:30 or something like that. It's 8:30 today.
I made $1 on my strangle.
Well, there you go. All right. Well.
Yep. But I'm going to keep it.
Of course you are. Of course, because that's how you are today. You're not playing nice today. I get it.
I'm going to keep it because the IV rank's still 31, and I need some short premium and some liquid stocks. So I'm going to keep it.
Got it. I got it.
All right. Looking around. So my recap of today. Pretty much since we opened till we closed, it's not much there. All the currencies were higher, crude oil lower, bonds lower. That was the scoop of the day, I hope. Natural gas significantly higher. Let's take a look at this.
Yeah, it's really going to ruin summer for my pool.
Oh, don't chintz out on everybody.
Saz, if I have a pool party, will you come? Will you come to it? Like
no.
Nat gas 3.658 Sadnoff. It looked like it was going to flirt with going under $3 just a few days ago. Sadnoff, about 6 of them.
Why
it's a big
would
move
you
in
want
Nat gas? Good IV rank is 67.
Why would you want to have a pool party? I mean, let's look at us. Nobody wants to see you in a bathing suit or even like a bathrobe. All right. Nobody wants to see me.
What about a nice like Komodo or something like that? Like, what about something like that? Some big sleeves or something like that? What about that?
You had a pool party at our age, you should have it at night.
The lights are too bright. You'll still be able to see. Even the S&P's up 92. So you're going to get.
I'm telling you right now, you should have it at night, and after alcohol or whatever. I don't know, but no, I don't think you should have a pool party.
Okay, fair enough. You make a good point. I can't. I can't say anything against it. You're right.
You really want to make Vinny want to throw up, have a pool party with your friends. And then tell him to invite his friends. It'll be the biggest nightmare evening of the, they'll be like, oh my God, who are these people?
Yeah. You're right about that.
Oh, no question about it. Anyway, all right, I got to get something off here on the close because I got a feeling next week I'm going to make my call. Oof, I don't love this call. Wednesday to Friday, a little bit lower.
So you're saying the Bulls still has a little bit more to go after 9 up days in a row?
The Bulls are going to be in trouble.
1,000 handles on the E-mini S&Ps.
I think the Bulls are going to be a little bit of trouble starting maybe early next week, but then they rally back because after this rally, they're not going straight down. They're going to be up here. They're going to strengthen. But a lot of good news is out. I mean, what's the only bad earnings play? Is it Apple? That's it, really.
Yeah, that's it, really. Yeah.
So you've got, you essentially have every single stock, that where nobody got hurt on earnings. Nobody.
Yes, that's true.
Of all the big names, nobody got hurt except Apple, and Apple's down what? Where's Apple trading?
$7-8, $6.
So it went down 4%. Big freaking deal.
Yeah, just under 4%. Yes, you are right. Yeah,
that's it. I mean, that I think that any sell-off is going to be a pretty. It's going to be pretty resilient, and they're going to bounce right back. And I don't think they're going anywhere to the downside. I think you're going to need one or two like false sell-offs, and then they'll hit them a little bit. But I think we're poised here for a pretty decent sell-off. Get a little maybe 100, 200 points lower. Get a little vol back. When everybody gets comfortable, that's when they hit them.
Well, to that point. Next week's expected move is going to be nowhere near the 150 or so that it was, or 160 of this week. It's going to be closer to 100, 110, something like that, especially with volatility. If we don't do anything silly on Monday to go down, right out of the chute with Ivy rank with implied volatility.
Isn't next week the big Fed number or something next week? I think it's the big Fed thing. I think they're coming out with their interest rate decisions.
A big Fed thing?
I don't know. I thought that's what somebody said. I don't pay attention to it.
FOMC meeting on Wednesday and jobless claims on Thursday.
There you go. There's your big Fed meeting.
There's your big Fed meeting. Yeah. While you and Dylan are talking, I'll have the FOMC meeting.
We usually overshadow the FOMC meeting. Pretty good.
Yeah, the FOMC meeting, they're really pissed that you do it at the same time. It takes a lot of eyes off of them. My big question is, you think Ilya's still comfortably short?
Oh, don't kick a man when he's down, okay?
No. Just the comfortably part is the part that got me. That's the part that got me. I've been wrong a million times in my trading
career. He's more comfortable today than he was 2 days ago.
More comfortable today than he was yesterday. Makes a good point. Because everything looks like it's inflationary. I got it. Mm-hmm.
Yeah.
Understand.
Now, I think today's rally was probably. I just feel like this is this is a good excuse. A little blow off.
This is a blow off?
A little bit. Yeah. Today's rally, a little blow off.
I mean,
never had a downtick.
Don't you, maybe things were a little overdone?
Oh yeah, things were overdone, but now maybe they're a little overdone the other way. No,
we're not overdone yet, Saznoff. We're going to take a little bit of a downtick, and you might even see it on Monday, Saznoff. I think people get a little too complacent here to the upside.
Yeah,
you might even see.
Yeah, I agree.
Okay.
I don't think they're going anywhere to the downside. I told you earlier.
I don't think they're going anywhere to the downside. I think you'll get a couple, like you said, a little bit of false moves to the downside, but you'll get 30, 40 handles or something like that to be able to pick up, I think, come Monday.
30, 40 handles. I like it. That means
a guy like you, that'll get you right back to even.
Guy like me. I'm going to put offers in right now.
Who are you betting on for the Derby now that your horse is out? So I know who to root for.
Oh, that was too easy. Who do I root for? I got to root for Sandman.
Sandman? Okay.
Yeah.
All right.
Actually, I'm going to listen to Eddie Olczyk this afternoon. He's on the radio, I think, at like 5 o'clock tonight. I'm going to listen to Eddie Olczyk because he's my guy. And whoever Eddie Olczyk likes, that's who I'm going with.
Well, there's some words of wisdom. Remember, never follow anybody's trades. Always do your own thing. But if you're going to bet on the Derby, go with Eddie Olczyk. We're going to take a quick 90-second break and come back. We got more Tasty Live.
Never fade Eddie Olczyk when it comes to horses.
We're going to take a quick 90.
Do you know he's the only hockey play-by-play guy that also does the Kentucky Derby? In the history,
I would think there are not many. If there was more than one, I would be surprised.
He's the only play-by-play hockey guy that also does the Kentucky Derby.
Do you know Mike Nort's the only softball playing guy who does the Derby?
I don't think Mike does the Derby. Nice try.
We're gonna take a quick 90-second. Mike bets on everything. He'll bet on you. We're gonna take a quick 90-second break and come back.
You going to get dinner? You going out to dinner tonight?
Are you going to come rob my house or something like that? You never ask me what I'm doing on a Friday night. You need a babysitter or a dog sitter or something? Why are you asking me?
Because somebody told me you were going to get Taiwanese food. I was just on to check.
Oh, you made a joke. I'm going to let you get the last word. That was really good. We're going to take a quick 90-second break and come back. I'm going to do that for Mother's Day. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We're having actually Thai food at Punta Gorda right there in Grenada. We're going to take a quick 90-second break and come back. We got more Tasty Live with Tom and Friends on Sunday. Peace.